November 26th.
Welcome back to Squawk Box. Ahead of its Investor Day, Delta Airlines affirming its fourth quarter guidance. Phil LeBeau joins us now at the table with a very special guest.
Ed Bastian, CEO of Delta, and you guys are going to be laying this out for investors later today, but we got a preview yesterday, and you just made the announcement a few minutes ago. The release went out. You're looking at, over the next 3 years, some sustained, durable, higher profits on a regular basis. How do you get there?
Well, the themes
you think so, huh?
Investor Day today are two. They're differentiation, Delta's continued investment in the quality of the service, the reliability of the service, the experience, and durability, so that investors know what they can count on. And we'll get back to those later. But when you think about that, one of the big risks that this industry has always faced is that there has never been an airline that can truly say it's financially durable.
Well, and you know that that's the knock. We talk with people on Wall Street, they say, yeah, these airlines go through a period where they're really good trading stocks. Yep. Stay away from them as long-term investment. You know that. Warren Buffett has said that for years. Why should people believe it's different now?
Well, when you look at what progress we've made over the last 15 years, the investment in quality, the investment in service levels,
this guy's
the investment in not just the experience for customers, but actually
UAL's up
for
pretty
owners,
good though.
The free cash that we're throwing off, that's what's different. We're projecting over the next 3 to 5 years that we're going to generate $50 billion of operating cash over that period of time. 50% of that's going to go back into the product, $25 billion over that period.
Yeah.
The other $25 billion is going to get a balance sheet that's pristine, that is going to be a fortress balance sheet with potentially on the back end of that excess cash that we could potentially use for our shareholders if we needed to.
This has been a challenging year, whether it's the excess capacity in the industry, which has been weighing on everybody's results, your results in the first half of the year. There was the CrowdStrike situation, outage, and the lawsuit. What have you learned the most from all of this year?
Well, it's about resiliency and durability. One of the things that I'm most impressed with as we close the year, we're closing the year strong, is that despite all those things, our profits year over year continue to lead the industry. They're relatively flat on a year over year basis, anticipating some pretty significant growth going into the new year. And the overall experience that our customers are feeling are saying that Delta is the premium brand in the industry, and they're continuing to fly Delta.
Hey, Ed, can you just shed a little light on the consumer? Because we heard from Target just a little bit ago, and their numbers were far below what the street was expecting. Part of that was higher cost, but part of it was also them saying that they are seeing a consumer that is still on a budget, that is still very choosy about what they're going to spend on. Discretionary was a big issue for that. And Walmart, even though they had really strong numbers yesterday, did say
finally someone with some sense.
Discretionary spending, they are seeing a consumer that is still pretty choicey, pretty concerned about cost.
Get him on here and then bash him.
Consumer is defined as households with $100,000 or more of annual earnings. That's 40% of the households in our country.
I disagree.
Just in the last 12 months has accumulated an incremental $10 trillion of wealth.
I'll walk up the block and ask if 40% of the people would fly.
40% since the pandemic.
I guarantee I'd get a different answer than what you're saying.
That's the consumer that we're targeting. That's the consumer that's flying today. It's over 90% of the revenue base that's generated at Delta. And their number one priority for spending is not going to Target, it's not going to Walmart, it's going someplace. It's the experience economy. The experience economy continues to be really strong, and whether that's internationally, whether that's for business, whether that's for trying to continue to find new places and new experiences to bring their friends on, that's what we're leaning into, and we see no end in sight for that.
But on the lower end, Spirit is in bankruptcy. Frontier is trying to pivot to a bit, to go a little more upscale. But the low-cost business model for airlines, is it dead for good, in your opinion?
Well, it's challenged right now. And one of the reasons it's challenged is that airlines like Delta have products also catering to fares that are for price-sensitive levels, not a significant part of our inventory. And consumers are choosing Delta for the value that we create.
But doesn't that create an opportunity in that market right there? I mean, that's not your concern because your market is the over 100,000. I want the premium experience. I want the Delta brand. I'm going to pay up. There's a lot of people under 100,000 in the U.S.
And there's no question that there was more capacity chasing that segment of the market than was necessary. And we saw it this summer. And so you see every airline that's in that segment is cutting back. And whether it's through bankruptcy or court order or Southwest making their changes, that whole half of the segment, that's not our target. that segment is under a lot of duress, and it'll get restructured and sorted out, but it's gonna take some time.
How do you feel about what you're seeing at Boeing right now?
Well, we're waiting for the news on the MAX 10. I think it's going to be some time before we hear about that.
Does Kelly Ortberg at some point need to say, here's my plan? Aside from what he has said so far, which has been, we will get back to blocking and tackling and building the airplanes the correct way, does he need to put out some concrete measurements in terms of what we expect to do in the next few years?
I think he's doing that. I think he's spending time with his big customers in that regard, letting them know, keeping them posted, which I appreciate. Right now, we're an Airbus customer.
Wow. Airbus customer, that hurts, but what are you gonna do?
Well, if we have been tied to Boeing,
I know.
I mean, we
I have maybe a broader philosophical question. Do you think that we should have had more competition for major airline manufacturers in the U.S.? Would have that created a different dynamic? That's
Hard to
some
build those things.
They talked about, I mean, we sort of got into this sort of us versus them situation. I don't know if that advantaged us in the end, or if actually it created some of these problems because there really was only one competitor. I don't know.
Well, there's no question we prefer more options and more competition, and I think that lack of competition was one of the reasons why when the final story on Boeing is told, that caused a lot of the being on their back heels,
Right.
somewhat. At the same time, the cost to building these enterprises, these planes, the investment that's required, the cost for the airlines to take a third product in is massive. The amount of new pilots you have
You
to
still
train.
fly Canadair, don't you, and some Embraer and stuff like that?
We have Embraers, but that's in our regional
That's what I mean, so,
space,
but
but they're not, and if they moved into the
great
mainline
jets.
space, it's a significant.
Woo, God!
Citations?
What the fuck?
That's it, wheels up, but this is a long cycle, highly capital intensive business. And we need Boeing to get fixed. There's not an option there. And, you know, Kelly's on the case, and glad to see him there. But it's gonna take a long time before they get anywhere back to where they were.
Ed, can you talk a little bit about CrowdStrike and where
Target.
The legal action that you are seeking from them? I think it's $500 million you're seeking because you felt like you were really left hanging out to dry on these
Absolutely.
big issues too. Where does that stand? Have you been in talks with CrowdStrike? Or?
Well, we filed litigation several weeks ago, and it's in the lawyer's hands right now. And they apologized. They said they were sorry, but candidly, that doesn't do a lot to the hundreds of thousands of people that were impacted in our business, our people as well as our customers.
Have they reached out for potential settlement talks yet?
We had conversations, but when you get into the scale of how we were impacted, unfortunately, the lawyers jumped in pretty quickly.
Ed, it's good to have you here.
Yeah, I'm excited.
Big investor day. Hey, guess who turns 100 next year? Not Ed himself. Not Ed himself.
No, he looks great.
Delta.
We turn 100, and we're going to be launching our 100th year as the keynote for the Consumer Electronics Show in Vegas, first week in January, and I'm doing it from the Sphere.
That is crazy
Wow.
to think of an airline being
Congratulations. That's awesome.
100 years old.
Really is.
First U.S. airline to turn 100.
Wow.
That we've been flying for that long too.
Yeah, it's
And they have a flight attendant who was hired by Howard Hughes.
Really?
I was told that yesterday. Is this true?
I just last week gave her 65th anniversary pin
Wow.
with Delta.
That's cool.
The oldest, the first person we've had that with 65 years of service. It was really cool.
Well, time flies when you're having fun.
Yeah.
It's a wonderful industry. We're gonna have a great holiday period. The advanced bookings look really, really strong, and we're gonna have a good day today with our investors.
Great. Good luck.
Thank you.
Thanks,
Appreciate
Ed.
it.
Thanks, Phil.
It is just past 7 a.m., about 7:03 right now on the East Coast. You're watching Squawk Box on CNBC. I'm Andrew Ross Sorkin along with Joe Kernan and Becky Quick. Among the stories that we're watching this morning, multiple reports now saying that President-elect Trump set to meet with former Federal Reserve Governor Kevin Warsh and Apollo Global CEO Mark Rowan today. The FT reporting that Rowan has emerged as the top contender. Axios says Trump is looking more seriously at Senator Bill Hagerty. Meantime, SpaceX conducted the 6th major test launch of its Starship system yesterday, aborted a highly anticipated booster catch attempt, but the mission achieved new milestones in its hour-long flight. Starship successfully igniting one of its Raptor engines in space, and it made a safe landing in the Indian Ocean and remained intact. Meantime, our parent company Comcast expected to announce the spin-off of its cable networks including the one you're watching right now today. Sources telling us that Comcast will retain ownership of Bravo, NBC Broadcast Networks, and the Peacock streaming service. Spin-off expected to take roughly a year to complete. We'll have a lot more on this later this hour.
All right, let's take a look at the futures once again this morning. You will see they've picked up a little bit. Dow futures now indicated up by about 77 points. S&P futures up by 7. The NASDAQ up by 36. Let's get over to Contessa Brewer. She's got a look at this morning's pre-market movers. Contessa, good morning.
Becky, good morning to you. Let's start off with shares of Target. Boy, are we seeing a lot of action here. Those shares have just plummeted after Target reported earnings that missed revenue and profit expectations for the third quarter. Target lowered fourth quarter and full year earnings guidance. CEO Brian Cornell said lingering softness in discretionary categories was to blame, along with pricing pressures like the port strike that hampered retail giants third quarter. You're seeing those shares off by 18%, and that has now erased the stock's year-to-date gains. We'll continue to keep our eye on that. But Target is also dragging down other retailers this morning. We're seeing Macy's down about 1.5%. You've got Dollar Tree off by 3.5%, Kohl's off 1.5%, and Nordstrom as well. So the whole retail bucket hurt by what Target had to say this morning. Netflix reaching fresh all-time highs. It says 108 million people worldwide viewed that boxing match between Jake Paul and Mike Tyson last weekend. The shares are up almost 1% in the pre-market, but for Netflix, it was the most streamed sporting event ever. Look, there were issues during the fight, right? More than 95,000 people reported outages on Down Detector at the peak. I had problems too. It was glitchy, it was frozen. But Pivotal analysts gave it an upgrade, raised their price target to $175. They raised the price target by $175 now to a street high $1,100. Again, those shares are up. We'll continue to watch through the day. Rounding out with Bitcoin maintaining above 93,000. It hit a new high yesterday afternoon, in part due to the listing of Bitcoin ETF options on the NASDAQ, as Mackenzie Sagalas reported earlier on Squawk. But a Trump trade just hasn't lost steam there either. Those shares up about, or Bitcoin up about 0.75%. Since Election Day, the president-elect has proposed a national crypto stockpile, of course. Trump media is in talks to buy crypto platform backed, so we're keeping our eye on Bitcoin throughout the day here, Becky.
Yeah, up 35% since that election results.
Unbelievable.
It is. Contessa, thank you. It's great to see you.
And coming up, we're going to have a deep dive into the president-elect's picks for roles in his administration. And then Taylor Swift joining the Chiefs, partnering up for a holiday movie. We're going to talk about that, NFL valuations, and the State of the League with the Kansas City Chiefs President Mark Donovan. We'll be right back.
guarantee.
Welcome back to Squawk Box. Another round of picks unveiled for President-elect Trump's second term. This including Trump-Van's 2025 transition team co-chair Howard Lutnick as Commerce Secretary, Linda McMahon, the transition team's other co-chair, tapped now for the Education Secretary Department he's vowed to undo, and then Dr. Mehmet Maz as CMS Administrator. Still no pick for the Treasury Secretary, but joining us right now for all the latest, Liz Hoffman, Semaphor's business and finance editor, joining us right now. We can go through some of those names in a moment, but let's go to the Treasury Secretary sort of bake-off that's taking place down at Mar-a-Lago today and yesterday. What do you think the handicap is here between Kevin Warsh, between Mark Rowan, who's now emerged? I don't know if you think Bessent is even still in this. I imagine he may be. I don't know if there's another name you want to add to this, Haggerty.
Those are the names. Basically, I would say I think Scott Bessent's very much still in this. Look, understanding that this could all change by the time we get off the air. My sense is that Scott Bessent, Kevin Warsh, very serious candidates. Mark Rowan, as you say, has kind of, I would say, come up on the outside lane. But we reported a couple weeks ago has been in the transition team's sights and on their minds for a couple of weeks now. And I would say Bill Haggerty is a dark horse, but still very much in it. Other names you hear thrown around, but probably for slightly different positions, perhaps Kevin Hassett. But these are names that have been in the mix. They haven't actually changed all that much, with the exception of Howard Lutnick having dropped off and gotten Commerce.
What do you think the implications would be for Apollo? And I ask because it's obviously one of the biggest private equity credit firms in the country. It's a publicly traded firm, and Mark Rowan has been a real boon to that business when he returned and came back and has really almost remade that company.
Yeah, I couldn't agree more. I mean, most CEOs, when their names get floated for things like this, they say, I have the best job in America, I couldn't imagine it. Almost none of them mean it. It's possible he would. I will say he was asked in February whether he would go into administration, and he said yes if asked. But I actually genuinely do think he thinks he has the best job in the world. And if you've listened to him talk lately, they sound like they really think they are on the edge of kind of cracking a new financial system over at Apollo, talking a lot about fixed income replacement, playing for a much larger pool of assets than have been available for alternative asset managers in the past. So that's a really interesting question. I don't know.
We're also, by the way, I don't know if it's up on the screen, it's up on our screen, Trump Media, DJT, which is now at $30 a share. Do you have a view about why that's moving the way it is? It's down just a little bit now, but I mean, it's obviously crept up in a big way. Some people talking about it getting into crypto. I've heard speculation, by the way, I don't know if you even buy this idea that at some point Elon Musk would want to buy it, merge it with X. I don't know, Liz, do you want to comment on this?
That's certainly floating around. I have no real reporting. I mean, look, it had a bunch of moves the other day on the crypto stuff. It could be some of that coming off. But I think the thing you have to keep your eye on with this company is that it is a huge source of Donald Trump's wealth. It's a public company. It's for sale every day. And I think you have to think about, people who might want to curry favor with the administration just coming in with a giant offer on that. It's a very strange situation.
You mean somebody coming in to just buy? You think that the premium that's in this stock is just somebody who is a benefactor, a Trump benefactor, who would want to come in and just buy the asset? Or do you think that American corporations or even foreign corporations are going to want to advertise on the platform or transact with the platform in some other way?
I'm not sure there's a particular takeover premium baked into it now. I think this is mostly political fervor and retail enthusiasm. But most sitting presidents don't have an asset that anyone can say publicly that they would like to buy for a giant markup and then actually go do it. So I think it'll just be a really interesting thing to watch. It's been kind of a heartbeat of the campaign and really of Donald Trump's fortunes. You saw it move around some of his trials. So it's something we've never seen before. I can't really explain the move today, except perhaps
a vanity buy of over $7 billion is not everyone can decide to do that for. And I don't think anyone thinks it's a great investment, right?
Elon did a vanity buy of 40-something billion a couple of years ago.
I know,
I think,
but that's the richest guy in the world. The richest guy in the world did that.
Liz, what do you make of the Howard Lutnick move? and what's happened behind the scenes there. And then also, by the way, he's been running a big company in Karen Fitzgerald.
Yeah, look, it's no secret that Howard Lutnick wanted Treasury, and that has been sort of a behind-the-scenes race that has really captivated Wall Street over the last couple of weeks. We'd reported that Scott Bessent's investment returns had been sort of anonymously and frankly pretty cherry-picked version of them sent around a couple of days ago. I mean, this was a real behind-the-scenes campaign. Look, so obviously he didn't get it. I will say commerce is not the hall closet of government that it used to be. Gina Raimondo really made that a serious cabinet job with a lot of interesting responsibilities. It's going to be at the front of a lot of the industrial policy, tariffs, of course. That's the other thing here that, I think one of the reasons this has perhaps taken so long is that Donald Trump, as far as I can tell in my reporting, really wants two things. He is very serious about tariffs. We should take him fairly on his face when he talks about those. And he also really wants the stock market to go up. He wants to announce a pick for Treasury that will make the markets go up. And finding someone that which means, has to be someone that institutional investors really respect. And finding someone who checks both of those boxes, I think is tough.
Well, Liz, that's what I was going to ask. Is there a good cop, bad cop situation potentially at hand, which is to say you have a Treasury Secretary who may fit the sort of mold of what you think the markets may like and may say things that the market likes, but actually that the Commerce Secretary might ultimately work on the tariffs and those projects, and maybe that's something that the Treasury Secretary doesn't have to like, but you have this sort of dual setup as opposed to putting all of the power, or at least the voice, in one individual.
It certainly could be. The other job I'd add there is the NEC director, right? It sits in the White House, a little more domestic policy focused. But again, if you're Treasury Secretary, you're going to be traveling the world, you're going to be meeting with, all these G7, G8, G20 leaders, and you're going to have to defend these policies. So I think it'd be pretty tough to have a Treasury Secretary who doesn't like them.
Liz, it's great to see you this morning. Appreciate it. Thank you.
Thanks, guys.
All right, up next, the Kansas City Chiefs and Taylor Swift partnering up for a new holiday movie. We're going to talk about that, team valuations, and the state of the NFL. That's next. And then Comcast expected to announce the spinoff of NBC's cable networks, including CNBC and MSNBC. Media analyst Rich Greenfield joins us after this quick break. Squawk Box will be right back.
Time now for today's Aflac trivia question. In the U.S. Postal Code System, what does the acronym ZIP stand for? The answer when Squawk Box returns. Restrictions apply. And now the answer to today's Aflac trivia question. In the U.S. Postal Code system, what does the acronym ZIP stand for? The answer, Zone Improvement Plan. The zip code system was first introduced in 1963.
Kansas City Chiefs partnering with Hallmark for a holiday movie this year, capitalizing on their new Taylor Swift fan base. Joining us now, I can't believe I'm reading this. Mark Donovan is the president of the Kansas City Chiefs. So your Taylor Swift fan base for the Kansas City Chiefs. Did you know this 2-3 years ago? You predicted this? Did you
Not
write
on
this?
the bingo card.
I'd love to say that it was a marketing strategy, but it is an authentic relationship, and we're happy to have it, and it's been nothing but good for us. I think the best thing I can say about the whole relationship and what it's had, the impact it's had on us, is Taylor Swift is an authentic member of the Kansas City Chiefs kingdom. She's an authentic fan, and that matters to our fans and our fan base, and it matters to us, and we've tried to respect that.
Well, having Mahomes probably was pretty good as well, and you know, Kelsey, not chopped liver either at this point, and the coach is like a TV star, and he's pretty good. He's pretty good. See where he goes after those. Give me the nuggets.
The nuggets, the nuggies.
Give me those nuggies. Yeah, exactly.
Yeah.
So I don't know. I don't know. There's only one way for you to go from here, and that's down. From what I can tell, is it? What are a couple of years?
Our goal is to consistently compete for championships.
Well, how many do you want to win in a row?
As many as we possibly can.
As many as you possibly can.
I mean, look, we're on the verge. We have the opportunity to make history. And we've made a lot of history in our franchise over the last decade. We have the opportunity to do something that's never been done in the National Football League. And I would say this about our team, and it's led by Andy Reid, it's led by our general manager, Brett Veach, and obviously the direction of Clark Hunt, our CEO. But first day of training camp, it was about the opportunity. It was about we're on a stage here that we earned because we won the first 2 in a row, and now we got to go take advantage of this. So it's very positive the way we're looking at this opportunity.
You want to talk about the movie?
I do.
Yep.
I'm kind of excited about this movie. I think you guys are going to lend some real cachet to Hallmark too with what this is. How did this come about?
Yeah, it's a really interesting story. So Kansas City is a special town, special place, and the Hall family, who started Hallmark, are a bastion of our community. So we actually went into last playoffs and said, our CMO, Laura Krug, came up with the idea and her team of, could we somehow own the playoffs?
So you guys are the ones who came up
We
with
did.
the idea.
So we did this promo. It was a fake movie promo, and we did it sort of honoring Hallmark. They didn't know anything about it. We didn't talk to them
You
about
didn't
it.
tell them about it.
We just
Yes.
did it.
And what'd they think of it?
We got a call a couple weeks later saying we should talk. and I joked with Laura after the promo that, you know, there's a chance that we could actually make a real movie here. And now November 30th, Holiday Touchdown, a Chiefs love story, will premiere on Hallmark Channel, and it gives us the opportunity to, as you said, expand our fan base, and they can expand theirs as well.
Is it seriously ripped from the headlines like all of the Dick Wolf things used to be, or is this just using it as a vehicle for telling a different story?
Yeah, if you looked at the promo from last year, which was Falling for Football, that was a different story. It's about fans. This one is a different version of that story, and it's really about fans. It's about fandom. It's about the unification of our fan base. And it does it in a very Hallmark-like way, celebrating the holidays. And it's a perfect combination of entertainment, pop culture, the power of the NFL, the power of our superstars. I mean, you got a Hallmark movie that has Donna Kelsey, Andy Reid, 4 of our active players.
So that's what I was going to ask you about the budget for this film, because Hallmark has, one of the reasons it's done so well is it's actually typically limited the budget of its films. How did that work in this context?
Yeah, it's an interesting model for us. It was different for them. It was different for us. We worked with Skydance Sports, who has a partnership with the NFL, to make sure that we could distribute it correctly. And I think we all sort of had to expand our envelopes a little bit
Right.
in how we do this. But it gives us this amazing opportunity. And if you talk to the Hallmark folks today, it's put them in a different place, you know, in terms of advertisers looking at this product on their station versus the typical Hallmark holiday movie.
Is there any blowback to Taylor Swift endorsing Kamala Harris for president? Did that change the relationship at all?
Not that we felt. I mean, you think about an NFL franchise and an NFL family, any team, you're going to have opinions on every end of the spectrum.
Yeah.
And we have that in our locker room.
Yeah, as we have seen.
Yeah, so one of the things we talk about, and Andy Reid leads this, and it's a cultural thing, is we're going to respect each other. We can have different opinions. We come from different backgrounds. We have different beliefs, but we're going to respect each other. And that's how we're going to go forward. And, you know, these same guys are fighting side by side on Sunday afternoon for the ultimate goal of winning a game. So you have to have that culture and that respect and that support.
I just can't even imagine the increase in value of your franchise in the last couple of years. Kansas City, I love the town jazz and barbecue and everything else, but it's not a New York market in terms of valuation. But are you up near the top now after 3 straight Super Bowls?
Yeah, we're pretty proud of the run we've been on. We talked about it back in 2009 and 10. You know, we were 4-12 and 2-14 and not real successful as a football team and frankly, okay as a business operation. And we talked about preparing for success. So on the business side, it was how do we prepare and get ready for when this team actually excels on the field. And it's great to sit here and talk about it now because the strategy worked. When Andy came in, when we turned this thing around with Alex Smith and then with Patrick and then with Kelsey and Chris Jones, and the success we've had has been exponential growth on the business side because we were ready for it. We prepared for that. And now we're at the point of trying to maximize this special time we're in. When we think about this, we're on Squawk Box talking about a Hallmark movie that's going to premiere on November 30th. We've been in 4 of the last 5 Super Bowls. We got to take advantage of this opportunity, and that's what we're doing.
Well, that's what I was going to ask, though. Do you look at these things as cycles? You talked about this sort of special moment.
Yeah.
And how you actually keep the special moment going, right?
Yep.
Joe was mentioning, you know, like there's only one way. There's only one way from here, which is down. You know,
Yeah.
you get to the top of the mountain, you got to ski down at some point. And so how do you even think about that? How do you think about that in terms of valuations? Because we were just showing a whole number of teams, by the way, with great valuations, some of whom had their special moments, by the way, years ago.
Yeah.
And then they have to actually rebuild themselves.
Yeah, I think the cyclical point's a really good one. It is the structure of the NFL. I think it's the best structure in sports, but it's also the most challenging because parity is important. And it's set up so that next season's going to be harder the more successful you are from a schedule standpoint. It's also tough to keep these teams together with the way the contracts work. So we look at that every day. We have a goal of consistently competing for championships. And sometimes that's making hard decisions. Brett Veach and Andy Reid and Clark Hunt have to decide what to do with players at the end of contracts. Who do we renew? Who do we not renew? And those are difficult decisions for them and for our fan base to accept. But our goal is to consistently compete. We've been able to do that.
I used to love the Raiders, Chiefs. Now it's the Bills, Chiefs.
Yeah,
Don't you think? Is that? I hope the Raiders are back because there's something about Chiefs and the Raiders, isn't there?
It's
The
traditional
black
and
uniforms and
Yeah.
it's
Yeah, but if you look at this last game, I think we came out today with the ratings. You know, this is the highest rated regular season game. It's a statement to the value of the NFL.
I will say they had, you know, at one point they had one job, and that was to keep an eye on Josh, and they did not. It's like there's no one around him. Do you remember? Did you call Andy Reid and say what? You know.
Yeah. One of the things I learned early on is these guys are elite players, and they were.
But he was
Josh is as well.
You can't. The legs on that man.
He's a great player, and he's playing great. We look forward to seeing them again.
Yeah, you do.
Yeah.
Is that a promise?
It's not a promise. It's a hope. I mean, we want to be getting the playoffs.
I think you will. I think it's great. All right, Mark. Thank you.
Nice to see you.
Later, CNBC Sport is set to release its official list of the most valuable NHL teams, and we've got NHL Commissioner Gary Bettman is going to join us live in the 8 o'clock hour. Squawk Box is coming right back.
WashboardJimAthletics.com.
You can see it there. Welcome back to Squawk Box. U.S. officials racing to deliver billions of dollars to chip makers to complete a significant portion of President Biden's CHIPS Act before he leaves office. The Commerce Department provisionally awarded most of the $39 billion of that grant money, which of course was allocated under the act to re-energize U.S. chip production. But, and here's the interesting part, nearly $30 billion of that still tied up in government negotiations, leaving those deals in limbo as the new administration prepares to take over. So there's now a big question about whether that money will actually get spent. Intel was given the largest preliminary award, up to $8.5 billion in grants for factory projects, plus up to $3 billion for defense industry manufacturing facilities. It is counting on those funds to pay for massive facilities that it's building in Arizona, New Mexico, and Ohio. The Commerce Department is aiming to complete as many of them as possible in the next 2 months ahead of the incoming Trump administration. So there's a little bit of a race on, and it'd be fascinating to hear whether President-elect Trump, I should say, wants these payments to go forward, whether Howard Lutnick, who's now going to run Commerce, would want $30 billion out the door. I would imagine that maybe they would say no.
Or you wonder if the Department of Government Efficiency would weigh in on any of this too.
Coming up, we're going to have another conversation weighing in on us this morning. Rich Greenfield on the expected spin-off of NBC's cable networks, including CNBC, plus a preview of NVIDIA results as we head to a break. A quick check on Target after reporting results earlier this morning. The stock getting hammered off about 17% right now. We'll talk about what that means to the consumer in just a little bit. Welcome back to Squawk Box. Comcast, the parent company of this network, expected to announce today that it's spinning off its NBC Universal cable networks, including this one, Joining us right now, Rich Greenfield, partner and co-founder of Lightshed Partners. Good morning to you. You know, this was a possibility in the offing just a couple of weeks ago. It now seems like it is in the offing. I'm curious about your reaction.
Well, I mean, I have two major reactions. One, this is sort of a very clear, direct statement by Comcast and its, controlling shareholder and Brian Roberts. Like, they are exiting the cable network business. Like, this is them saying, we don't want to be in this business. This is no longer a growth business. It's going to be around for a long time, but it is just no longer a growth business. So I think it's interesting. Everyone was looking at, oh, Disney's going to get rid of our TV assets. Remember that David Faber interview, Andrew, 18 months ago? We talked about, you've had David Zaslav and all this question about WBD spinning off their cable networks. Like, Paramount, what does Skydance do? And who's leading the pack getting out of cable networks? I mean, obviously Rupert Murdoch sold a bunch of them to Disney, was probably the first mover. But of the companies that exist today, the one that's really making the big move, I think this is a pretty big statement from Comcast that they're exiting the traditional basic cable network business.
And what you said that you had two big thoughts. So that's one. What's two?
Well, the other one really concerns you and everyone else at this network and MSNBC and USA. Can these networks stand on their own? Is news, you think about the power of news and the impact news has. I mean, every trading desk around the world is watching this right now. Can news, and obviously USA with some sports, not a lot. I mean, they have, they have SmackDown from WWE. They have some golf. They have, there is stuff, but there is not a lot of sports. Can those networks stand on their own? And we're going to learn. I think there's probably a lot of skepticism among investors. They like the fact that Comcast is getting out of this. I mean, first, they like it because at the end of the day, it's a very bright signal that Comcast is not about to go buy WBD and then go buy more cable networks. This is them saying, we don't want to be in the cable network business, and showing investors what they don't want anymore.
Okay, so but let me ask you just a value question. So we're looking at a stock up about 2.5%. The question is, these assets, $7 billion of revenue, which is going to be moved into a new vehicle, what kind of valuation do you think they're getting today inside Comcast? What kind of valuation do you think they get outside Comcast? And therefore, do you believe ultimately that Comcast shareholders do better?
I don't. First of all, the multiple inside of Comcast is probably single digits, mid-single digits at best. Whether they get that on a standalone basis, I think sort of misses the point. I mean, first of all, Comcast, Walt Piecyk covers Comcast for us. This is really going to be driven by what happens in broadband far more than what happens to the value of this. This is a really small part of Comcast. This is a small part of NBC Universal. It's an even smaller part of Comcast. I think the reason why the stock goes up or down, and I think in this case it's benefiting, as you talked about, Andrew, it's because of what it signals. It signals Comcast is not going to consolidate in cable networks. They're not buying WBD. They're just not looking to grow this part of the business. They know what they want. They like theme parks. They like studio. That is the core. They like broadcast TV and how Peacock ties into that. But they're not going to go buy a large portfolio of cable networks. And so I think it's more of a, hey, first, Comcast has not really sold assets. I mean, what was the last time you and I were on talking about this on Squawk, talking about Comcast shedding assets?
Right. And therefore,
that's
then
a
the
new
question
thing.
is, on the new company, part of the idea is that there's going to be additional capital that gets freed up that can get invested back into the business, either by acquiring other businesses, investing in organic growth, maybe buying licenses or content elsewhere. What kinds of things would you want to see that kind of business do?
Look, scale is going to be important. We started the conversation talking about this is sort of this is a science experiment. Can you spin these up? Will this work? Yes, you can functionally do it. does it actually create a stable company? I mean, the last group of cable networks that was spun off, obviously, you look at Diamond Sports that, within a few years went into bankruptcy. This doesn't have the same cost dynamics that did in terms of sports. But look, carriage is critical. Can this maintain carriage? Obviously, sub fees are a lot lower than like regional sports networks. So I think there's a much greater likelihood of the sustainability of this asset. But in terms of M&A, my guess is Mark Lazarus, who's going to run this, new company, he's going to be on the hunt to roll up enough cable networks. I don't know if that's A&E, I don't know if that's Stars, I don't know if that's AMC Networks, I don't know if it's pieces of WBD or pieces of Paramount, but he's going to be on the lookout to get more cable network scale, because at some point you're large enough where it's hard to imagine being dropped by distributors, even if you don't have the must-have stuff.
Rich, that doesn't get you to the growth place.
And also, they are intentionally spinning this out without a lot of debt. If that puts a lot of debt back on the balance sheet, what does that mean?
Look, I think Andrew just mentioned it doesn't have a lot of growth. I wish I could sit here and tell all of you that there's a growth strategy for linear cable networks, but I don't have one. I think the reason they're being punted by Comcast is that there isn't a growth story, and that's the rationale for doing it. Becky, in terms of like the debt side of it, it's a really good question. I think it's going to be very important to maintain a strong balance sheet. So maybe it's using equity and taking dilution rather than issuing cash and trying to do something like a merger of equals, because you're stronger together with scale. You amass, like we've talked about WBD. Do they have enough cable networks where if you were going to drop them, you really couldn't be in the cable network business? Like, I think that same concept is probably what Lazarus is going to be thinking about is, can I get enough scale? Maybe MSNBC, CNBC, USA, maybe that's not enough, but if I add in 4 or 5 more, do I have enough scale where I'm not a growth company, but I'm going to live for a long time and harvest
Rich,
cash while I do
you
it?
less today.
I do. No, you're a pain in my tuchus today. But no, the only thing I would say, Rich, is that if there is an argument for anything linear anymore, it's CNBC. I mean, the market opens at 9:30. There's earnings come every 3 months. I mean, this is the content itself, whether it's streaming, whether it's cable, no matter what it is, it's the value is there. I just don't know how you put it with other things to start growing again. But go ahead.
Maybe you don't put it with other things.
Sports and news are still linear entities.
Maybe you spin it off, let it go a couple of years, and maybe private equity consolidates, and maybe this is part of a larger private equity play. Maybe somebody wants MSNBC, or maybe there's someone strategic that looks at CNBC, Joe, to your point, and goes, this is a really unique asset. It doesn't function like other cable networks. It's watched all day long. Like maybe there's somebody building a business.
Thank you. Yeah, you're like pulling teeth with you.
Maybe Elon.
No. Well, I remember Diamond Sports. Yeah, they went bankrupt like in 2 months.
Here's the other piece. I think you have to complete the spin first, unless you think that bidders start to emerge now for the different pieces. It becomes complicated to buy the pieces individually because it actually creates a sort of dyssynergy and devaluation of the other assets. So if you pick one asset off or try to pick another asset off, you basically have to sell each separately, correct?
I think it's hard to separate these assets, especially with the tax and all the complexities. But look, people were texting me last night and say the minute this press release hits, how soon until Elon says he's buying MSNBC for the fun of it? So who knows?
Rich, finally, Wicked. I think you saw it. What do you think?
It was stunning.
It's a Universal film, by the way.
It is between Wild Robot, which was amazing. I mean, Donna Langley at Universal has become one of the most consistent and amazing producers of content. Wicked's going to blow people away.
Rich Greenfield, thank you, sir. Nice to see you.
Thanks.
All right, when we come back, we're going to talk Target results, including some comments from CEO Brian Cornell, plus a preview of today's big numbers that we're expecting a little later. NVIDIA reporting after the bell. We'll be right back.
download the app.
Welcome back, everybody. Retailer Target reporting earnings this morning. They came in at $1.85 a share. That was well below the $2.30 that the street was expecting. That's the biggest earnings miss in 2 years. Revenue of $25.6 billion missed expectations of $25.9 billion. Same-store sales inched up by 0.3% for the quarter, but that was lower than the street was expecting. Street was looking for up 1.5%. It's also down from the growth they saw last year. For the fourth quarter, Target is now saying it expects flat same-store sales below the estimates of 1.3% growth. That stock is off by 18%. Joining us right now is an analyst who will be on the call at the top of the hour. That's UBS retail analyst Michael Lasser. Michael, I spoke with Brian Cornell, the CEO, and he said while they did see some green shoots in areas like beauty and food and beverage, where beauty was up 6%, look, this is a real miss in terms of what they were expecting from the consumer. They thought the consumer was going to be in buying discretionary apparel and other items more than they really showed up in any numbers. It's a big hit, extra costs that came in during the quarter too. What do you think?
What do I think is it's instructive to compare Walmart and Target in this situation. What we saw from Walmart yesterday was that it's executing on all cylinders, and one of the features of its model is now these alternative revenue streams that create some insulation for other factors within its business in the event that there are challenges. In fact, 1/3 of Walmart's overall profitability growth this quarter came from advertising revenue and membership fees. Those are two areas that Target under indexes in. And by virtue of not having those profit pools, Target's model is just more sensitive to hits and misses, especially when you consider that Target generates 1/3 of its sales from style categories, home and apparel. And those are going to be more sensitive to inventory obsolescence, different trends. And as a result, they may have to discount excess inventory to clear out. Then that's going to act as a hit to the margin. And that's what I think we saw with both of these retailers this quarter. Now, one last point, there is an opportunity with both. Walmart is on a multi-year journey where it's going to create shareholder value as it continues to execute this model. Target's a bit more of a volatile model, but it's reflected in its very inexpensive valuation. Just to put some perspective around that, I think there's still very good case that it can earn $10 of earnings next year. And with the stock trading at $125, $130 in the pre-market, it's 12.5 to 13 times earnings for what is still a retailer that generated more than 2% growth in traffic, more than 11% growth in digital sales in the quarter. So that's how we look at it right now.
Brian Cornell says that when they look at the consumer, they see a consumer that's on a budget right now. Very choiceful, he keeps saying, but on a budget. They're hopeful that that will change in the fourth quarter, that people will be drawn in by the holiday offerings. Are you enthusiastic about that idea or not?
I'm enthusiastic in general, Becky. I don't know if I'm enthusiastic about that idea, but what I do think is the consumer is steady right now, and I think it's reasonable to call it choiceful, where it's making very specific selections about what it wants to buy for both itself and for others. This, as we've well talked about, is going to be a short holiday period, which means that the retailers are going to have to do more with less. They're going to have to shrink more sales in a compressed time period. That is going to lend itself to an environment where there's going to be even more winners and even more losers. I do think that Target and Walmart will fit into the winners bucket. They're just too convenient. They have too many choices. The other thing that's going to happen is gift cards are going to be outsized winners in this category in this holiday season. It's just too convenient when you don't have an opportunity to go to the store. And Target and Walmart should be outsized beneficiaries of that as well.
Michael, a lot of other retailers are down today. You say you like Target when it's down 18% to $127 right now. Do you like the other retailers that have sold off? In part of what we've heard from Target, just their concerns about the consumer.
Yes, I think you do need to be selective with other retail stocks in this environment. Absolutely. While there's been a core holding of retailers that have outperformed, this includes Walmart, Costco, but those stocks are trading at lofty multiples. And so it makes sense to balance that with some others who are trading at much lower multiples. One name I would highlight is Ulta Beauty. And in fact, Target highlighted that its beauty category was up 6%. We think that this is going to be a holiday season where beauty really resonates, and that is going to lead to better trends for Ulta Beauty. It's already given a look at next year, so there's very little overhang on what next year could bring. Tariffs should be less of an issue. So Ulta Beauty is a stock that we would take advantage of today on the heels of everything that's going to happen in retail.
Okay, Michael, thank you.
Thank you.
Coming up, Republican Policy Committee Chair Shelley Moore Capito is going to be joining us talk about President-elect Trump's cabinet picks. The futures right now, take a look at where things stand. We got some green on the screen. Dow up about 121 points, NASDAQ up 45 points, and the S&P 500 up 11. Squawk Box coming right back.
That's better. It is 8 a.m. on the East Coast, and you're watching Squawk Box right here on CNBC. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin. Among today's top stories, Delta Airlines affirming its fourth quarter guidance. The company also issuing new full-year 2024 revenue guidance of mid-single-digit growth. That's about in line with the 6% rise that Wall Street is expecting. That stock right now off by about 22 cents. Mortgage demand inching up last week. The Mortgage Bankers Association says total application volume rose 1.7% compared to the prior week. That's despite higher mortgage rates in the market. We're going to talk more about the state of housing later this hour with expert Ivy Zellman. And U.S. prosecutors are set to lay out ideas today for what they think Google should do to end its online search monopoly. Potential options could include ending exclusive agreements in which Google pays companies to be the default search engine on tablets and smartphones, or divesting the Chrome internet browser. Google is still planning to appeal once the judge in that case makes a final ruling, and that should come next year.
All right, Comcast announcing it's going to spin off its cable networks. And David Faber, the other member of Air Force One, do you remember that? We still got it, baby.
Of course I do, baby. Those were the glory days. We saw the early days. We saw the glory days.
We still got it, though. And I don't know about you. You say you don't die. I'm not convinced. I do not die.
I don't die. I don't die. I don't.
Okay.
I don't. You've been close. You've inspected.
No, I know. I'm kidding. I'm kidding. I'm just trying to start something again. What do you know? You know anything that we don't know?
It's out now, Joe. Yeah, our future is sealed. Just kidding. But the news is out, both in a press release and a note from a memo from Mike Cavanaugh, who runs NBC Universal. You guys have been discussing it all morning. Obviously, I listened to you talking about it with Rich Greenfield just a short time ago. Comcast going to spin off the cable networks of NBC Universal, not including Bravo, which will stay given how closely it's connected to Peacock, into a new company. It doesn't have a name. There is what it's comprised of. Obviously includes us and MSNBC, E! Sci-Fi, Golf Channel, USA Network, and Oxygen. As I said, the broadcast network, Peacock, the studio, theme parks, they all stay behind. That's about $40 billion in revenues that will comprise NBC, or what NBC Universal will now be once the spinoff is complete. And we, along with these other cable networks, go out into the world. Should take about a year to complete. Let me give you a couple of least details that I've been able to piece together through some reporting. EBITDA of this entity may be around $2 billion. They keep talking about it being well capitalized. I would assume that's low leverage, as I've been hearing from people who've worked on the transaction as well and been investigating it. Maybe 1-to-1, so maybe $2 billion in debt, but I think unclear at this point. They haven't fully decided. And a dividend as well. So you've got something that's well capitalized, that has some sort of a dividend yield, that is producing a lot of free cash flow, albeit we all know how that's going, right? And the question becomes, on its own, can this entity use the capital it's generating in a way that will benefit its future, as opposed to the situation right now where, frankly, there are a lot of shackles on what these cable networks can do, given the other needs of NBC Universal, whether it's paying for the NBA, whether it's paying for the losses at Peacock and things of that nature, guys. So it's a move that is the first move by so many of these media companies, really, and they hope to have a first mover advantage, I think, in the sense of getting out there into the public markets, being free to use their own cash flow to potentially create growth, and maybe there is also the opportunity to create more scale by taking in more cable networks over time. That's kind of the plan, and as I said, it'll take a year. It is a spinoff, just so Comcast shareholders understand. You're going to get a ratio that's going to be NewCo. It'll have a name at some point. And then you will be free to sell it or keep it, depending on your desires. It may take a little while, guys, to sort of find a shareholder base for this entity. Where will it trade? AMC trades at about 4.5 times EBITDA. Maybe it's better than that. Fox trades at 6 times, probably not as good as that. So you can take a guess, somewhere around 5 times $2 billion. Maybe if you're lucky, you have a $10 billion market cap. So that's what we know from the release and from other things, obviously.
David, you said out into the world. Oh, you left out. We're going out into the cold, cruel world. Did you leave that out, or you just?
Or marching off on a new adventure.
Yeah, on a new adventure.
Yeah, there you go.
Yes,
right.
New adventure.
We got to get our how's our sea legs? Are we can we stand? Do you know? Are we?
I don't know.
I think we can.
I've been trying to come up with a proper analogy, and I think I'd love you guys to. I've been going with, we've been on a life raft, and it's kind of been sinking. Now we're all going to be able to swim for ourselves.
Right.
You know, so
David?
it's up to us.
Maybe we
We
can,
need a new analogy.
maybe we can latch on to a bunch of other people drowning. And
I'm gonna come up with a new analogy. Give me a minute.
Listen, you know, I went with swimming for obvious reasons.
David,
but I
in
don't
terms
know.
you did go with, well, you're a swimmer and you wear
Yeah.
a Speedo, which no one needs to think about.
And run into David.
David, in terms of comps,
I was pregnant.
publicly traded comps for this new business.
Yes.
In terms of, you know, you just talked about evaluation. You said,
Yes.
you know, upwards of $10 billion. You know, you look, I
Possible,
believe
yeah.
on the high end, you look at Fox maybe, though they
Right, I
have a
said
big linear
Fox trades
channel.
at 6 times EBITDA, right? It's news and sports. It is, you know, obviously, you've got to believe it's a better entity, frankly, at this point. People may argue with that, but in the marketplace, certainly it's well known. AMC, 4.5
On the
times.
lower
So
end,
I think
right.
the bankers advising this are looking around 5 times. Seems to be potentially a hopeful, fair multiple for the entity,
Right.
which would produce. Now, again, as you know, Andrew, though, the EBITDA is coming down, right? I mean, that's
Right.
one of the reasons why this spinoff is taking
that's
place.
what I was
The
going to
question
ask you, but
can you ameliorate that decline by allowing this entity to be able to fight for itself in a way that
Right.
perhaps it isn't able to as
So
part
I was
of
going to ask you
larger
about the debt piece and the dividend piece because,
Yep.
you know, the truth is if the plan is that basically you have to build an ark, you know, faster than the waters comes at you, paying out a dividend and having any debt is a cost to the business and your ability to go use that money for operational or acquisitions or other things that can hopefully get you that kind of growth. What do you think that looks like? You were saying 1-to-1 on the debt piece, you know,
I'm
and then you were
guessing
also
to
talking
a
about a
certain
dividend.
extent,
How big would
yeah.
that dividend be?
I don't know. I've been told that it would be decent. That was the word that was used. That would attract investors, though, because the question I've had, certainly, Andrew, is what kind of an investor base can you really imagine here for this thing? You know, is it really going to attract people who actually think that there's an opportunity here with declining cash flows potentially? And so a dividend is something that may be attractive. And yes, you're right, it will use up some capital, but this thing will generate a lot of free cash flow. And I think the expectation is it's there that then, okay, what are we going to do with? That's obviously after CapEx, but what can we do over time? It's going to have its own currency, so there's a possibility there as well. And as I heard Greenfield say, I mean,
That's
maybe
what-
2
yeah.
years out, if it's not going as well, maybe private equity does come in. Maybe Mr. Brian Roberts, who they own 33% of the voting shares, can get paid a control premium for that over time. You couldn't sell it now anyway; it would generate a huge capital gain. So, you know, this is the plan.
The idea of potentially, the other thing we talked with Greenfield about, and maybe Tom Rogers too, I can't remember, but the idea of wanting to get more bulk by, you know, picking up pieces of other places, doing a deal with somebody else, and even if that's not paying cash, teaming up and making sure that you get there with scale to control things
Right.
a little bit longer.
Right. I mean, I think that certainly becomes a possibility. I don't know. You know, when you think about a Warner Brothers Discovery, though, Becky, it's the cable networks there are so intrinsic to the overall business,
Right.
given the debt load, they contribute so much cash flow. Very hard to imagine the scenario unless you were to transfer an awful lot of debt with them, which is not really what you want to be doing here. But there are other opportunities that will come up, and by the first mover, you perhaps have an advantage, and/or at least there's opportunities that will arise that wouldn't have if you weren't making this plan. So I think that is at least part of it. Sports is going to be a component of it. You're not going to see the NBA or the NFL, but you know, you guys were talking about it earlier. The Premier League, golf, Big Ten on USA. Maybe there'll be some other opportunities to add some sports as well. But listen, there's also dyssynergies. You guys have been talking about it. You know, how you separate MSNBC from NBC News, cost structures there, even separating to a certain extent from Peacock. You can recreate things through commercial agreements, through licensing agreements, but it's not without its challenges.
Yeah, but some of those things are positive. I think MSNBC being separate from NBC is probably positive. I don't see why it's any more complex, David, than, all right, we're moving to a streaming world or whatever. So you got this valuable content that heretofore was distributed through cable. So now it's going to make a transition somehow, I don't know how it all plays out, to streaming. But the valuable content for cable becomes valuable content for streaming down the road.
Yeah.
It just has to be worked out. Why is it any more complex than that? You need money to be able to do that, and you don't know. There's, you know, musical chairs. You don't know where everything ends up, but the valuable content finds a home somewhere, It just
It
happens
should,
to be on
but will
streaming.
you be paid in the same way? As you well know, though, Joe, I mean, the key to the success of so many cable networks has been the fact that people pay for them and don't watch them because they're part of a bundle. And as that breaks apart, that
if you're one
changes
of-
the economics
David, if you're
significantly.
one of the
70
people
million
that-
people pay, but how many really watch us,
I know,
right? So-
I know, but if you're part of the entity that people are actually paying for the bundle, it makes a difference which content is valuable and which isn't. So
No
the
doubt.
stragglers can fall by the wayside. I guess
Yes.
I'm talking my own book here, maybe, but
well, I get it, and I think that's true,
Well,
but there's
could you
definitely
help
a
me
need
out,
to come
will
up
ya?
with a new strategy. Well, I
you
will
know,
say
work
there's
with
a
me.
hope that, first of all, at some point, the decline will start to ease, although, frankly, it hasn't yet in terms of the linear networks. YouTube TV, obviously, is we get paid there as well, right? That's just putting together the same bundle, and that's been very successful. And the question will be, does this group of cable networks have any leverage with the distributors, with the charters of the world, as part of some sort of a skinny bundle? I don't know the answer. I think the expectation is yes. And I think to the extent there's been any investigation of that, perhaps it's come back as a positive from the likes of the charters of the world. But your point's a good one. We'll have to wait and see. But these are the pressures that all these networks have been under for some time as the model blows apart, and how you figure out a way to come up with that same number in terms of
The conundrum is
revenues
the
and
content
earnings.
can be very valuable, but unfortunately, the economics of that
digital
content,
nickels instead of analog dollars.
One of the great successes has been the New York Times, which I've been a part of, and I saw it took 15 years or more. And by the way, there was only one or two that actually succeeded in the marketplace. Every other player didn't succeed in the marketplace. And so it really did take 15 years to go from the sort of heights all the way down to back to actually get there. So that's going to be, that's the execution risk.
The one thing I will say is Mike Kavanaugh, I'm just reading his official note on this that's out, points out that this is going to be led by Mark Lazarus as the CEO and Anand Kinney, who's going to be the CFO and COO, coming from NBC Universal. Says they both raised their hands to lead this initiative, and that says something too. People who are excited about jumping in and trying to take that operational risk and run something with it too.
Faber,
and the opportunity to potentially invest in the business and come up with new things, Joe, to do, not necessarily just what we're doing.
Building brands
is not an insignificant one. And that I think is going to be part of the keys in stemming that decline in cash flow that this thing will start out with.
It might be more believable, David, if like right here, you see how I let a little gray, I don't touch it there, but with you, I don't know. It's just less believable. If we get a shot at it, it's less believable because you have no gray there.
You just got it. I do. I have a lot. You just can't see it as well.
Yep.
See?
All right, if you insist.
We got to roll.
If
We got to
you
roll.
insist.
We got West Virginia Republican Senator Shelley Capito, Laura Capito on deck. We'll see in a little bit. She's going to join us about the incoming Trump administration's latest cabinet picks and all the jockeying going on for that position when it comes to the potential Treasury Secretary choices. We'll talk about that and break it down after this.
picks.
Among President-elect Trump's latest picks for his administration, Cantor Fitzgerald CEO Howard Lutnick is going to head the Commerce Department. Former wrestling executive and SBA, Small Business Administration leader Linda McMahon is going to be Secretary of Education. Dr. Mehmet Oz is going to lead the Centers for Medicare and Medicaid Services. Trump's pick for the Secretary of the Treasury still appears to be fluid and up in the air, though the Financial Times is now reporting private equity billionaire Mark Rowan has emerged as a top contender. Joining us now to talk about how the incoming administration is taking shape, West Virginia Senator Shelley Moore Capito. She's the incoming Republican Policy Committee Chair, and I don't know. I guess there's about 15 different names. We can go wherever you want with this. Do you have any insight into Treasury at this point, Senator, or you know what we know?
I sort of know what you know. I will say it's going to be an exceedingly important appointment because of what the president ran on. He ran on economic growth and world dominance in terms of our own energy and also our own economics. So I think he's looking probably at each of these candidates carefully to see how they will fit in and what their past has shown that they can move forward. So I look forward to it. I think it's an important pick, and I think he feels that way too, which is why it's sort of one of the moving down the line in terms of one of the latter ones.
It's different this time around. It just seems like so many things are being considered, and I wonder how this works in terms of recess appointments. Is that if the former leader or to be former leader McConnell decides saying now that there won't be any of those? Can he dictate that? Do you expect there will be some? What do you, knowing Senator Thune, the incoming majority leader, what's going to happen on January 21st?
Well, you mentioned at the very beginning of that comment that it's different this time, and it is different. The president had a team led by Linda McMahon and Howard Lutnick that have been vetting individuals, looking at individuals way previous to the actual election. And you see these folks rolling out rather rapidly. So you know they were in the pipeline and actually being considered much earlier than the election. That is much different than the first Trump administration. And so I think because that is existing, that gives us the lead time when we get sworn in on January the 30th. We can then begin to have hearings, even though the president can't make the formal appointments until January the 20th when he's sworn in. But we can be ready, and I think many of these, that's what you're going to see. You're going to see us already have completed sort of the pre-work so that we can get these quickly, efficiently, and that will lead to, I think, sort of calming down this whole question of recess appointments. The way I understand the Constitution, we as a body, the House and Senate, have to put ourselves into recess. The president can't just unilaterally declare that the Congress is in recess. There are provisions if we're divided on the question, and so we had a big discussion on this last night. And so I think what we need to do is consider these efficiently, get them up for votes, stay here all the time, and make sure that those votes go through. And I think that the issue of recess appointments will probably go away, and it won't be as integral part of how the president's going to get his cabinet through. We'll do our work, and that should end.
Yeah, I was also saying it's different this time for some other reasons. I mean, we do have a president coming back to be president again, but after when he wasn't president for 4 years. So there's been, that's rare. It's happened before, but it's rare. And I can remember many appointments that were controversial to start and resulted in very contentious hearings. I can never remember where you got I mean, you know the names. I don't have to go over them, but maybe you got 5 that are fairly controversial, and you've got a couple that make the other ones not even look controversial. So I don't know. You know what I'm saying? How does that play out? Whereas I could see some of the less controversial ones. Maybe that was the method. Maybe that was the method. I'm not going to call it madness, but maybe there was some thinking that went into that. We're going to throw a lot up here against the wall, and most of it's going to stick. Do you think it all sticks?
Well, I think they're on Capitol Hill today. I understand the vice president to be J.D. Vance has been here. I think that is a decided advantage this time for the president, in that he has a seated senator who knows everybody, at least in the Republican conference and probably the entire Senate, and so that will be a benefit. I think there is some method to what you're saying in terms of, for instance, Lee Zeldin was one of the first appointees as EPA administrator. Maybe that raised some eyebrows. Well, he doesn't really have that, environmental background that he needs to have. Well, he's going to go through my committee, and I think he's going to go through very well and quickly, and that's a key position. So I think as you see these roll out, some of them obviously went, also Rubio was an early one. He's going to, we all have a great high opinion of Marco and his abilities to be able to lead us on the international stage. Then you get to maybe some of the more that are raising the questions. We'll go through the information that's available to us. They're going to make the rounds and meet everybody if they haven't met already, and answer some of the questions in private, and then we'll have probably some good TV watching for some of the nomination hearings. That I can promise you probably as we move into January.
Okay, can I ask you about thumbs up or thumbs down, your prediction on some specific names? Do you want to do that? You probably don't want to do that. I don't know if I want to do that. Can we do that?
I'm probably not going to give you a good answer on that. I haven't met many of the ones that you're probably going to ask me about.
Thumbs up or thumbs down?
No,
it's binary. Matt Gates.
That's not fair,
thumbs
Joe.
up.
I haven't had the.
Okay, the RFK Jr.
I haven't had the privilege of considering these,
But
so
this is
we
the
can move
elephant
off
in the
that
room.
one.
There's a few elephants in the room. It's a very crowded room in terms of elephants.
Speak for yourself.
Yeah, speak for yourself. Exactly.
Here's another thing that's different is, it used to be you'd find these things out in the morning, and then you'd have time to, vet them through the news cycle. We're finding out about Linda McMahon at 6 o'clock in the evening. So
yeah,
we know President Trump doesn't sleep very much.
Yeah, after three
Yes.
others.
But Senator, you have no perspective on Gates. I mean
RFK Jr. Pete Hegseth. Well, see, you're an example of what I'm saying. Those last couple you don't even care about because
I'm saying because things have become unusually
that's what I said. Yeah,
normalized of sorts.
There's a process here. We're at the process. Let's let the information come forward. Senator Grassley runs the Judiciary Committee. He's stated in his public statements everything should be transparent. Everything should be available to the committee members. And I think we're still 6 to 8 weeks off from this. Things can change, and they can either get better or get worse. And we'll just have to see as they're making the rounds through the Congress.
All right, Senator, thank you. I mean, that's what all of us want, is to live interesting lives, isn't it? And where you are right now with a bird's eye view of everything that's happening, I'm a little, well, I'm not envious, but it should be interesting for the entire country for the next.
It's fast moving.
It's fast moving. Senator, thanks.
Yeah, thank you.
Okay.
When we come back, we're going to talk the business of sports. The reveal of CNBC's official NHL team valuations list is on the way. We're going to see who's number one, and then we will speak with NHL Commissioner Gary Bettman. Don't go away. Squawk Box will be right back. Welcome back to Squawk Box, everybody. The futures this morning have been steadily climbing all morning long. Right now, you see the Dow futures up by more than 120 points. S&P futures are up too. They're up by about 11.5 points. Then the NASDAQ up by about 45. Let's also take a look, I think, at treasuries. Or, never mind, let's check out Bitcoin. Actually, it's back above 94,000, a gain of about $1,200, 94,221, and we're watching treasury yields. These have moved higher after dropping down yesterday on concerns of those headlines coming out of Ukraine and Russia. This morning, the 10-year is sitting at 443, the 2-year's at 431. Kansas City Fed President Jeffrey Schmid says that it is uncertain how far interest rates can fall. He said the initial decision to lower rates is an acknowledgement of the growing confidence that inflation is on a path to reach the 2% goal. He did not say whether he favors a cut at the central bank's December meeting. Schmid will have a vote on the Fed's interest rate policy committee coming up next year.
Okay, when we come back, much more on our parent company Comcast deciding to spin off some of its cable assets. Julia Borston is going to join us. She's going to be coming to us from the West Coast this morning after a break. And then we got a deep dive into the state of the housing market with housing expert Ivy Zellman. And another programming note, don't miss an interview with Goldman Sachs' CEO David Solomon later this morning on money movers. Stay tuned. We're coming back after this.
Everybody, welcome back to Squawk Box right here on CNBC. Check out shares of Target this morning. They're under quite a bit of pressure. Stock's down about 16% right now. That comes after missing on both the top and the bottom lines. Same-store sales also missed expectations, and for the fourth quarter, Target is expecting flat same-store sales. That's below the estimates of 1.3% growth. We spoke with Brian Cornell, who talked a little bit about this. look, this was a very difficult quarter. They expected consumers to show up and buy a lot more discretionary goods than they did. That's going to cost them. They're going to have to move that inventory. They are still hoping that the consumers will show up in force for the holidays. We'll see what happens. They are giving more moderate guidance, more conservative guidance as a result of all of this. They did face higher costs in the previous quarter, taking a look at trying to make maneuverings for the port cost, for the port strike that was there, and some additional costs with that. But that stock, again, down about 15% this morning.
Okay, well, we're going to continue our conversation about the big breaking news of this hour about our parent company, Comcast, announcing it's going to spin off cable networks, including CNBC, MSNBC, USA Networks E, and others. Bravo will remain part of Comcast NBC Universal, which will include the NBC Broadcast Network, the NBC Sports, Olympics, and other properties that will help populate the Peacock streaming service. The new spin-off business will be led by current NBC Universal Media Group Chairman Mark Lazarus. The separation expected to take about a year to take place. I want to get out to LA to get the perspective from Hollywood. Julia Borston is here to talk about all of the developments. How do you think this changes the landscape, and what kinds of transactions, all of a sudden everybody's talking about M&A, do you think get born out of this?
Yeah, Andrew, I think that's really the key piece here. One of my sources very close to the situation said, this isn't the end, this is the beginning, indicating here that in spinning off these cable networks, what Comcast is doing with this new co, or this spin co, is they're putting it in a situation where it could make meaningful acquisitions of other channels. I'm told by sources that we should expect there to be a lot of conversations about Warner Brothers Discovery, maybe looking to sell off some of its assets, the idea that some of those channels would fit well with this SpinCo. And then after that, maybe look at Stars, which is separating out from Lionsgate. That could be paired in here, AMC networks as well. So there are plenty of different cable networks that could be combined here. We could even see Paramount, which is going through its own management transition, sell some of those assets. But the question here is, what else does this company acquire? How do they try to squeeze out as much revenue as possible from these linear networks? And then what do they do with them from a digital perspective in terms of streaming? And then also, what do they do in terms of non-television revenues or non-TV or streaming revenues? Things like events, things like communities. You know, you have a network like Sci-Fi. Can they really build out that horror community around sci-fi? You know, it's interesting because Bravo is hosting these BravoCon events, and that's going to be part of Peacock, but I think we'll see more and more of those types of businesses out of this new SpinCo.
When you think, though, about growth businesses, we're all talking about similar kinds of businesses, linear cable channels that by default, on a year-on-year basis, it's hard to see them growing in this moment, given the unbundle that's taking place. Do you imagine there's other kinds of acquisitions of companies that have a true growth profile, if you will?
Well, I don't know. I don't have anything in particular in mind. I think the initial move is going to be consolidating and creating some scale around these cable channels. I think, though, then the question is whether they can create businesses that have growth profiles within that company. I mean, for instance, here at CNBC, which is, of course, part of that SpinCo, we have an events business, we have communities. And so I think there's going to be a sense of the idea of these being brands that have value beyond the TV ecosystem. And how do you generate as much value from those brands as possible?
Flip side to all of this, on the Hollywood end, you know, historically, a lot of a big piece of this is Comcast wants to be a growing machine, obviously.
Yeah.
Wicked, by the way, getting some great reviews across the board, including from Rich Greenfield this morning, who I guess saw it last night. But when you think about sort of the long-term prospects for Comcast, how do you think this changes the dynamic? Obviously, it's not going to have this revenue that's going to go down every year, so that may change their profile a little bit. Do you think that there's an extra multiple tick or two that comes from it, or not? We were looking at the stock. It's up about 98 cents this morning, but obviously down from where it was even a week ago. So it's a little hard to judge how the market is actually reacting to all of this.
I think the real question here is what happens with Peacock. And if you look at the assets that are staying part of Comcast, this is really intentional about building up the potential for Peacock and to make it a real player in the streaming space. Because right now it is much smaller. You have the giants, Netflix, Disney Plus, Amazon Prime Video, and Peacock is one of the smaller players. But what they're doing in keeping Bravo, which of course has reality TV, and keeping NBC, NBC has sports. And what they could do is they are going to have the NBA, which is a new deal. They have NFL. And to have the addition of the NBA, which is a new deal, it hasn't started yet, they're really going to create a critical mass of sports for Peacock. So I think that's really important here. And I would not be surprised if, especially in this M&A environment with a new regulatory environment here, that we actually see more assets added to the core Comcast NBC Universal business as they really build up their interest in becoming an entertainment powerhouse. What they're doing is having these brands like Wicked, which then they'll be able to exploit across their other platforms, whether it's Peacock or now at the theme parks as well. And as they invest in the theme parks, which is a true sense of diversification from the more traditional media business, I think they're really thinking about what's going to work on all of these platforms at the same time.
Thank you so very, very much. We will see where all this goes. It's all exciting. Thanks.
All right, let's talk housing as 30-year mortgage rates are back to hovering around 7%. Joining us right now on what that could mean for buyers and sellers is Ivy Zellman and Associate CEO. And Ivy, sounds like it's bad news for everybody all involved as mortgage rates push higher again.
Well, it's certainly not good news, but it's been interesting with rates now actually about 6.8% on a 30-year fixed rate. We've seen surprising resiliency in terms of volume. However, we're seeing a pickup in listings having to reduce prices and incentives that our builders are continuing to offer, predominantly mortgage rate buy downs. And the area of weakness that we're seeing across the spectrum would be more of the entry level, where the move-up market has been very strong and remains, I think, surprisingly resilient despite rates moving higher.
Yeah, I mean, the reality is we're still dealing with a situation where there's just not enough supply. That's particularly difficult for first-time home buyers. As you mentioned, at the entry-level price point for all of these things, it's keeping people from being able to buy homes. There's a huge backlog there. What's the solution to that problem? How's it get fixed?
Well, I think that the way that we think about the solution is that we need to see, that local municipalities, cities partner with developer builders to utilize land that's not out so far out in the rural areas that you can't have trades willingly driving out there to build homes. So I think it really has to be providing more affordable houses closer to the employment centers. And I think that really comes at the local government level. It's not going to be at the federal level. I know that Trump is talking about utilizing federal land, but that most of that land that's out west is really called third, fourth ring, even further out. And trades and prospective buyers are not going to want to drive. They'll spend more on gas than they would on their mortgage payment. Well, maybe not, but it's too.
There's a time factor too. Yeah, having to commute somewhere to a job. So if the federal government can't make progress on this, how optimistic are you about local and municipal levels being able to do something about this? How long does it take to get us back to what we would consider a more normal situation?
I guess I'm somewhat skeptical that it can come to fruition because, not in my neighborhood continues to be a big impediment. And I think that will continue to really curtail any likely significant improvement in building affordable housing. I know that there's some opportunities that have come to fruition in different markets in Seattle and Denver, but it's very small. It really is not enough.
I mean, we've all been a little surprised, I think, by the 30-year and the move higher for the yield there, the move higher for mortgage rates as the Fed's been cutting interest rates. Has that created a panic in the industry, or how do people plan and accommodate for that? We're not seeing lower rates like we'd anticipated, at least on the long end.
Referring to the builders or realtors?
To the builders, to the realtors, to anybody involved with this. I mean, this is a problem to try and tackle. We even see it playing out to a company like a Home Depot or a Lowe's. It's not developing the way they had anticipated, and that means everybody's got to have a longer-term plan for this.
I think they adjust. I mean, what we're seeing at least for the builders, they continue to use mortgage rate buy downs, kind of averaging 5%. In some markets, they're lower than that. And that's still creating volume for them. They're still selling homes, but they are providing that value incentive. And I think in the existing market, inventories are up, call it 20-25% nationally, but that's allowing for more pending activity to come to fruition. So we do have buyers back in the market. Remember, we have a very strong economy, and we're still seeing that result in more demand. And I think that everyone's adjusting. Affordability is still very stretched. For the existing home market, we're about 20% above trend line. And in the new home market, we're about 10% above trend line. So I think that the builders and realtors and buyers are adjusting. Remember, when interest rates were approaching 8% not too long ago, we did have continued demand. So I wouldn't be surprised to see the volume, for 2025, assuming rates stay where they are today, be in the mid to higher single digits for the new home market. And we actually expect a pretty good rebound in volume for the existing home market, given that it's at recessionary lows. So not getting back to trend line, but we do think price will be the factor that needs to be adjusted downward. And we are seeing markets where pricing is not only moving lower, but we're actually seeing pretty big reductions in list prices. So that's definitely going to be the lever.
Ivy, thanks. A lot of good information. Appreciate it.
Thank you. Thanks for having me.
All right, still to come, CNBC set to reveal the valuations of the NHL's most valuable hockey teams. Those numbers are coming right after the break, followed by an interview with NHL Commissioner Gary Bettman on the state of the game, media rights, and much more. Stay tuned to watch the Squawk Box on CNBC. CNBC Sport is out with its official list of the most valuable NHL teams. You can find it right now on CNBC.com. And like every other major sports league, hockey is in the midst of a big bull market. Our senior sports reporter, Michael Ozanian, joins us now with more. Hey, Michael.
Good morning. The business of hockey is booming, and NHL team values are hitting record highs. The average NHL team is now worth $1.9 billion. It's all because the business of hockey is booming. Last season, the NHL hit record sponsorship revenue and record ticket revenue. In addition, its U.S. TV deal is more than 3 times its previous deal, and its next Canadian national TV deal, which should start in 2 years, is expected to see a similar increase in value. Now let's take a look at the top 5 most valuable teams. At top of the Maple Leafs, the Leafs are approaching $100 million in annual sponsorship revenue, by far the most in the NHL. They're followed by the New York Rangers. The Blue Shirts led the league in ticket revenue last year at $170 million. The Montreal Canadiens ranked 3rd, valued at $3.1 billion. They raked in the most local TV revenue in the league last year, $65 million. And with the LA Kings 4th at $2.85 billion, and the Bruins right on the Kings' tail at $2.75 billion, both of those teams own their arenas too, which gives them a huge advantage in sponsorship revenue and also tens of millions of dollars in revenue from non-NHL events like concerts. And all of this robust economic news in the NHL is coming right through in team transactions. Just recently, the Tampa Bay Lightning, not exactly a big market team, changed hands for a record $1.8 billion, $600 million more than the previous record for an NHL team. Joe, back to you.
We had, just football first. Then we had the Chiefs owner on, and winning, 3 Super Bowls is pretty good. The Florida Panthers won their first Stanley Cup last year. Can you see the financial impact already on that team?
Absolutely, Joe, because hockey teams keep all their gate receipt revenue from the playoffs, except for a small portion they put towards revenue sharing. But as every hockey fan knows, every round your ticket prices go up. So the typical team, depending on the round, can bring in anywhere from $3 million per game up to $5-6 million per playoff game.
We're going to say that no Canadian team has won the Stanley Cup in a long time, since 1993. Why are they still in the top 5 for most? Because it's in Canada. Because they like hockey in Canada. I got it. I can't believe they wanted me to ask that question. Anyway, thanks, Mike. You make sure you head to cbc.com/sport for the official NHL team valuations list, and join us now for more on the valuations of the team in his league, as well as the state of sports media, and a lot more. NHL Commissioner Gary Bettman. Just looking at the results, you must be like a genius. The way you've run this thing, it couldn't have been better. It's a blockbuster. You're amazing. There may be some overall things about sports on TV that has helped, Gary.
Between what Michael said and what you've said, I think I've had enough and I can go home.
Exactly. But how valuable is sports in the current
content? Even the news with Comcast today, everything having to do with content and distribution shows that great content is increasingly valuable, and we think there's nothing more valuable than sports content, and you're seeing that over and over again, including the most recent NBA deals. From our standpoint, the league has never been healthier. It's not just me. We've got great owners.
Don't downplay that.
And we've got great people at the club level.
You can't binge watch sports. You can't binge watch hockey. You got to watch it when it's on.
And our competitive balance, how good the game is what's fueling ratings, attendance, partnership growth in terms of sponsorship. The whole package is working together, but again, it starts with our players in the game.
Gary, one of the things that was referenced there is the deal in Canada.
Yes.
And the media deal that's going to come up with Rogers. And a lot of speculation about what that deal will look like in the future, whether that'll be with Rogers, whether there will be a streamer that'll ultimately get involved. There's been some speculation about an Amazon kind of deal. What does that look like in your mind now, especially given what the NBA just did, for example?
Well, we have an exclusive negotiating period which we've triggered that starts on January 1st for 60 days. With our consent, Rogers has sub-licensed for this season and next Amazon Prime to carry Monday Night Hockey. If you're thinking about our television role and presence in Canada, television media, think we're the NFL equivalent in Canada. We have like 41 of the top 50 programs throughout the year. During our playoffs, we're the #1 program every night. We think there are great opportunities, although cable in particular, but media in general, other than the streamers, are more heavily regulated in Canada, and that presents some challenges. But I think the outlook is very strong for us.
Are there more opportunities to package different sort of schedules of games with more providers than there used to be?
Well,
is that a good idea or a bad idea? I mean, it used to be that you'd focus and do a deal with one network.
Yeah, there seems to be less of a need for exclusivity. Everybody wants a piece. But again, we're open-minded, and Rogers has been a great partner, and we're going to wait and see what they say. Just like ESPN, Disney has been a great partner, as Warner Brothers Discovery has in the States. But what's clear to me is that sports content, our fans, our game is increasingly valuable, which is also being reflected by what Michael's valuations have been.
Any concern about streamers and streaming live games? I asked, Amazon's now doing a great job with the NHL. By the way, they're doing a great job with the NFL. But
absolutely.
You know, they stumbled a little bit early on, and I raised the question because this weekend, obviously, Netflix stumbled big with this big fight, and now there's questions about what's going to happen Christmas Day with football.
We're in an evolutionary period for media distribution, and with the Comcast announcement, how CNBC is delivered is going to evolve over time. Whatever the bugs are with the increasing use of technology, they're going to be worked out. But I think we're at a point in time where distribution is going to be maximized, and the really good content, which we include ourselves in, is going to be increasingly valuable, and we're going to reach more fans than ever before, because I think the key is consumers, particularly millennials, Gen Zs, Gen As, they want content on their terms, and technology is going to help deliver that.
How do you see that? Is it simply a money game, or are you looking to experiment too, and how you go using, whether it's direct to consumer, whether it's over some of the streaming stuff, whether it's over having cable networks and broadcast?
I think it's important that games maintain their authenticity, and you don't adapt the game for the technology, but you use technology to deliver it in more ways than ever before. So in our case, for example, puck and player tracking, which we call NHL Edge, digitally enhanced dashboards, we've brought technology to the game to enhance the fan experience. And what we need to do is make sure we're giving our fans maximum opportunity to connect with the game on their terms.
Have you had conversations, I mean, this is just an announcement today with Comcast, but what that would mean to you all at a broadcast, how you would look at these two entities being separate or tied together?
Well, it's interesting because the split has a lot of the cable entities on one hand, but NBC and Peacock on the other hand.
Right.
I think there'll probably be some integration of the two.
Sharing?
I would imagine. I mean, I'm not privileged to it.
Are you concerned about what may feel, people talk about a sports bubble. People have always been talking about a sports bubble and valuations, but we're now talking about sports outside of the NBA, the NHL, the NFL, and Major League Baseball. All of a sudden, we're talking about, you know, pickleball, and we're talking about volleyball.
That's why I'd like to be
and
Garrett.
Sailing.
If we're talking about pickleball, I'd like to be Garrett.
And the emergence of women's sports,
women's sports,
than ever
and so
before.
I just wonder whether the fight for the attention of the fan changes.
That's a great question. Two things. One, I've been in sports now for almost 45 years. I've been doing this for 32, and I've been hearing that it's a bubble for that entire time. Clearly, particularly now with the evolution of delivery systems, good content has never been more coveted and valuable. I think there's going to be more and more fragmentation, and there'll be opportunities for more sports to get distributed. But in the final analysis, the four major sports have the largest fan base and the best content, and I think that's going to continue to be the case as long as we all take care of our games and make sure the competition is
But
good.
how do you think about the regional nets? I mean,
That's just a point in time where things are evolving. I think you're going to see less focus on territoriality and regionalization, and ultimately over time there'll be more national distribution.
You ought to be able to watch whatever you want.
When you want
I
it,
still have
where
a
you want.
major problem on Sundays. It's like the Jets and Giants always have to be on.
Right, but
Great.
the question,
But nobody else.
I hear you, but the question is, can the economics where you got to get a lot of extra pieces of bites of basically the same apple before, right? And that becomes a little bit more challenging.
But if you remember, if you go back 30, 35 years to the emergence of cable and the penetration they got, it was all based on sports locally.
Yeah.
That's how cable and satellite entities penetrated. I think you're going to see more of the same with streamers, that sports is going to drive distribution.
I saw a new thing that I'd never seen before, the window cleaning World Cup. That's actually a thing.
Is it really?
Yeah, I had no idea, but these are the level of sports getting back
Where
to.
are they doing that?
The last one was in London.
But let me just ask you separately.
I would be scared.
When you do these TV licensing deals, and you've done the math on this, do you believe ultimately that the advertising revenue that the networks are going to capture pay for the actual licensing number, or is it a loss leader to use for these networks to promote other products? Amazon obviously is a very unusual company now, given what it's doing compared to what a classic TV company would have been.
The answer is yes, in a funny sort of way, because the business will evolve and the advertising will be more and more targeted. We have teams that are distributing free streaming, but doing it with targeted advertising, and they think they can make as much money as more. The model's changing. So, for example, the Panthers, Florida Panthers, Stanley Cup champion, as you pointed out, have gone over the air, kind of like Back to the Future for local sports. And they're going to make as much money as they did with the cable regional sports network, and their viewership is up 170% because they're more widely distributed. This is all evolutionary, but it's all good.
Gary, thank you for coming in this morning.
Thanks for having me.
Congratulations on your success.
Thank you.
Okay, we're going to take a quick final check on the markets before we hand it over to our friends on Squawk on the Street. Take a look at where things stand right now. Got some green on the screen. The Dow up about 74 points, the NASDAQ up about 22, the S&P 500 up about 5. Take a quick look at Treasuries as well. The 10-year note at 4.43, the 2-year at 4.3. We got a lot more news coming to you tomorrow. Make sure you join us then. Squawk on the Street begins right now.
Good Wednesday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer, David Faber at Post 9 at the New York Stock Exchange. Futures fairly steady on a big day for retail earnings, media, and tech, as NVIDIA reports tonight, one of the last AI catalysts of the year. Target with its biggest earnings miss in 2 years, set to fall some 16%. Although that's going to start right there. Missing the mark, the stock plunges after posting its biggest earnings miss, as we said, since 2022.
Plus, our parent company Comcast is planning to spin off most of its cable networks. We'll give you the details. And investors are gearing up for those NVIDIA earnings. The tech giant set to report after the bell.
Let's begin with Target this morning, tumbling in the pre-market after this Q3 miss. The company says results were hurt by consumers tightening their belts despite some price cuts. The costs of managing higher inventory levels also came into play. Retailer cuts their holiday quarter guide. This is Cornell on the earnings call just a few moments ago.
While we aren't happy about the reduction in our outlook for the remainder of the year, we believe we're managing our business appropriately, and we're helping our team stay agile and ready to respond if we see our business accelerate. And our Q4 plan is focused on ending this year with an inventory position that will best position our business going into 2025. Importantly, we're still confident in our long-term strategy. Traffic growth shows that we're winning with our guests, and we're making the long-term investments that have delivered strong performance over decades.
Jim, Target has now comped below Walmart for 36 months.
Yeah, I think that there's a case to be made, as I did at the top of the show last night. There's 3 major retailers in this country. There's Amazon, there's Walmart, there's Costco, and I think Walmart is taking share. No, Walmart's taking share. I think a lot of their share comes from the fact they got 60% grocery. They have very low price of grocery. You go there for grocery, you go buy everything else. And David, the question is relevance. Target has some good brands. Target has a Taylor Swift giant production to start the Christmas season. But in the end, they don't have the horses.
You don't think so? The analysts right now seem to be focused on this margin, the miss on margins.
Very important.
And whether or not the company can be expected to sort of retrace that lost profitability or not. I guess that would be a key thing in how you evaluate the future for this company.
I think that's true. I mean, unfortunately, you have a shortened holiday season between Thanksgiving and Christmas. Fortunately, they had beauty that was good. They still have their house brands that are doing well, but they lack a relevance that has to do with the fact that food got too expensive in this country. So the people gravitated toward Walmart. Because you got 60% of the, remember, only 20% of Target is grocery. Okay. So in an environment where, not to be too political, but where it's apparently, for instance, like the Democrats didn't understand inflation, I think that there's this element of retail that doesn't understand the importance of the grocery. And Target may be just not have the scale.
Well, what are unique, when they say unique challenges and cost pressures, what are they talking about?
Well, I think they did have some port issues, but I think that when you go into Target, they got to do a rollback, just like that Walmart did the rollback. They got to hurt the gross margins even more. It's not clear, by the way, the inventory number, what that really is. What does that mean to position themselves? I don't know if they have excess inventory.
Well, they said they built up in part to prepare for a port strike.
I don't want any inventory, right? I mean, you want to treat Christmas, they're doing good. They've got Christmas trees in. Apparently that's working well. But the issue for me is price. America has rebelled against anything that hasn't cut price. And so Walmart rolls back thousands of different prices of things. And Carl, in America, it just says, you know what, we want value, we've been hurt, 2019 to now, we've paid too much. Let me go buy $5 of good food, that's the Walmart price, $5. That's the McDonald's price, $5. $10 is the go out price, and that's Texas Roadhouse, and that's Chili's. There's a $5 food item, and there's a $10 dine out. And if you don't meet those targets, they're not going to go to you. And it's really important because Costco can do it because they can jam the producers. They have no shame about going to any producer and say, we will make something against you. It's only failed against Coca-Cola and Pepsi. And frankly, it's not existential. They can pull it off. They've got a giant buyback. If they're really confident, we'll know that they bought back a huge amount of stock today. But what we're looking at is Amazon with a fantastic offer for go-to. You've got the bricks and mortar Walmart actually working as a distribution. Get it to your house in 45 minutes. And then you have the lack of scale Target, which was doing very well with Shipt, but has been passed by.
Yeah, e-commerce up 10.8. Of course, we remember yesterday Walmart's e-commerce was up 22.
Off a much larger base.
Today, I mean, there are not that many analysts writing now, but Citi does cut to neutral. They were at 188, they go to 130. And to your point, Jim, losing share, they say, likely to lose more share. And that would, in their view, means a more promotional season.
But they must be more promotional. They have to come down in price. They have to be willing to have a Walmart day. Now, Dave, do you remember the Walmart day where Doug McMillon basically said, listen, we got to raise everybody's salary and we're going to do what's necessary? Yes. Well, I mean, by the way, Marlboro Black Friday, let's go back to 30 years where you just said, okay, we got to crush ourselves.
Yes.
Let's do a new baseline. Now, they bought back $354 million, retired 2.4 million shares. They have a $9.2 billion of remaining capacity. There's one of two things they can do. They can take that money and just say, you know what, we are just going to slash these following items. Or they buy all the shares and then hope that they still have the cash flow, which I think they do. They have a good balance sheet.
Right, we're talking about Target right now.
Right, but they have to,
Walmart.
They have to do it. They have to say, okay, look, here's the 500 items where we beat everybody in the world. And they don't make money on those 500 because they have a new baseline. They just can't be as profitable as they'd like to be.
Right.
And you have to come in and you have to say, here's where we beat Walmart. Here's where we beat Amazon. Come to our store.
You've been favorably disposed towards management in the past, and Brian Cornell, are you still?
It's harder. It's harder. I think that I've been favorably disposed because I think it's fun to shop there. It's a great place to shop. I like their house brands. I've always felt that they're less expensive. When you go to, let's say you take a trip, you go to Target first. It's always been a destination. Carl, I think the Taylor Swift thing is going to be like, people don't want to know what she's singing. I mean, he's a very smart merchant. But when it comes to the price, this was overlooked by Target. What happened in this country was overlooked by Vice President Harris, and it was overlooked by Brian Cornell.
Well, two things. One is this is an interesting move because positioning was not heavy going in and expectations were not that high. They still managed to disappoint. The other is that Live Nation, Delta's comments today about their consumer. We're going to talk about Williams-Sonoma up 22 this morning. They are spending. The consumer is spending.
I have Laura Alber on tonight. She's the CEO of Williams-Sonoma. Then you'll see that stock up 30. It could be up 40, frankly.
This is the best earnings gap, I think, since 01.
Yeah. I mean, when I speak to Laura, they're delivering on every line. They've got the best digital.
Yeah, so much for people not spending.
Exactly. The price points are very high, but they offer value versus price. So in other words, RH doesn't have the numbers they have, or the old Restoration Harbor. That's the comp.
Yeah.
And what's amazing about what Laura's delivering is she's delivering a premium product for a value price. And that's the best of all.
I like that combo. I like it.
You like that?
Yeah, that's what I'm all about.
I'll ask
value
Laura. Let me
for
ask
price.
you to see if she likes it.
By the way, I'm also about value for value. Just if we could end on TJX, because I always like to point out.
And I'm going to.
TJX's market cap is well more than twice that of Target's. Stock's not going to do much today. It looks like it's going to open down to flat.
No, it looks like down 3%.
Well, we'll see.
But go ahead, because I'm
comparable store sales up 3%, up 6% for the first 9 months of the year. So far, I'm just looking at what they returned to shareholders here. $1 billion operating cash flow for the quarter. They also bought back 5 million shares and another 423 million in dividends. So about $1 billion returned to shareholders. Yeah, there's the market cap comparison. TJX doesn't talk, so we don't talk often about
they don't. That's what I was going to say. The last 4 quarters, they actually gave you what looked to be a pretty good goal. And they so far exceeded it that you just have to own the stock after the smoke clears. Like, if people think that this was a bad quarter, they must learn the history of how TJX reports, which is great quarter, real big beat, not as big a raise. Then next time, great quarter, really fantastic, not as big a raise. This is what they do. And if you take a look at the long term of the stock, you will see that their guidance has not meant as much as versus any other company I follow. The guidance is not the guidance.
Interesting. Guidance is not the guidance.
Guidance is not the guidance. Look at the long-term chart of TJX, if we can call that out. Now, that's David's face. I'd like to call up TJX's chart.
There it is.
Okay, so
the chart are very similar.
You can see now. See all those different gaps down, this crevasses.
Yes.
Those are the quarters where people said, "Oh my God, I'm so scared." Why don't you just go to the TJX next door with me? I got this belt, David. Look at this. This is a Brioni suit.
One of the few.
And this is a $12 belt with a Brioni
Can we get a
suit.
tight shot on that belt?
Yeah, let me just get this because this is what
please don't
TJX
take
does.
off your belt. Please don't.
Why? My pants won't fall.
Okay.
All right. Well, maybe we should get to Comcast.
Yes,
maybe we should get to Comcast.
Yeah, let's get to Comcast.
Okay,
Let's get to our parent company, of course.
But do you think the belt size?
It's beautiful.
And what do you think of the play, Mrs. Lincoln?
I like that as well.
That's all I need to know.
I like the shirt, tie. The suit is beautiful.
Thank you. New
Belt,
suit.
the watch. You got it all working.
I try. I try to deliver
The
everything.
cable model must still be working.
Well, I was on the Disney cruise.
The cable model is not working.
Oh, thank you.
To be fair. No, it's not working.
Then how come I have a Brioni?
Get rid of the Brioni. Burn it. This was something that has been previewed a few weeks ago on a conference call, of course, from Comcast. It has now been made official. The company is planning on spinning off most of its cable networks. Bravo stays with NBC Universal, which will continue to be the studio, the theme parks, Bravo, Peacock, and NBC, the broadcast network, including NBC News. What's going? There it is. Yes, we're in there. MSE, Sci-Fi, Golf, USA, and Oxygen. And these things take about a year. Filings, getting a lot of things together. What happens now? Well, my understanding is you obviously have to decide on a capital structure. Comcast has been saying consistently well capitalized. What does that mean? Probably no more than 1 times EBITDA in terms of leverage. So let's call it $2 billion in EBITDA for the entity a year. Maybe you see as much as $2 billion in debt. Maybe not. It's going to have a dividend, from what I understand. And speaking to people familiar with the situation, have been sort of studying this for some time. Mark Lazarus is going to immediately become the CEO. And Brian Roberts, while he will not be on the board, will continue to have a third voting control, the same way the Roberts family does for Comcast overall. The idea is to free this up to pursue its own future, to generate its own free cash flow that it can then use to try to grow. That is sort of the key contention here as to why it makes sense. What may be challenging, in addition to some of the dyssynergies, guys, when you think about splitting MSNBC from NBC News and any number of other areas, of course, that come along with a split of this type, what also is in question, I think, is what are you going to get from the distributors for this group of cable channels? Where's the leverage? If you no longer have access to the NBC broadcast network and retrans there, you know, can you get the cable distributors? Comcast obviously is the key one, and you probably can sign a nice long-term deal there with Charter and the like to step up and continue to pay. Free cash flow or cash flow EBITDA will keep going like it is. The question is, can you ameliorate it over time as a result of other initiatives that you can undertake, Jim, because you no longer have to worry about paying for the NBA. You no longer have to worry about funding the losses at Peacock and things of that nature.
Well, I wonder whether we have scale. I mean, again, I'm speaking about the spinoff. I mean, I think that you're right that where's the bargaining leverage? I think that you have to combine with someone, I would think.
You have to what?
Combine with someone else. You don't have you don't have the presence. Now, I'd like to think that absolutely you're right, David, that it's each tub on its own bottom. And if that's the case, then it's pretty exciting.
Right.
Pretty exciting for us.
Well, it could be, and I think that is certainly going to be the contention of Comcast, of NBC's management, that this gives it an opportunity to do that. Will there be multiple revision on what is left, on the main company? Unclear. We'll see. You've already seen it playing out in the market. It went up on the day that it was announced on the conference call as a real possibility. It only has taken them a few weeks to decide to move forward. Plenty of questions, of course. We all know how difficult this new world, it's not new anymore. Right. The declines have been far more than even had been anticipated, as I've said many times, by the most pessimistic of observers in terms of how many people are dropping the cord, as in cutting the cord, Carl. Right. That said, again, let's call it, Fox trades at 6 times EBITDA, AMC at 4.5. Maybe this thing trades at 5 times EBITDA, $2 billion, $10 billion market cap. You have a dividend. Maybe it's attractive to a certain extent to some investors, and then maybe there's an opportunity, as Jim says, to consolidate further.
Where we would be the consolidator,
where you would first have an opportunity to continue to cut costs. But really, if you really want to believe in the future, you've got to come up with other revenue streams that are significant over time.
Sort of what Kavanaugh meant when he talked about playing offense. A lot of the notes today pull no punches. Bernstein, we won't debate what an appropriate valuation would be, but what would you put on an asset in perpetual decline? And they point out, better late than never, but would have been better, more value accretive a few years ago when cable and media multiples were high.
Barclays doesn't pull punches. Subscale from a revenue, EBITDA, and cash flow perspective to deal with ongoing structural issues. These are the questions.
Did you read the benchmark piece?
I didn't. I don't want to read them all. They don't understand what we can accomplish here. They don't really know what we're capable of, Jim. They don't.
No.
What we can do with this brand alone. Obviously, a great deal of free cash flow, by the way, from this entity. So there is that. It will produce a lot of free cash flow.
Right.
At least initially.
Now, explain the free cash flow to me, David. How do we know that it will produce a lot of free cash flow?
Well, we can assume, based on at least what we're getting right now from the cable distributors, that will continue to be the case more or less. And margins are still quite high, and advertising as well is okay.
But you said at the very beginning that the negotiation is the power. I mean, how do we determine something when we've got a fractious group of people that we will be selling ourselves to?
That is a good question.
Who basically just say, you know what, we really don't. We love you guys. You're terrific.
Is it a must-need?
We need that oxygen, and turn off. We're not going to Toto. We're not going to turn off the oxygen. But I just question. Look, this is going to be I hope it's not a every network for itself situation. We need to be more indispensable than we are. So that's all I'm saying.
Well, the other point is that those with the broadest portfolios, namely Paramount and Warner, for example, have also the biggest issues with leverage.
Yes.
And Wells asks, do SpinCo shareholders want leverage?
Yeah.
Right. No, this is going to be well capitalized. I really believe it will not be heavily levered in any way, because to the extent that management is being serious in terms of saying that it's going to give it an opportunity to really try to grow, you need to be generating free cash flow in order to do it. You can't be just sitting there worrying about a huge leverage pod that you've got to pay interest on.
Do you think the free cash flow that, say, I mean, it's very personal, and I don't like saying this, but do you think the cash flow that we've generated has funded operations that have not been profitable?
Yes.
What are you, a blue state? We're talking about red states?
Of course we are. We're sending all our tax dollars over to them, and what are they doing with it?
Oh, what the hell? I'm trying to say something positive here.
Yeah, no.
Will you give me a break?
We're going to be able to control our own.
Look, the Jaguars have a really
We
good...
are going to be able to control our own
destiny. Have you looked at that schedule for the Giants? It's actually more favorable than you think.
And by the way, that Lazarus guy, I mean, he's amazing.
Well, he knows the schedule of the Giants.
He's incredible. I actually don't know him at all, really.
I don't either. I thought that you would always give me an introduction.
Yeah, no, I'm kidding. I'm just trying to get on his good side.
There he is. That's him.
I've been here 31 years. I mean, really, what are you going to do?
I thought it was the guy that comes on with Scott last week.
Mark Lazarus.
Mark Lazarus.
That's an interesting fella.
He's an interesting fella. By the way, on Paramount, I mean, Larry Ellison's going to be able to let them do whatever they want. He's got the pocketbook, so they can consolidate stuff.
David, he runs Oracle. He doesn't.
Yes, he does, but he will be the control of Paramount as well. So.
Well, what does that mean? I mean, do I have to brush up on my...
Do you have to suck up to him, too? Yeah. Just add him to your list.
You know, you say things that I just don't... I categorically disagree with.
That's a good response. Nice blowback. When we come back, we'll get a closer look at NVIDIA this morning, the world's most valuable company, going to report earnings after the close tonight. Important, and we'll talk about some of the expectations going in. We'll get to some calls on Dell, Chewy, Hood, talk some Disney with Jim after a break. Wall Street awaiting a big earnings report tonight. NVIDIA is due out with quarterly results after the close of trading. The watch is on to see what the chip giant will say about AI demand and what's ahead for its Blackwell GPUs. Jim, we had a long discussion yesterday about whether or not that's a dynamic for this quarter or next.
Yeah, I think that this is a very difficult product to make, Blackwell, and it's very difficult to coordinate it with what Michael Dell's doing. Michael Dell's big installer. We have this super micro problem, and obviously that's just, who knows, to be able to file maybe with BDO. And you've got HP Enterprises. They all have to work together with clients. You can't just say, listen, I'd like to order some of these things off the rack. Matter of fact, the rack has to be built. That said, all that keeps happening is that orders flow in. No one has said, like yesterday was a really positive meeting with Microsoft. Today's going to be with Rockwell Automation. No one has said, you know what, you guys haven't delivered this on time. We're switching to X. The fact is you can't switch, which is a very interesting moment for a company with a multi-billion-dollar product that you can't switch even though it's delayed. And I think that speaks to their the greatest scale I've seen of a tech company. And I'm not, if someone sells it on the idea that it's pushed back to the second quarter because the yields will be better, I think that someone doesn't understand the semiconductor business. It's very hard to make semis, and this is much, much harder to make semis. The only thing that I could see is if AMD, and my chairman also spoke of these, if AMD had a competitive product, then I think that you would be very worried. But I think AMD, even by its own admission, would say we don't have a product in that league. So therefore, if you sell it, I think you're selling it, and then you're going to be faced with what happened last time, which is people sold it. They sold it all the way down to 98 because they felt that somehow Jensen Huang had been finished his mission. David, this man's got a multi-year mission, and he would tell you that we're early innings. And frankly, I usually don't like that kind of analogy, but I think they're in early innings.
You do.
Yes,
I continue to believe that.
Yeah. Well, I've been right. So, well, I don't mean to be braggadocio.
Listen, we're going to spend an awful lot of time, though, continuing to question the spend that will take place next year by the hyperscalers. Yes. The enormity of which is almost hard to calculate. $300 billion and counting, perhaps. Much of it ending up buying the chips that they are offering, and whether or not it will actually return. There will be a significant return on that investment. I'm sure through 25 we'll talk about it. Towards the end of it, we'll have a better sense for it. It even comes to Microsoft and Copilot, which obviously Satya Nadella was talking with John Ford about yesterday. We're talking about in their meeting yesterday as well, and where there continue to be real questions about its use case in the enterprise right now.
Absolutely, and I think that's right. I think you have to say to yourself, let's be skeptical. At the same time, when you meet with Rockwell Automation and they're getting tremendous demand for companies that want to build factories using NVIDIA, when you meet with all these different world leaders or talk to them through Jensen, they all want to have their own AI because they don't want to be captive to ours. And then when you speak to Meta, Meta wants this so badly, and Amazon wants, Andy Jassy can't get enough of these, the CEO of it. Google's very hard to discern, but I understand that they can't get enough of them. So these are top.
And XAI can't get enough of
XAI probably bought most.
Yeah.
And being Musk. So you have a product that's like, we've never seen a product with this kind of demand ever.
I know that the old rule, one man's margin is another man's opportunity. That's been broken for now.
Yeah, well, John D. Rockefeller, when he had 100% of the oil market, Standard Oil, not bad.
No, good business.
Okay, Kramer's Mad Dash countdown to the opening bell. One more look here at the pre-market of a busy day for several industries. Slightly in the red now. Don't go away.
72 degrees. 74 and it feels warm. But it's cold outside, that's why. Woo! I love my apartment. All right, we got less than a minute. What are all these doing over here? Well, I guess I keep. Let me see here. I got plenty. Better have my platform up.
Let's get to a mad dash. A little more than a minute before the opening bell.
Yeah, David, you often accused
Morning,
me of being,
YouTubers.
mercurial,
Yes.
fractious,
Here we go.
capricious.
All those things.
But Tony Sacconeghi is a very good analyst at Bernstein. And he has a piece this morning, Apple, why it's still our best idea, or pitching 1 page, 20 slides. This is 1 page and 20 slides about why you should not sell the stock. And one of the things, the most salient thing, because we're numbers people, he's using $9 earnings per share in fiscal year 26 and fiscal year, September fiscal year. What I think is most interesting,
Your track record, Kramer.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles?
Nile back down again, 438. Nile stock falls after earnings. Nile knifing. Where am I? So PLTR down 93. Where's that piece of crap AMC back down again to support? AMC nears death cross as debt takes center stage. Entertainment CEO Adam Aron sells 25 million of the stock. They got a $4 price target on this. So that's caca. Then what's Intel at? I thought I just saw Intel here. Say this market's, I think, just listening to it. I'm listening to this chick this morning talking, you've heard her too, talking about tariffs. I could tell right off she was a big liberal. Or that might have been on Schwab. I have so much concern about these tariffs, it just beholds me. Now Zim's got earnings coming out. I'm really bullish on Zim into 2025. Mara's got resistance at 21.24. And we got coin up here up $16. So we've got a double top target. See if it breaks the double top or short it. Coin, double top, coin. Coin, double top. NVIDIA, Nvidia's knifing. So what, I got this on the hour. Let's see here. Okay, we could drop a little. Well, I'm gonna call that support. Okay. NVIDIA got earnings after hours. It's 22nd. The 150 strike. Oh hell, I got some partners over here. Got an alert. Let me see what it is here. Could. SPY going down. I really got to talk about the way I think about trading. Everybody has a different opinion. You just got some people that just can't get over the fact that they got to have a swing. They got to swing. They got to swing. Especially when you're at such high resistance levels. I'm very cautious when I'm in extreme greed. I'm not like the other traders that want to get in there and just forget about market conditions right now and the transmission between a new president and one that wants to start World War III. Right now I'm in the video calls just to see if this holds, if this spot holds. If not, I'm going to jump right back out and wait for a lower support. I thought this was kind of bullish right here, but we had a little pullback, so I don't know if this is a retest. NVIDIA. Tesla double bottom, high alert. Tesla double bottom. Oh, there we go. Dropped a little bit more here. I'm going to stay in this. 390 is only a $10 drop. I'll take $50 loss on this if it. I'll see if 350. Watch Tesla double bottom. Tesla double bottom. Pay attention to the news. What's going on? Oh, with my philosophy about stocks? Pay attention to the news because it's right. Is that what you're saying? Damn it. It's dropping more. Come on, baby. I hope my girlfriend's not watching me today. She asked me if I was a fan of her, and I said, no, friends. Can I see a picture of you? Could add one more. I'm going to add one more. As long as we hold above 350. There, get my phone. My life's been kind of busy here lately. I'm thinking about see if I can go ahead and grow a palm tree in Missouri. I used to have a cherry tree that I really, really loved. Come on. I've got 337.61 here trend line for something, for some reason, on Tesla. Darvis box support. That previous top. And we're definitely at the, what is that? That's a 61. I haven't seen this. A 51. I haven't used that one in a long time. 51 EMA. That's a, well, I'm going to add the 61 to this. I don't think it, well, I'll just leave it alone. Definitely like that spot. So we got a snake. A falling wedge, kinda. We just broke out of the snake. So we need report to consolidate. Let's give it time, unless it breaks to 9. Pay attention, Bobby. Jimmy's green in the video. Buy $5. He's green in the video. He's up $5. He's gonna make it 10. And we're gonna win. Walking in the winter wonderland. As we break out to the upside on Tesla. We just hit the 20 EMA. Yeah, someone said I was crazy in the room yesterday. I just wanted to make a point. Yes, I am. Ain't that right, Randy? Where is Randy? Crocs. Oh, let me look at Crocs. I want by the fire. When I had my art gallery, I'd had a Christmas in July special. And I gave away artwork. Of local artists. And then I had a Bob Ross painting I gave away. That Bob Ross gave to me. Trump. Trump. So coin pulled back off that double top. That would have been a good put. See how it dropped down to the 200? So we went from a double top. I mean, this is a trade idea. I'm sharing the trade idea with you. Hey, Jim. What? Man, what a great call off that double top on coin. I heard you last week talking about that could be a trade setup. I said, yes, double tops are resistance levels that usually have some kind of pullback or a retest. So it could be a great exit idea for you, sir. And then how it bounced back to the 200. I mean, it was perfect. How do you define perfect? Okay. Oh, I never did get my phone. What's it? Amazon. AMZN. Amazon pulling back to yesterday's first resistance on Amazon. Now on the 20-day, So Wall Street looks at Putin as just a punk. They don't believe a word he says. He just, one of them guys that kind of use threats. I'm going to kick your ass one of these days. But he never did. That's the way they were talking yesterday with the threat of being nuked. So they kind of wrote it off. That's why the market, and we had such already a big sell-off. But that's what this one analyst was saying. Like, to me, it scares me to freaking death. But spy calls. Let me look. Snake breakout, pullback, double bottom, lower low. So let's wait. If it does, it goes to the VWAP. Are you on voice? Yep. If it breaks the double top, I think it's just going to retest. I wonder what SPY. Let me look at the SPX. Man, that's a good spot on the SPX. It's a real good spot. It's almost the same kind of thing as a SPY. Ukraine fires UK Storm Shadow missiles into Russia. Officials say. Yesterday was the 1,000th day anniversary of the war. That Biden said go ahead and do. Okay, now we're retesting. Right now it's going to tell us if we're bullish or bearish here. This will be the decisive moment of the day. If you can count to 4, you can make a little bit more. If you can count to 3, you can trade with me. I'm still in the video at $4. I want to swing this overnight. I'll risk $400 on this trade. I am swinging it overnight. November the 21st. SPY. Jim, would you please spit that out? These options are a little high on the SPY for the 21st. Oh, I don't need the 21st. Yeah, I do. Today's the 20th. It's the 592 strike. So I'm watching the 592 strike for the 21st, and then I'm going to put a put up here. Might do a straddle. And the put would be man, 580 is just too cheap. 66 cents. $5.80. $587.10 is my support. Let's see where I got that from. Where's the? Thought I had another one over here. Fuck. I know I made another one. It's 587.10 makes perfect sense. 587.10. SPY 587.10. 10-4. No, not yet. 592 call. There's $5, $7. I didn't see it hit 111. I'd have jumped on that. Okay. So it's a wedge. Got a wedge breakout out of a snake. I'm going to get ready to take his trade. There it is. 122. $122 with a tight stop. Keep a close eye on it. What time? 9:03. Okay. Add 5 more here if it's now. $114. I got 10 contracts. So I got 122 and 114 on the SPY call here. Now it's got a worker. We're going to get out of it. Where's my... Still even on NVIDIA. Uh-oh. I don't think it's going. Here it is. 587.10. Why didn't I wait? I don't know. So I'm down $80. 100. Shit. Market is not too happy. Okay. Well, shit. Ukraine fires UK Storm Shadow missiles into Russia. This is going to be a tough decision right here. Gordon Johnson slams Federal Reserve for asset owner-centric policy. Says Jerome Powell needs to focus on real economy. That's right. I don't like what he's doing. One, it's gone on way too long. I can't wait for Trump to get in there so this market can really be positive for real reasons. I'm gonna have to get out of this trade if this thing doesn't hold here. I'm afraid to get out because it'll bounce on me. Well, it could drop pretty good. We could see. We got a big megaphone here. I don't like that. Got two of them. So somewhere under 581, around 581, that's a $4 drop. And here we've got a support line right there. Okay, here's a SPY support. Inverse head and shoulders. $0.88. Now, if this don't work, I got to get right out. So I got 103 average. Tesla hit my first support. Blanket. My average is 103. I got 20 contracts at 592. If this thing doesn't hold, I got to get out because I ain't taking it any farther down from here. Got AMD pulled back, NVIDIA pulled back, Apple pulled back, all at the bottom right now, and Meta. Come on, damn it. Blick it. Huh. Walmart. Okay. I don't want to stop out of the stock. Please. Not a good way to start the day. Right now I'm down 200. Yeah, ain't gonna work. Well, I'm gonna know my faith here any second. Turn it. Hess CEO urges Trump administration to fill up the strategic petroleum reserve at a more accelerated rate. Remember, Biden was selling our reserve to China and Russia after Russia invaded Ukraine. Made all kinds of sense to me. Zim jumps on special dividend. Zim's going to have a strong third quarter, it said. Had a strong third quarter. One of them kind of days for me, I guess. Look at the SPX here. Oh God, SPX double bottom. SPX double bottom. Let's see if we get something here to the positive now. Triple bottom on SPX off the 200 on the 1 hour time frame. SPX, fired up on it here. SPX, triple bottom. On the SPX, let me see here. What'd you get? The 5890s or the 5900? 5900 has 12,000 contracts, but that's just so close to not. I just don't like where it is right now. You get 3 of them at 310. Let me see here. Yeah, 310. And that means our SPY's going to turn around too, I hope. And we're at 390. Don't mess around with Jim. Do. Mess around with Jim. And I'm moving up. I need $1.03 for my SPY calls. You know what I think of Ben Affleck? I think he's a punk. I'd challenge him to a fight. What was I just thinking about? We're back to $4 on my Nvidia. Oh, the SPX, I mean. What the fuck? Jim. I got 3 trades going on. I'm way over my head. Yeah. Tesla. Way over your head. Way over your head. Way over your head. Mm. I'm at $4. I could sell these. I got 3 of them at $3.10. But let's just wait. More patience. We got the 21, the 9 crossing the 21. We're getting ready to squeeze on the TTM. Ready, set, go is ready. Yeah, I'm gonna go make me a burrito in here in a second. I'll get my phone, send that picture to her. Oh. Jimmy's in the red. Da 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 da. We got an inverse head and shoulders. Tesla, inverse head and shoulders on SPX. What's GME? GME held up today. GME. I feel I'm going to be green today. I'm just going to be patient. My SPY's at 90 cents. My SPX at 350, 360. I'm up 150. Just now took off my shoes. Blink it. Patience. Don't give up yet. We're at 95 on my spies. Come on, break out. Now we're at a resistance here, so do I sell them at a small loss or do I look for the VWAP? We're even. We're even. Make a business decision. I'll be right back. $102. Let me look at my. I don't really want to leave because I got so many trades going on. I've never been in this kind of position. 460, 470 on the SPX. What do you think about it, S? You still in it? What's S stand for? $480. $5. $5.20. Oh yeah. Tesla reverse. Mannequin. What do we got to break to 63 EMA on the 1 minute for Tesla? You're welcome, mannequin. Just got to break this spy out. It's the only thing I'm waiting for now. I'm still in it. But I had to average down. You probably didn't have to do it. Do it. Blake. It's such a pretty world today.
Well, operating profit is expected to drop about
We have sort of a flat hierarchy, so.
7.4.
Well, isn't the boss?
Well, you can say I'm a boss.
It's
Such a pretty world today. Look at the sunshine.
And every day is the same since I met you. It's
Such a pretty world today.
knowing that
You're mine.
and happiness is being close to you. And though the rain may fall, our skies will all be blue. If I look close enough, the sun will come shining through. It's
Such a pretty world today. Look at the sunshine.
today and every day since I met you.
We're at 590. And I'm at 110. On the spy.
It's such
a pretty world today.
Look at the sunshine.
Look at the sunshine.
And every day's the same since I met you. It's
Such a pretty world today.
knowing that
You're mine.
and happiness is being close to you. And though the rain may fall, my skies will all be blue. If I look close enough, the sun will come shining through. It's such a pretty
World today.
Look at the sunshine.
Look at the sunshine.
Today and every day since I
Let it
met you.
move you. beautiful. She's just plumb beautiful. Not a bad day today. It got better. It got a lot better. We hit the 63, so that's an exit idea. What could have been a good F averaged out to be about a C, a B plus. Yeah, B plus. Do you agree, Magnificent? Oh shit, look at that. Look at what Alex did. Well, Alex is on mic. Remember, you gotta let me know. You got your mic on, you know it, you ding dong.
Oh, Jim.
You told me what?
I told you. Can you hear me?
Yeah, I can hear you. Nobody tells me nothing.
I literally said in the message, you were like, "Ooh, should I get the SPX?" And I wrote 5,900.
You did?
I did. Look, right before it says, all right, you know where you said SPX calls scalping?
Yep.
And you entered at 3.1. Above that, I wrote 5,900.
Whoa.
That was when I got it. I bought the 5,900s at 3.
Are
They
you?
were at $2.80 when I was looking at them.
Oh hell, I didn't see him there. You seen it before I did? You saw it before I did then, because I saw it at 3.
I got it at 3, and then I got out at 5.5. What about you?
I got out at, I've got one, but I've got out at 5 and 5.90.
Yeah, it hit $6. Right when I sold it, it ripped up to like 5.8, 5.9, 6.10 or something. And I was like, you gotta be kidding. But I sold all of them, so I'm up today. Waiting for your next call.
Yeah, that's right. I got, NVIDIA is the only one I'm holding right now.
You got out of the SPY ones too?
Yep.
What did Magnificent give you for those SPYs, man? Your heart must have been racing.
It was raising when it was down. But after I saw the SPX, I said, we're going back up.
Yeah. But once I saw that double bottom on the SPX,
Yeah.
I was like, yeah, it's early in the morning, and usually if there's like a big sell-off in the morning, there's gonna be some,
Yeah.
there has to be some activity to bring it back up because all those sell orders need to be filled up there.
God.
And it just makes sense. Once I saw it at the bottom, I was like, yeah, this is where we bounce up.
I'm up $30 on NVIDIA.
Nice.
35. Only got one contract. I'm gonna swing it.
The Roaring Shitty. I'm curious as to what the Roaring Shitty jumps on. Because he's like, the market is probably the most delusional thing I've ever laid my eyes on.
It's definitely different than what it was 5-10 years ago. It's so easy to, if you sit here and watch these guys for years, you can see how rigged it is. It's all about it's all psychological. It has nothing to do with earnings.
Oh yeah, no, it's all psychological. It's all psychological. If you are willing to, get past the fear of losing a lot of money, I feel like you can make a lot of money, right?
Yep.
There's a guy I follow. His name is Popori. I forgot the guy's name. I just forgot. He's a grandmaster in chess. You know who Carl Magnus is, or Carlson Magnus?
No.
Sorry, Magnus Carlson. That's his name. Well, there's another grandmaster in chess, and in one of the interviews, they asked him, "Hey, have you made more money playing chess, winning all these tournaments, or have you made more money trading?" And he's like, "I've made 100 times more money trading than I have in chess." And when they asked him, they were like, "Really? How? You know, like, what do you do? What do you use?" And you know what he says? He says it's all psychology.
Reverse psychology?
He says it's all psychology. It's all psych. It's all
Yeah.
psychology. It's all like, you know, I'm assuming that he's able to use like kind of like that same game mentality that he uses playing chess when he you know, trades stocks. You know what I mean? So
It's like
I'll share the link.
Yeah, to do that. It's like them. Their concerns all about this tariff deal. It's given them a reason to be more volatile in the market, and I don't think it's all hot air. All of a sudden, they're worried about tariffs. I mean, we had that issue 4 years ago. It wasn't a problem then. Now all of a sudden it is. I think they're full of crap.
I think that you know, I'm not gonna say I'm not concerned about tariffs. I'm not concerned about you know, like if they're gonna raise taxes or lower taxes, or about like the quite literally, I'm not really worried about like what's going on in the U.S. So I think I'd probably be worried about, or at least I am worried about, is what's going on in Ukraine, because Biden is gonna get us in a World War III before Christmas, and it's gonna be, and then it's gonna be Donald Trump's mess to fix. You know what I mean?
Yeah, I do. Yeah, he should have kept his mouth shut until he got out of office.
That guy's an idiot.
Yeah.
Guy's an idiot. There were I don't know how many times you saw in the news, peace deals to be, discussed in Ukraine and Russia. And then, as all that stuff is going on in the news cycle, right? Biden comes out and is like, oh yeah, no, we just authorized long-range weapons in Ukraine.
Yeah, I'm seeing all the true colors out of all my friends. They're all musicians and they're all warmongers, and it's just weird that they're warmongers. I mean, I grew up with these guys. We were all against war, and all of a sudden, since Obama, they become warmongers, and I just don't get it. All of them. I've not got one friend that's against these wars, except people that I'd meet on virtual friends.
Yeah. No, I think it's just a way for them to shovel, money and funnel money and hide money.
That's what we used to complain about. It used to be like Dick Cheney is the war machine, and that's what we used to say. And now Dick Cheney he's a Democrat.
There you go. That right there just explains where their priorities lie.
Yep.
Absolutely not. So make money off the war.
Yeah, I guess we do too, don't we? I got me an alert here. Let's see. I'm still in NVIDIA we're at 440. SPX says got alert say it's down. So.
What do you make of the NVIDIA sell-off?
I've heard a lot of good things, but then I heard that guy talking yesterday, thinking like I think that there's competition out there and they're not building the chips and then we had the Blackwell chip heat up, so they've got to maneuver around that. I'm gonna swing one contract, but it's a 50-50 risk, my opinion.
I think they're gonna meet expectations, and it's gonna fall. I feel like whenever they meet like whenever they meet expectations, there's like a massive sell-off. I think that's pretty much what's gonna happen again.
Yep. That's why I only got one. Where's Randy at?
Yeah, where's Randy at? All right, Jim. Talk to you soon. I just got to work.
Okay. Thank you.
Later. Yeah, no.
8 minutes to lunch hour.
$100,000 is not that far away. I don't know. What are you hearing and what do you
George.
want when it comes to Bitcoin, George?
Well, obviously the momentum in Bitcoin is pretty phenomenal as of the breakout just a couple weeks back. I think there's clearly a lot of momentum in this particular coin. There have been a share shift. If you look at the gold markets, which have pulled back over the past few weeks or so, obviously
yeah,
Bitcoin
gold
picked up some of that
out of
share.
gold into
And it
Bitcoin.
represents, a technology stack that you have to consider as, a very innovative and next generation types of technologies. So, obviously this is an area where there's a lot of speculation, but there's a lot of investment flows into this particular area. And it's actually very unique that considering the rest of the market that it seems to be trading sort of all on its own. Obviously the other companies like Tesla seem to be, trading all on their own, irrespective of how the markets have been, especially in the past week or so. But nonetheless, you have to consider too the dollar. The dollar has also been rising alongside Bitcoin, which again is very unusual to say the least.
Yeah, thank you for that. Thank you both. Great to see you both. Caroline Woods, George Stillis. Thank you for the recap on what's going on here on Wall Street. The VIX has come off the earlier highs. The VIX had been up over 13%. Now it's up about 8%. And the market is up off the lows. So there you have it. That's the big picture. But most of the sectors, with the exception of energy, are to the downside. We have some big movers that we keep watching. We named Target, for example, down 20%. Williams-Sonoma up over 20%. Lemonade 15%. That is a real winner. And of course, we'll watch for NVIDIA and many others today after the bell and tomorrow morning. Thanks for being with me. I'm Nicole Petalides. And keep it here, Oliver Rennick, live from the Schwab Impact Conference next.
Join me, Oliver Rennick, alongside Schwab Network's options experts as we explore the second derivative. Gamma On is a brand new limited series to take your trading skills to the next level. Subscribe to Schwab Network's YouTube channel now.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Everything rebounded nicely. IWM's at the 200.
It's time to look forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out on next-gen investing.
Available anytime, anywhere, on any device for free.
That's not true.
Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
Spy.
Welcome to Schwab Network.
Daily live
Spy broke out.
content tailored to today's investors.
Broadcasting 24/7 from our studios in Chicago.
And from the heart of Wall Street at the New York Stock Exchange.
Up-to-the-minute market insights.
Example trades and stock-specific analysis.
I have a few spies left.
Minds in the business.
I got more and sold them.
No noise.
Analysis ahead of the biggest events for the economy.
From bell to bell and beyond.
Watch live
and on demand.
24/7, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services.
Available anytime, anywhere,
on any device for free.
Schwab Network, empowering every investor and trader
every market day.
Good morning, I'm Oliver Rennick, live from San Francisco. We are 90 minutes into the trading day. This is Trading 360. Yes, the schedules are a little different this week. The next 48 hours, I'm based here in San Francisco for Schwab's Impact Conference. We just kicked off, so we're sort of underway. We had a little breakfast, but EMTL is a little too early out here, so I'll be on Trading 360 today and tomorrow, market on close as usual. So thanks for tuning in. We got a lot of great people here. This is basically the best minds of the RIA business and Schwab's own best minds all week. Here's a look at markets right now. S&P 500 is about 0.5%, about 50 bips. Russell, a little bit lower. You got some bounce in the last half hour after kind of a weak start. Stocks we've been monitoring for a little bit of softness, some chop down, not in a terrible form, but we're aware of potential volatility. Bonds selling off in the middle of some stocks selling. Economic data has been pretty light this week. Nothing really moving the needle for bonds too much, so you can't really blame any softness on the Treasury market right now. Tomorrow we'll be looking for jobless claims. We'll be tuned in to a little bit of Fed speak. We are going to get some throughout the next 48 hours. So if anybody cares about a 20-year bond auction, there's that, but I don't think many people do. Bitcoin hasn't gotten the message about risk appetite slowing in stocks over the past week. It's still jamming. BTC at 95.5. MicroStrategy is going ballistic again. It's at 495. 15% again for MicroStrategy. It's mania. We're going to be talking some blockchain and crypto exposure in the Big Three with Kenny Polcari, who's coming on with me today. I'm excited to chat with him in person as we get through some of the stock trades, including defense trades. Everybody here also, of course, monitoring the appointments from Trump 2.0 that are coming in. Right now, though, let's check in on some earnings. I got Jenny Horn in Chicago looking at TJ Maxx, TJX, of course, a few other names in that brand, Jenny. Reliable pretty much all the time for TJX. This morning, down about 1%, though. What's going on?
You know, I have to say this feels pretty relatively fine if you look at the chart of Target today. So I'm just, with a grain of salt, take this, but I think that we had to see basically results that was nothing short of perfection to continue to raise the needle higher. I mean, this is a name that's outperformed. I mean, every quarter it's like, will we continue to see him move up to the upside? And it seemingly has. So I feel like this might be the one exception. But again, we have a high valuation now for a name that's outperformed the S&P 500 and the consumer discretionary sector for the entirety of this year. Still today hanging on to a near 26% gain in 2024. So what this trade didn't like, I think, was pretty easy to identify here. We did see that they overall expect that their off-price TJ Maxx and Marshalls chains will continue to see some degree of slowdown. Those sales also did miss expectations. Comparable sales at Marmaxx rose 2% for the quarter. That was, again, below the estimate of around 3.6%. But combined with, again, the strong year-to-date share gain, we've seen now higher earnings outlook for the full year, which was huge. I mean, they did say they now see earnings ranging from around $4.15 a share to $4.17, up from their prior range. And they continue to see comparable sales rising about 3% this year. That was actually slightly below some of the forecasts I saw. But they mentioned that right now they're still seeing this element of treasure hunt shopping.
Nancy Sinatra put out a lot of music.
Not only those that are seeking a discount, but also they're bringing in more and more of consumers that typically weren't shopping at TJX, which I think seems huge. They did also say that they're expecting
Margaret wants NVIDIA to rock.
Another holiday season for, I mean, like the next to be reported quarter. And after following a year of pretty solid growth, they're increasing their sales forecast. So winning over these value-seeking consumers, I think, is huge. The only division, though, that actually was able to outperform last year's results was TJX International, which includes Europe and Australia. And they did announce that they will be planning to enter Spain with their TJ Maxx banner in early 2026. So the expansion story, I think, here is huge, especially when you see all of the various company-specific missteps that, like, Target laid out for us this morning. I think you're seeing a company that's strongly executing, but just seeing some degree of more
TJ Maxx. Oh, Stephanie.
Okay, all right, good stuff. Thank you, Jenny. After a really solid year for TJ and brands, sitting close to highs, a little bit chop post earnings, but a good biz still crushing it. Another reminder to the consumers been rocking. Same story when we look at Walmart from yesterday, up a third again today. Target going to be in the mix as well, so getting killed, but that's been kind of a Target story. It seems like everything else about the consumer right now is solid. Thanks, Jenny. All right, let's talk about what we're going to be learning here over the next couple days. Let's talk about the market. Kicking things off with me at the Schwab Impact Conference is Omar Aguilar, CEO and CIO of Schwab Asset Management. Omar, great to see you.
Good to see you, Oliver.
Good morning.
Good morning.
All right, we are now in a really interesting spot for the next couple months. The election obviously passed us. I feel like when I'm greeting people saying good morning, people just go immediately to kind of the political headlines. So does that make the job harder at this point for finance professionals or what?
Well, I think, there's two sides of the story. On the one hand, people are happy that the election is passed.
Yeah.
I think the uncertainty around what the outcome might be and, everything surrounding what it could have been, has actually gone. So that uncertainty has settled the market, has settled investors in a way that now what comes out
could have been a mess.
It could have been a mess. It could have been
Now
a
she
mess.
just
It
said
could have
they.
been a disaster. In certain way, the results ended up being a very clear winner with a very clear sweep for Congress.
I don't
which
get it.
obviously creates the next set
She
of
just-
questions, which is what you're referring to, which is what comes next.
Yeah.
And I think outside of the political discussion about what may happen with the different cabinet members, what may happen with different appointments, a little bit of what it comes is like what is the impact to the economy. What is the impact to the markets, and what may be the impact, decisions that the central bank may have to make in the next, few months.
How many of those appointments do you think we should really care about as investors? Is it basically like we're waiting for like Treasury Secretary to, what are kind of the rankings of political events, that kind of stepstone to get the new admin in that really ultimately matter? I think you mentioned one too, which is the Powell stuff, which kind of seems like maybe we buried that under the rug after the last couple of weeks.
Yeah, well, Treasury Secretary for sure. I mean, that obviously determines a lot of, the general policies might be economic-wise, and in a certain way that actually determines that. I think, the next, set will be, what is the SEC chair?
Okay.
And I think that's a big chunk because a lot of what you have seen, already priced into the market is the anticipation of potential deregulation.
Mm-hmm.
And when that comes deregulation, obviously the person that is at the chair of the SEC will obviously play a big role within what will be the policies and the regulation that will happen going forward.
It seems like they're leaning a crypto route too, is the early rumors.
Well, that is, you can see in the price of the Bitcoin, you see in the price of everything related to crypto, that a lot of the anticipation is that deregulation will basically pave the path for potential more, cryptocurrencies and more things going forward. Again, that's all in anticipation. You normally don't necessarily see that until you start seeing that down the road, and I think a lot of that will be what is in play today.
In your career, has there been a period like this where there's so much market-driven speculation about an incoming administration? I mean, we still got 2 months. It's amazing the way it has consumed kind of all of the dialogue.
I'll tell you why, because it's.
When you stretch it back, is there a period that it's been this heightened?
Absolutely. I mean, not necessarily for the same, type of topics, but, back in the, late 80s.
460 for
90s,
NVIDIA.
A lot of discussions related to what, the oil producing will be and what would be the relationship with oil and what would be, different types of policies that may necessarily have to do with trades. Back, when the original NAFTA was created, there was a significant amount of uncertainty around what the implications might be for commerce and what the implications would be for manufacturing. So it's a big part of what these things, and there are certain things. Usually areas where you have more consistency in the policies. That are more predictable tends to be better for the market. But in this particular case, we have seen areas where we don't know what's going to happen with AI. We don't know what's going to happen with tariffs. We don't know what is going to happen with crypto. We don't know what is going to happen with general, a statement about, fiscal policy. All those things that are still up in the air, have implications for economy and implications for the market.
To your point, when we talk about things up in the air and uncertainty, a lot of times people will immediately go, that's negative for markets, that's uncertainty, that's what they don't like. But then we look, and apart from just a little dip, in the last 5 days, we got VIX still below average. Does that make sense? Are these events, while uncertain, is the view that the market's kind of given this team a mandate to just go, so it's not necessarily a negative event for markets?
Well, I think a lot of the analysis, which includes our analysis, it also includes that everything that is still up in the air, it still is a positive support for the markets. In other words, nothing that we have heard. Obviously, yes, increases uncertainty, but at the same time, if you think about fiscal stimulus should be good for the economy, it should be actually good over there. The situation about tariffs, while it does have the potential for increased inflation, usually when you have tariffs, they tend to be a one-time event. And once that happens, they tend to be an adjustment afterwards that tends to be more related to what companies do and how they potentially pass those to consumers. And usually, once it happens once, then the market adjusts and then moves on. So again, it's not necessarily a big positive because I have inflation implications, but it also is not necessarily something that will drive GDP, completely down.
Yeah.
So when you look at everything we just described, a lot of these things tend to be supportive of a potential, growth in the economy and potentially positive for the market. And you can actually see that in the 10-year yields. 10-year yields are moving up because the potential is strengthening the economy and the potential for inflation expectations, which in my mind, that's the biggest question mark, is that, we were already on a path for lower interest rates, and then, now we're in this sort of limbo area where we don't know how fast and we don't know when is going to be the terminal rate because inflation may come back.
I think it's a great answer, particularly in why vol doesn't have to be high, even though the level of political uncertainty still may be high, because a lot of these outcomes range from either like neutral to positive, with the exception possibly of the inflation-linked tariff stuff. But the SEC is also a good example. It's like, all right, how much deregulation will there be? Markets generally don't get fearful about too much. Granted, a crypto person, okay, fine. We get kind of into a more extreme, but all in that spectrum generally of positive for markets. I think a great answer with bonds too, to that point, because I do want to talk about some behavioral things, because we're here with RIAs and they want to make sure to try to minimize their errors. But the last point, because I think you bring up a good one, is what happened in bonds to kind of confirm all this being a general positive. Yields going up, the bear steeper kind of slowed off the last week. To your point about inflation, what if the Fed can't go in December? Are we okay with that?
Well, the structure is that, and we've seen already with some of the retail earnings that, for the most part, I think you were describing earlier, the consumer is in pretty good place. The consumer seems to be still fairly optimistic about, how things are. And, even though everybody thought the consumer was going to have a difficult time going into the second part of the year, they continue to maintain a solid spending. And a lot of that, is reflected in, how the GDP numbers continue to be supported by consumers. I think the biggest challenge that we face right now is that with that, the road towards that 2% inflation target that the Fed has had is not necessarily being, as fast as everybody wanted to see. Now, I think with everything that we just talked about, I think the potential of a pickup or a slower pace towards that 2% is basically what the Fed and every investor is looking at. Is like, well, if we're not going to go to that 2%, does that mean that the Fed will have to reduce their pace for lowering rates? And therefore, that may actually put a little bit of a headwind for everything else that goes in the bull market.
But to your point, though, it's still a good problem to have, right?
It is still a good problem to have.
Doesn't go crazy again. It's still a good problem to have. All right, as far as mistakes people make from a behavioral perspective, you spend a lot of time thinking about this, and I like this angle that you bring on it, because we talk a lot about markets, right? But at the end of the day, human error is oftentimes a determining factor whether or not an advisor is doing their job, if investors doing what they should be. What type of behavioral kind of risks do you think people should be particularly attuned to right now?
Well, because of everything we just described about, uncertainty, because everything that we discuss every day, it's questions about what is happening, the most recent period of time. The number one behavioral bias that we have observed, this is for the last, at least 2 years, and it's very, prevalent right now, is what is called recency bias. And what that means is you basically look at the most recent information and try to extrapolate into the future. And what that means is like people think, well, there may be a better path for, crypto. Then we're going to load, and you can see the supply demand on areas like Bitcoin or cryptocurrencies. You're going towards, this is going to be a bull market going forward. Again, that's based on information that there's nothing solid fundamentally that will say that, but then people tend to extrapolate into the future. The same thing, goes with, whether it's inflation, whether it's bond yields, where everything else is, using the most recent information to extrapolate the future is a very typical thing that tends to happen. So a lot of what we do is to encourage clients to just look at the long term and look at what their policies are, look at what they want to achieve, and then try to have a very systematic process for rebalancing. So in many cases, the majority of people are probably very much in a duration flexibility on the bond market. So what that means is that, people expected the yield curve to be a little steeper, and therefore they say, well, we're going to extend duration because, we think that the low end is going to come down in yield, then we can extend maturity. Well, that's not the case anymore. That's not happening. So what that means is like, go back to what your original original duration path was and rebalance accordingly, you may be already there. But in many cases, if you were extending duration just 6 months ago, maybe it's a good time
Not
to
bounced
slow
up.
down and be a bit more neutral to your own path.
So be aware that when there are some big pieces falling into place policy-wise, you kind of got to be ready to adjust.
Exactly.
You got to be ready to adjust. Can't get locked into.
Dadgum, look at that. The Miss Nile.
Omar, great stuff.
Good to see you.
I called it.
Great way to kick off the show here. Appreciate your time.
Thank you.
Thank you very much. Always a pleasure. Omar Aguilar, CEO and CIO at Schwab Asset Management. All right, we're warmed up. We're here to.
I mean, I called Nile down here at the double bottom down here. Boom. Double top. 50 cents. Ding-a-ding-a-ding-ding-ding. I'm gonna go get another burrito. Ah, them things are good. I'm gonna cook more of them. Doo-doo.
He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Welcome back to Trading 360. I'm Oliver Rennick in for Nicole Petalini's here live in San Francisco at the Schwab Impact Conference. Markets overall.
We got snake breakout pullback
still in crypto.
on SPX.
That stocks maybe sending the last 5 days slowing down a little bit. Bitcoin's jamming. MicroStrategy's up another 15%. Core Scientific is where we begin our big three with Kane Polcari joining me here on site in San Francisco. Senior market strategist at Slate, Stone Wealth. And of course, we're all Rick Ducat. He's in Chicago. Kenny, great to see you.
Video at 420.
What an exciting event out here.
Yeah, we're jamming. We're getting warmed up. You know, people have been kind of talking politics. The first hellos and hands I've shook. I'm surprised more people aren't talking about the crypto stuff.
Well, I think they're going to start talking about the crypto stuff because it's not getting any, like to your point, it's not slowing down at all. It continues to heat up.
Yeah.
Bitcoin, I think, is trading at almost 90, 94 and a half, right?
Yeah,
94,
yeah, we're pushing 95. And
Yeah,
it's not
almost
kind of cooled
95.
off the last 5 days, too. So is that just because crypto is looking for a new regulator, SEC, or what?
No, I think it's a bunch of things. I think it's had this massive move, right? We've had this dramatic move ever since the election. But I also think now there's talk around who that's going to be, right? Who that SEC person going to be. And we do agree, I think, that, you know, Trump and his administration is going to be about less regulation across a range of industries, but crypto as well. So crypto's going to benefit if that's what the market's telling us. That's what investors are telling us. So anything around crypto is getting very exciting.
How far does the talk and the speculation about the SEC take crypto in a world where blockchain and digital assets have got to compete with AI this time, which has been rocking nonstop?
Yeah, and I think AI will continue to be the dominant narrative out of this conversation. But look, we get rid of Gensel, we get somebody in that's more amenable to crypto and regulation and kind of bringing it full circle. Then I think you're going to see crypto continue to move higher. But I still think the core of it is always going to be about AI.
Okay, let's talk then core. Core Scientific, one of the charts we're going to be looking at, one of the stocks we're talking about, which does have some NVIDIA connections, but it's also got a little crypto connection.
100%, right? It's about infrastructure, it's about data mining, but it's also about building out the new centers, right? Like Elon Musk, he's building out his own data center. He's not relying on Google or Amazon or Microsoft and their cloud services. And I think that's going to be the next part of this conversation. This stock has done incredibly well. It's up 300% from when it came in January, right? $2 or $8. I think it came at 8, traded down to 2 and 4 for a while. It was just kind of chugging along.
Yeah, this was a dollar stock at the start of the year.
Yeah. So suddenly it's just rocketed higher, all on the back of this AI and this infrastructure play about outfitting companies with their own data centers versus relying. So I think it's a very, very exciting story. The stock has moved. It's sexy. It's volatile. So you got to make sure that once you get in it, you're in it. You understand that.
Okay.
But I think the move is higher.
All right, Rick. Let's look at the chart here. Firstly, obviously your sample size is a little bit limited because it started trading at the start of this year. How do you then begin the analysis kind of with that in mind?
Well, we got plenty to work with here. And, just for perspective here, if we start back all the way over here, we're up like, 5.5-fold from that point here. So a really big increase. And, we had the big jump right here. This is where things really took off, kind of petered out sideways a little bit. But after we hit this earnings event, pretty straightforward chart, really. It's pretty much just an upward channel here. We found support repeatedly at our 63-day EMAs in orange, and more often at our yellow 21-day EMA. It's been a pretty good place to look for some support recently here. Certainly not saying it's going to happen every time, but this is just kind of the way people use moving averages. Support during uptrends, resistance during downtrends here. Now we are finding ourselves, we made our way above the old highs near about 1525, bottomed out here near 1544, now coming close to move those intraday highs near 1803, and we're just a little bit shy of our best close here, and we're still within the boundaries of our channel here. RSI trending upward, backed off out of the overbought area, but still bullish here. Now, if we zoom in, look at some support and resistance on a closer level here, we can see that this area right here between like 17 and 18, there's a lot going on there in terms of resistance, our channel boundary. You could have drawn that other blue trend line going across the earlier highs here. It's subjective. It depends on your point of view. I threw it in there just because it could be kind of a resistance zone. So between like 18 to 19, resistance, support down here between 1425 and 1540 or so.
All right, so basically you hope that big, nice gap around the earnings holds, which is pretty nice to see it actually move on earnings too.
Right, but listen, a lot of this is going to be dependent on what happens tonight with NVIDIA, right? Because this is also, it's connected to NVIDIA. They house all these NVIDIA chips, and so if NVIDIA comes out and surprises to the upside, I think this just gets another boost higher.
All right, how big do you think NVIDIA is generally for the market?
NVIDIA is $3.6 trillion, right? It is actually, I think at some points it's actually even more important than what the J.J. Powell has to say about the economy, right? Just because it's a crowded trade, everybody's in it, it's top of the narrative in terms of AI. So I think NVIDIA clearly can make an impact. Now, do I expect NVIDIA to disappoint today? I do not. Even though that negative story came out, earlier in the week.
The racks.
Yeah, about the racks. I think that's a temporary thing. I don't think that's necessarily a game changer. And I don't think Jensen Huang is going to come out tonight and say anything that's going to be disappointing. So listen, we own it. I like it. I own it, and it's a core part of our portfolio.
Cool. Okay. All right. Core Scientific, the connection to that. Watching around NVIDIA, watching video tonight. Obviously, top of the list. Super Micro has been just like a total disaster zone. Let's go there. Finally got a little bit of a bounce the last 2 days though.
Right. Listen, it's not about 80%, right? It was traded at 120, traded all the way down to $20. So it's not about 80% on the back of all that kind of negative story. And then when Ernst walked out on them and kind of gave the sense that there's something wrong in the books and someone's cooking the books and NASDAQ compliance, all that. Then yesterday they make this announcement about BDO stepping in to become the auditor. Well, here's the way I look at it. If BDO's not going in there blind. BDO had to do a little bit of work to kind of look around and see, well, why did Ernst leave? And is there a real reason to be concerned? Because BDO doesn't necessarily want to be associated with it if there's, in fact, somebody cooking the books.
That's a validation that it's not on SMCI?
That's right. I took that as validation that, you know, maybe there's some work to be done, but do I think there's anything untoward? I don't think so. But look, it's down so much. If you get nothing else, you're going to get a bounce out of it.
What's your confidence level on that?
Tesla double bottom again.
So, you know, I'm going to say my confidence level is 80%. I just don't think there is. Now, look, it is down 80%. So,
Exactly.
you know, maybe I'm wrong.
I guess the odds make sense.
But it's traded only down to 20. It got that bounce yesterday. Again, this will also be dependent on kind of what NVIDIA says tonight.
Okay, well, here's the thing. NVIDIA's been sitting at high, Supermicro's getting get killed. I mean, if there's one thing that's stock specific, I would think is this one.
Correct.
Here's a question. What do you want to see from the auditor? Like, what do you think will be the next kind of, we can kind of breathe a sigh of relief and say, okay.
Well, I want the auditor to come out and say, you know, the book, there's nothing untoward on the books. Nobody's stealing, nobody's embezzling, none of that stuff. That's what I think the auditor needs to say. And I think, you know, BDO did not go in there blind. I don't think they went in there with their eyes shut. I think they understand that that they might need to clean up some things here and there. But again, I don't think it's the negative story that the market thought it was.
Hey, if it's not, then it's got a lot of potential.
Huge potential.
Richard, let's look at the technicals, sir. What do you read on the last week, this bounce here that's getting us closer back to $27 this morning, but kind of got hit again?
The last week has been interesting, but I'm taking a look at the past 2 years on this chart here because there's some really important points to make. All the way back
You what?
17 to 23, you can see we had kind of this gap area, our light green and dark green lines here. That's where the gap began, and then where the post-gap price action bottomed out several times. Guess what happened recently? Look where we bottomed out and look where we struggled.
What time frame are you using?
Levels from so long ago in the past, and we had a 400% rally and then an 80% decline in between. We still
Come on.
the gap. That's why
Done.
we look for these gaps here. So just to keep it quick, support and resistance here.
Weekly,
Volume profile,
maybe.
point of control right
10-year
now,
weekly.
We're about 28 or so. This is a key point. Bottom heavy volume profile after a significant decline suggests that we could be near kind of a bottom in this name. It seems like people are buying and taking some bullish positions here. Perhaps we could see RSI was oversold, but we managed to fight our way back out of that.
10-year daily.
We kind of have some consistent floors and ceilings here on the RSI, 22 and 58. The area to watch really is up here between our red and pink lines, 38.40 to 49. That's the range we were in recently. If we can cross above our near-term 21-day EMA, our yellow line here, that's the next mark to beat. That's the area to watch.
Kenny, if it does start to move, how do you know when to get out for a chart that's come down so far?
Well, listen, for me, this is, I'm not yet in the point where this is like a long-term name for you. This is much more of a trading name, right?
Okay.
So I think you just have to, it's your own guess on how much you got invested, how much you returned on it. You know, are you up 10%? You're gonna pull the trigger on it. You're gonna try to let it run 20%. That's really kind of an individual assessment. But for me as a trader, you know, if I put on my trading
To the
hat,
gap.
you know, anywhere above 15%, I'd start to take some profit.
Yep.
Maybe sell half of my position, let the rest run. See where it goes.
Hey, for 80%
See, 15% is big for a hedge funder, and they're making hundreds and thousands of percent in the past 2 years.
And a lot of that is also going to be dependent tonight.
I've never seen anything like it.
Because that's also going to be, it's also going to help either support or not. But look, the market's also weaker today broadly. So, you know, you're just kind of sitting here waiting to see what
Yeah, that's
happens.
a double top right
We'll
there.
get a little fresh dose of AI love from NVIDIA.
I think we're good.
Last one, Raytheon, going a different route here.
Right, aerospace and defense. And that's just on the idea that the world is in this global, a lot of global tension, right? Certainly starting from over the weekend with now Russia kind of lowering the ban for nuclear strike against Ukraine based on, you know, our U.S. missiles that Ukraine is using. So
What do you think about market's response to that? Like 50 bips and we bought the dip.
Yeah. So I was actually surprised that we bought the dip so quickly on that. And I actually don't think that's over. I think they bought the dip a little bit. I think they started to move that conversation again to NVIDIA and more than AI and try to get it off the geopolitical stuff. But I don't think the geopolitical stuff is over yet. And I think a name like Raytheon and some of the other names. Now, other people will argue that now that we get the Doge agency, right? Vivek Ramaswamy and Elon Musk kind of cutting 7 quarters.
Think that's why it's been down the last
Well,
couple
I
weeks?
think some of the defense names may come under some pressure.
Yeah.
As a result, Lockheed Martin certainly has gotten whacked.
Yeah.
But Raytheon is held in.
Was, decent. We're down about $10 from the high.
Right, but Raytheon is held in, and I think that Raytheon is my favorite name out of the group.
Got it. Nice. Rick, chart-wise, best looking chart. What do you think?
Pretty good, yeah, but election bounce has kind of dissipated now, and it's a chart that shows slowing momentum. Look at the way the charts patterns and trend lines have shifted here. These things, you kind of got to adjust them as you go. They're not really static here. It kind of depends on who's looking at them as well. So for starters, steeper blue trend line here gave way and transitioned into this kind of rising wedge type shape here. Look at our purple lines here. You can see going across these highs and the lows. The trend line going across the lows is much more shallow, and the trend line going across the highs is even more shallow, so slowing growth. Now we have more of a descending triangle kind of shape forming up here potentially. Horizontal support near 118, our green line, matches up with a significant volume node here. So that's the area to watch to the downside. If we were to break through some lows here and our best close that we had, our high close that we had right after the gap up, right around 113.50 or so, momentum continuing to deteriorate. RSI trending lower below the 50 midline. If you were looking for resistance, we've got our moving averages here, 63-day, 21-day, right around 121 or so. Then these old highs and lows right around here, 123.50. That would be another area to watch before those highs near 128.70.
All right, so we got to carve out a little bit more before potentially a breakout, but it does seem like pretty good chart. Basically sitting on support. Kenny, great stuff. Appreciate the stock pick.
Always a pleasure. Thanks for having me.
Absolutely. Nice little setup for us, too. Thinking about some hardware into NVIDIA tonight. When we come back, that's our subject. We're going to get a deep dive into Jensen's Giant and figure out what he might have up the sleeve and whether or not they're going to address that overheating of the server racks we saw earlier this week.
Okay, we got a huge pullback on
at 145.
What's going on here on SPX. Okay. Let's get ready.
Ameritrade is now part of Schwab, bringing you an elevated experience tailored for trading minds.
Hurry up. Jim. What, man? What's up? Get the spy, Jim.
Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
Boom. Do-do-do-do-do-do-do.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals.
Put a tight stop
All
on
at
it.
your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network. Welcome back to Trading 360. I'm Oliver Rennick in for Nicole Petalides. We are here in San Francisco. We are getting ready for big events tonight. NVIDIA, as we just talked about a little previewing. Joining me, John Belton, Portfolio Manager and Managing Director for Growth Portfolios at Gabelli Funds. John, great to have you here.
Oliver, good to be here.
You guys have got a lot under the umbrella at Gabelli, but today we're going to zoom in because we got NVIDIA tonight. How big of a report is this for stock?
When I was a child, my family would travel.
I'm on the growth team at Gabelli, and NVIDIA is one of our largest.
with no DUIs. You just have
When I was a child, my family would travel down to western Kentucky, where my parents were born. And there's a backwards old town that's often remembered so many times that the memories are warm. And Daddy, won't you take me back to Muhlenberg County, down by the Green River, where paradise lay? Well, I'm sorry, my son, but you're too late in asking. Mr.
Peabody's old train is hauled it away.
Well, sometimes we travel right down the Green River to the abandoned old prison down by Adrie Hill, where the air smelled like snakes. We'd shoot with our pistols, but empty pop bottles
Was all we could kill.
And Daddy, won't
you take me down to Muhlenberg County,
down by
the Green River, where paradise lays?
Well, I'm sorry,
My son, it's too late in asking. Mr. Peabody's old train has hauled it away.
And the coal company came with the world's largest shovel, and they tortured the timber and stripped
all the land.
Well, they dug for their coal till the land was for sale. Then they wrote it all down as the
Progress to man.
And Daddy,
Won't you take me back to Muhlenberg County, down by the Green River, where paradise lays?
sorry, my son, but you're too late in asking. Mr.
Peabody's coal train has hauled it away.
When I die, let my ashes float down the Green River. Let my soul roll on up to the Rochester
Dam.
I'll be halfway to heaven with paradise waiting, just 5 miles away from
Wherever I am.
Daddy,
Won't you take me back to Muhlenberg County,
down
by the Green River, where paradise lays?
Well, I'm sorry, my son, but you're too late in asking. Mr.
Peabody's coal train's hauled it away. I need this to break the 63 MA. Do 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 do.
And how are the numbers looking?
Not too good, honey. Kamala, she spent $20 million over budget on sluts. You got to go to work? Randy, don't leave. I was asking about you earlier. Okay. You got to feed the family. Tell the wife I said hi and give her a goodbye kiss. Say, I love you. I love you, girl. Should probably slap you. Keep going, baby. What's that? Bob's got some very important information to talk about. Don't you, Bob? Bob, your mic's on. Not a good day for me to trade, Randy says. Am I misreading this, or is this saying $4.30? Huh? Am I misreading this? $190 to $5,900. This is not 310, it's 190. Man. Yeah, what's up, brother? Yeah, what's up, baby? Are you single? Is this that call center I was calling last night? Some lady was supposed to call me and set me up a date tonight. Is that you? You're not the date? Are you single?
Yeah.
You are single?
So, I'm calling for Elizabeth Salzman.
Are you single?
Yours, you should do double,
What?
ratio. You should do the downside ratio spread and let you upside down.
Hey, Bob. Bob, you got something going on today? $560. $590. I'm gonna take it to the limit. One more time. 640. Dang, 660. That's the way to make money now. That was a good song, wasn't it? John Prine. God, 770. Oh yeah, but I'm not in it no more. But that's a good trade. I have actually got a good one in. 820, 860, magnificent. I would love to have an A plus. I got out too early. Yeah, I did. Yeah, I did. So let me show you a trick. Trick. Inverse head and shoulders with a second touch. Boom. To the 200. That's where I exit. Right before we got there.
Than like ETFs like 8-9 years ago, or is it, now it's active. Now we got the juice in there. Now we got the stock tickers and the strategists,
right?
Exactly.
At the end of the day, I think people miss that, right? It's innovation, it's technology, just like technology's disrupted other industries.
Sure.
I think ETFs can be viewed that way, and I think not many people kind of make that connection as well as they should. And here we are in San Francisco, the hub of innovation, and I think ETFs are a really good kind of place point of how innovation and how the ETF industry is changing wealth management and the investment product vehicles.
Amen. Chris Murphy, David Botset, thank you very much, gentlemen. Appreciate your time.
Thank you.
Good to catch up with you again. Good to meet you, Chris. Chris Murphy, head of ETF specialist at T. Rowe Price, and David Botset, managing director, head of innovation stewardship at Schwab Asset Management. We're going to talk some retail when we come back. Target's getting hit. Walmart stay as it goes per usual. Stocks also basically where they've been throughout the morning. A little bit soft. We'll be right back.
Okay. If you watched my video over the weekend and you come to the part where I talked about Target, did anybody watch it? I'm going to show you what I said. Called this out under 20. We nailed it. I mean, the next 4 years. Here on the video. let me do one thing. So I'm gonna pull this stick. So yeah, Walmart, we got a little flat candlestick showing people area. This could be boom. And the time we got to pay attention is in being in the now, and write that watch list down. That's right here on this double bottom, so they don't long. Right here, the store selling swimsuits, bearish. Target, it's another good one. Now, you know, I was very bearish on Target for about 2 years, year and a half. I still am. I don't like Target. I think their push in wokeism and the devil and that guy they put in there to sell all that devil stuff right at the main part of the store, selling swimsuits for women, men that are bikinis that have a place where you can hide your penis in the children's section. I think it's just very disgusting, and so I don't shop there, and I can't stand Target. I can't stand it, so I personally won't invest in it. I might scalp it. We got a little flag here. I just don't even want to look at it. That's how much I can't stand Target. There's your answer right there. If you don't, fuck Target. Target can kiss my ass.
Merchandising, pricing. Target tried to cut prices on 5K items earlier in the year. Didn't seem to drive the traffic we thought it would.
Boy, if that can't do it, then what can, Dee? I mean, that's a pretty big swing and a miss.
For Target, that's right. And say for Walmart, so interesting, beat expectations, raised their outlook on sales. Sam's Club and Walmart banners doing really well.
There's a huge difference.
When you
One is a perverted store, and I shop at Walmart.
all the right people, they're saying it's going to be a pretty good holiday. Well, obviously this will be very important for Target as well.
Not really.
Jerome, how much does Walmart represent the overall consumer right now? Do we even need to watch all the economic data, or do we just watch the stock?
Obviously, need to look at all of the data in order to get a good picture of what's happening with the consumer and the retail space. But having said that, Walmart's proximity to the consumer is immense in the United States. I believe 90% of the US population is within 10 miles of a Walmart, which is also why Walmart has the upper hand to a Target. It really comes down to two things. It comes down to value and convenience. The American consumer is all about instant gratification, and Walmart has done a really good job with its omni-channel strategy, now posting over 8 consecutive quarters of double-digit growth in e-commerce. The consumer wants to, on their way home, to order groceries on their mobile phone, and then on their way home to stop and pick it up. And this is the convenience that Walmart has given the consumer, on top of everyday low prices that are lower than Target. And while they're out there shopping for groceries, which is the biggest portion of Walmart's sales, they're also picking up discretionary items, therefore stealing a lot of that market share from Target.
The potential outcomes here, I mean, are we going to have to see some kind of restructuring or major changes from Target, Dia? Is there a potential for them to start closing down stores? What's the answer?
I think it's going to be really important to watch e-commerce for the coming year. Clearly Walmart, they're saying they're getting close to profitability there. That's a really important source of growth. Their supply chain, they're managing the costs there well. So I think Target will definitely hear some news about how they can sort of match that on the cost side, because they said costs really rose this year, whereas Walmart, as we know, is world-class in managing that. I think, things like same-day pharmacy delivery that Walmart is offering, really exciting, helpful new products. I think next year maybe Target could, not necessarily that, but just come up with the kind of creative solutions.
I will say one thing. If I was a technical trader and I didn't look at the ticker on Target, if I just paid no mind to the ticker, because I can't stand this company and I won't trade it, but I will trade it as long as I don't look at the ticker. I'm boycotting this company. Let's just make that clear. But we're definitely at a solid support. I mean, perfect support. So this is where I have to kind of throw away my prejudice. How can I explain this? I want to really get fairly religious on this one here. On stock twits, I got to come up with a good. As much as I cannot stand Target, and their perverted store I personally will not shop there. Throwing away my prejudice we are at a We are at an inverse head and shoulders. So as much as I cannot stand Target and their perverted store, I personally will not shop there. Throwing away my prejudice, we are at a inverse head and shoulders. That would get me kicked out of stock twits if I put that on there.
He's done an admirable job. They had a rough couple quarters into the end of 2023, but
they should have been through that.
Yeah, you would think that if all these other retailers are doing well, that Target should ride the coattails a little bit.
Nope.
We talked about it with Like Folio yesterday, and
no one gets it.
They were in agreement.
Have you ever shopped at a Target? And you ever shopped at a Walmart? It's like threefold. I mean, the grocery department is 10 aisles. Walmart, it's a whole grocery store. I've been there maybe twice, and I just didn't like it. It's a very ugly store. I don't even know how to describe it. There's no comparison. But they were all, I mean, Target's had a good run. I mean, this sucker, everybody was bullish on Target years ago. I mean, it was the number one, and I didn't like it then. Now they have more than 500,000, 400 million shoplifting? issue? Because they're woke. That's just my opinion. You might love Target. I love shopping at Target.
Company specific when it comes to Target, and unfortunately, they were working through this inventory buildup issue that actually started pretty much the third quarter of last year. They kind of worked through it.
And and if it's a liberal store, what the hell do they do and gotten a Target on their sign? I mean, are you trying to kill somebody? That's gun violence. You're promoting gun violence.
Isn't that great? But they were able to sell tires, so which is something that Target doesn't sell. So Target's in a rock and a hard place. This has been
another 5 years from now, I guarantee it.
Kind of made a mention of it.
Another 5 years, liberals are going to be knocking on their doors saying, "Man, we got to change this name. You're promoting gun violence with that Target on your sign." I mean, everybody drives by it, wants to pull out their gun.
Also, there was a short report out of Elf Beauty here today.
It's racist.
Waters Research. They're selling that stock. Stock's getting hit. But Kevin, when you look at this, earnings season's almost wrapped up. About 95% S&P 500 have reported earnings. We still had some decent beats on the EPS side, about 75% beat, 60% on revenue. Is this a consolidation or lag that we need in the markets to get this Santa Claus rally into effect?
I think everything is set up for a Santa Claus rally or some type of rally into the end of the year. That said, geopolitics is out there and looming, and this doesn't seem to be getting better. It's actually taking a pretty significant turn for the worse. And then you have to ask yourself, is the problem with Target, Kevin mentioned it's isolated to Target? I believe that's accurate. The U.S. consumer seems strong everywhere else. I wonder if this is just a one-off Target making bad inventory decisions and not moving product and having to bring down numbers. I wonder if it's just pilot error at Target, right? Putting the wrong merchandise on the shelves in the wrong places and missing who you're aiming at. So the market still looks like it wants to go higher for the end of the year, but there's things on the horizon and things right here that are keeping it from doing that.
Yeah, we got volatility.
It's a sad day for Target. It's down so much. They sell swimming suits that'll tuck your penis underneath. They put it in the children's room and ask you if you're a male or female. My pronoun is Washboardjim, a man. I will not shop at Target. They love the devil. I hope they go out of business. 'Cause I can't stand Target. But as I look at the chart, I pulled up the weekly time frame, and I have to throw away my prejudice to take this trade. It's called an inverse head and shoulders. It just touched the right shoulder twice. Should I jump in Target, or should I do my 3-day rule? When earnings are bad and guidance looks sad, I want to wait 3 days. Then I'll take this trade and scalp it anyways. I can't stand Target. They want to be like Walmart. Did I ever tell you about the time when I was counting HBA and an old man come up to me and had something to say? He said, "Sir, could you point me in the right direction? Because I need to go to HBA and find me some cologne." I said, "Hey, let me stop here and I'll walk you over there." And when he gave me his name, he told me his name was Sam Walton. I did meet Sam Walton in a Walmart. I looked at that old man, and he looked back at me. He said, "Jim, I appreciate what you're doing. You're counting all this inventory. I'm going to tell all my buddies at the conference about this story." The singing day trader.
Don't talk about it.
I had one guy, I was doing inventory for Walmart, and one guy coming up to me, he says, "Son, could you point me to the deodorant, the Lava?" I said, "Yeah." So I walked him over to the Lava deodorant, and he looked at the price, and he said, "God, this is 3 times as much as I paid for last time I was in here." I looked at him and I said, "Has it been about 20 years?" I'll never forget that. When was the last time you took a bath? 20 years ago? I don't know what to tell you.
Still up about 9% this month, up over 190% year to date, and only
The
about
NVIDIA
3%
pump.
away from the highs right now. So yes, the bar is high, and I will say the beat and raise last quarter, remember, wasn't actually enough to propel the stock higher. That being said, we're close to the highs now, so I guess it doesn't necessarily matter. In terms of the numbers that Wall Street's looking for, these are the estimates here. Adjusted EPS of 75 cents on revenue of $33.1 billion. That would be up more than 80% from the year ago period. Data center revenue, of course, a key metric. It's expected to come in at $28.9 billion. That's about a 100% increase from the year ago period. Technically a deceleration because in Q2 saw 154% year-over-year growth. You know, I mentioned Dan Ives. He's calling for another $2 billion beat and $2 billion quarter guide higher. So the expectations that it's not just going to meet, but also beat very high. I've heard estimates even higher than that in terms of how big the beat could actually be. Gross margins, of course, will be in focus as well. Those continue to rise as NVIDIA continues to hike those prices as well. NVIDIA's current quarter outlook, of course, will be closely watched. I talked about, you know, the expectations that it's not just a beat, but also a raise. Wall Street currently looking for January quarter revenue of around $37.1 billion on earnings per share of 82 cents. So we'll see where they fall in terms of that. I think, you know, there's a lot of excitement around NVIDIA, but there are a lot of questions as well, especially around Blackwell. We know the demand is there. We know demand is insane, according to Jensen Huang. We know NVIDIA has already said that they're booked out 12 months. It's just going to be a question now of how much NVIDIA can actually produce in 2025 and what customers are buying if they can't get access to Blackwell chips as well. So, you know, we'll be looking to see when Blackwell can ship in size. Also, some of these power management issues. We know that there's been some changes to partners. There's been reports of potential overheating and rejiggering of some of the server racks and such. More clarity on that front as well. And then in terms of the earnings call, I'd be curious. I know Qualcomm addressed this already, but and seemed pretty upbeat about the upcoming Trump administration. But just what maybe intensified relationship with China could mean for NVIDIA, and also what tariffs could mean for NVIDIA, and also the nuclear story. We'll be looking for more commentary there, because Jensen Huang has previously said that nuclear would play a vital, integral part in powering AI's future. So curious to see if they're, what they have to say about that going forward. So NVIDIA shares down about 1.5% right now, still up on the week though, and it's just, this is the main event, and I'm ready for it.
Caroline, I read an article that says there's watch parties in New York for NVIDIA's earnings event. A watch party. That's how important. I think this has turned into a macroeconomic event because of all the companies that will be affected by these earnings. What catches my attention about this is how much revenue in the fourth quarter are they going to get from Blackwell? And that means Morgan Stanley thinks it's 5 to 6. There's another firm out that thinks it's 12 to 13 or 14 billion in revenue. I think there's a lot of speculation that how much is Blackwell going to affect earnings as soon as possible. And the other thing is, this stock hit $140 on June 20th, and it does what NVIDIA often does. It consolidates. It corrects slightly. It's been 5 months since it did
Bob's
that.
gone.
This just seems like if they beat, this could be that next leg up that Dan Ives was talking about. I don't know. I'm not sure. But I think it's that. It's that how quickly is Blackwell revenue showing up on the bottom line?
Yeah, I think that's going to be totally key. And, we know the demand is there, but there's almost too much demand at this point. And will supply constraints impact the revenue guide? I think it's going to be a very key thing to watch. I think the big question is how much is already priced in at these levels, and also given the fact that NVIDIA is outperforming the SMH by its greatest margin ever, will it bring the semiconductor sector back to life? I think, or will it drag it down if NVIDIA does weaken? If you take a look at the analyst breakdown though, 90% of analysts still rate NVIDIA as a buy. The median price target is 165. So it's currently trading around 145 right now. So one would venture to guess that analysts on Wall Street with 90% rating it as a buy would look at any pullback as a potentially a good buying opportunity. So even though we did see a beat and raise result in red arrows when it last reported, we ultimately saw it move higher. So I think that that's important to note. In terms of other analyst commentary, obviously Dan Ives, I had talked about him. I was actually chatting with him today. He's remains firm that it's 10 p.m. at the party, the AI party, and the party's going till 4 a.m. So not necessarily parties I attend anymore, but he thinks that that's also reiterated NVIDIA as buy, saying while there's been increased noise throughout the Gen AI ecosystem of late, the net of
So
our
you're a
work
little
suggests
party
that
girl.
NVIDIA's anticipated demand trajectory remains intact, and our work frankly hasn't picked up on any material alterations to broader expectations. So it's very bullish.
I knew she was
think
a
it's
hottie.
just a matter of will it result in green arrows after the bell and tomorrow, and that's kind of TBD.
Yep, I think you're gonna have to look at that guidance. Whisper numbers for the next quarter coming in about 37 billion is expectations. Whisper numbers closer to 40 billion. So will they beat again 2 billion on revenue like they have the past few quarters? I think that's gonna assuage the markets.
I think it's all about Blackwell. How quickly they can sell these chips.
Yep. We'll wait and see on that. It's gonna be
Beating, will 2 billion be enough?
Yes.
Does the Wall Street actually need to see a beat by 3 billion or 4 billion? It's just, it's like the expectations have gotten so high. And
No, they're just ignorant.
It's really anyone's guess at this point.
Yep, it's going to move markets. That's for sure. All right, great stuff. Thanks to Caroline Woods, senior markets correspondent here, breaking that down for us. Let's bring KG back in here. KG, you look at margins that continue to increase from maybe 2 or 3 years ago. They were below 40% margins. Now they're up in the mid-70s at this point. I think that's going to be a key moving forward. competition's not really hurting, the prospects, according to Jensen Huang at this point. So, I mean, what's your take here on NVIDIA?
Yeah, I think it's all about debunking some of the concern that they have, the market has with Blackwell. And if they are able to say, no, we're not having any issues, you've seen that report, because it's the second time that report's came out when it comes to that overheating issue. If they discount that and they say everything's on track, we're able to get the supplies that are needed, we're going to be ramping up, I think the market's going to be okay with that. And then I'm right there with Caroline. I mean, a $2 billion beat on rev and then a $2 billion beat on guidance moving forward is something that the market should be expecting, is probably already expecting. So what's going to really take it over the top? I think that's going to be Blackwell sales. If they're going to be able to show an even greater ramp when it comes to those deliveries so they can actually realize revenue, then I think that's going to be a huge tailwind for the stock. But I did just check. At the last 4 reports, 2 times the stock's actually been green the next session, and then 2 times it's been red. So it could actually be a little bit more of a 50-50 here. I think there's more of a call side skew that's being built in, especially the 150 calls expiring this week, a significant amount of open interest. So, I think it's going to be all about the conference call, the numbers. We're going to get those numbers, but the conference call, I think, is going to really drive the performance of the stock either to the upside or downside. And then last thing, Kev, you kind of talked about these watch parties for NVIDIA. That's absolutely insane to say the least. But people, as long as they're having fun, I guess it's all good. But I think that's a little bit too much, a little bit too cultish for me for an earnings announcement.
Oh, Mr. Green.
We're supposed to be the excitable one.
No,
we're
man,
supposed to be
weird.
the old cynics.
Well, I think the people at the watch parties are going to be big shareholders. So maybe they've got some vested interest in this. Go have a few beers, watch the results, maybe cry in your beer.
Like a goal in the World
party.
Cup where they throw it and everything goes crazy.
That might happen if they beat on the upside. KG, option market's pricing in about $12.50 move either way in the shares. I mean, that's equating to about $285 billion. That's bigger than a lot of the blue chip names out there that we recognize, the Cokes and Nikes as a whole. They might move that in one day. You got an option strategy for us. Break it down.
Yeah, so once again, kind of looking at that 150 call, there's a lot of speculators getting long those calls. So if the company is actually able to hit or even exceed the street's expectations, we might see price action actually gravitate to that level. So I'm actually looking at a call spread, looking at getting the long 145 call expiring this Friday, and then selling the 150 call, doing this for a debit of $2.15. Max loss is going to be the debit paid, $215. Max gain, $285, with a break even of $147.15. Obviously, the stock's going to have to move. You're looking for a move to the upside, and you do have another 2 trading sessions in order for the stock to try to hit that 150 level. So that's kind of the setup here, Tom, just given the environment that we are in, the enthusiasm, as we talked about, those watch parties, and then also the options positioning that could be a potential magnet. It's not a guarantee, but it could be a magnet of area of resistance if we do get a favorable report.
Yep, let's break this one down. No 22nd weekly cycle. Expires in just 2 days. Really short-term positioning here in this example trade. Buy the 145 call, sell the 150. You're paying $215 for this. There's your risk, $215. You're risking about a little bit better than 1-to-1 on this one, but this, is pretty straightforward. Hey, the stock goes up, goes above 147.15. You're going to be profitable on it. It's really short-term. Goes above 150. It's going to be max profit at expiration if it's still above 150. But it's pretty straightforward where you can risk, hey, I'll risk $215 if I think it's going to go up to 150. Hey, where I can make, basically $2.85. Not a bad risk reward, and you need less than 2% move to the upside to get above that break even.
Yeah, when the earnings come out, there'll be 2 trading days left. You've got a $5 call vertical that you're spending $215 for. It's very short term. The break even is 147.15, and it can go to $5, Tom. Not a lot of mystery in this trade.
Yeah.
Friday at the bell, obviously you can trade out of this during the day if you want to, but yeah, this one, the number you want to look for, 147.15 is the break even. Anything above that, and you're profitable.
I think one key before we go here, if you're just buying the 145 strike call, because somebody will go, well, maybe I just want to buy the call because I think it's going to go up. Well, you're going to pay $650 for that one call on the 145 strike. That means your break even be 146 or 150 151.50 on that one. So it takes your break even up higher. You've got more at risk. You need a bigger move to the upside on a percentage basis. So offsetting some of the costs, because those 150 calls that you're selling, you're knocking off about $4.40 worth of risk on those just by selling that. Don't have to swing for the fences.
Yeah, the 145 outright, your break even's over 151.
Yeah, you don't have to swing for the fences to take directional plays. All right, great stuff. Thanks to Kevin Green, Senior Markets Contributor here, breaking down NVIDIA for us. But coming up after the break, we'll be joined by Andy Swan from Lightfolio for a look at sentiment data in Delta Airlines. The stock's up nearly 60% this year. They had their investor day today. Pretty positive commentary, but the stock's falling.
Jeffries lowers target to 165 from 195. How about 100, you dummies? Target, what did it say about third quarter? Third quarter was off target further than expected. Huh? I don't want to write. Well, I guess I missed that one just now. I wasn't watching. That'd have been another good shot right there. See, inverse head and shoulders? I just didn't see it. Not a bad day today. Missed that one though. Hike. I missed it too. Is Diddy out on bail? They didn't let him out. Judge grants Diddy a legal victory. No, there's no way to let him out. Granted a bail hearing. Huh. You missed it as well? Yeah, I wasn't paying attention. I would have took it. You see the trade, it's there, head and shoulders again. That's 2 in a row. Damn. God, I hate missing trades like that. That's so pretty. You know what I'm saying? I would have done that. Was that hammer at the end? I would have done that easily. was 12 years ago when I saw Bippy.
Strategies combined to create this position here. In the Nov 29th weekly cycle, 9 days to expiration. Sell the 65 call, buy the 68 call. There's your short $3 wide call vertical. That's helping to finance and financing all of the purchase of the 1 week wide, buying the December 60 puts, December 6th weekly 60 puts, and then selling the November 29th weekly 60 puts. So a 1 week wide put calendar to the downside that expires in 16 days. Paying or collected a credit, we've got 35 cents on here, as Kevin mentioned, about 20 to 25 cents higher than that right now. That would take your break even up. But if you collect the 35-cent credit, you break even 65.35 to the upside. So you do have that cushion to the upside. So if the stock doesn't do anything over the next week and a half, you can be profitable on this one. But you can see here the apex of profitability down near that 60 strike. That's when you're going to profit the most, because your short call vertical that you collected credit on goes to zero. And then on the put calendar will expand in price as you get closer to 60. Because you collected a credit on this one, you've got no risk to the downside. Your only risk is above that break even of 65.35.
A baby killer
Max
whale
loss,
frantically
above
circled
the
boats,
68
holding.
strike. That's going to be $265 if you collect a 35-cent credit. So remember that. And you got some assignment risk on those short 60 strike put over the next 9 days.
Okay.
Also. All right, let's take a quick break. When we come back,
Attention, attention, attention. 1, Tibbets, 3bis, 4bis. So I'm going to predict where I think this is going to go. 1bis, 2bits, freebie, 4bis. Right here. Could be a 1 2bis freebie. One bis, 2bis. Right there. I like that better. $58, $80, $95. the heck? George!
Had, which include, of course, Microsoft and the crash, which affected many customers, may actually have some lingering reputational damage. So, Palo Alto is an endpoint security company as well as an enterprise government and private sector enterprise cybersecurity company. And this name has actually been on a tear. If you look at the last 5 years, the stock is up nearly 400%, and it's an exceptional move for a company which has really translated into an exceptional profit machine, because I went back and looked at 5-year averages of gross margins to net income margins, and over the last 5 years, their gross margins have increased by about 300 basis points, but their net income has gone from basically barely 1% going back 5 years on an average to about 32%. They generated in the last year about $2.6 billion on $8 billion in sales. So they become more efficient as a business alongside sales, which are still growing, albeit they're expected to grow at a slower clip, now in the mid-teens versus the 25 or so percent 5-year average. But they're a very generous company when it comes down to profit margins. But if you consider what's happening from an earnings and revenue standpoint for the quarter they're about to report, it's actually quite modest. If you look at the EPS at $1.48, it's only 7% higher than last year, which printed as a company $1.38 per share. Sales are expected to be just over 12.5% to 13% on average, up about $2.12 billion versus $1.88 billion for the same quarter last year. Now, gross margins last quarter were reported close to 74%. Like I mentioned, that was the full year, so they actually hit that number last quarter. Their next generation security programs, or profile, if you are, technologies, those average recurring revenues were higher by 43% last quarter compared to the same quarter last year. And so I think what's happening here is that this company is becoming more efficient, more profitable over time. Their sales growth, just to remind everyone, has actually been decelerating, but this is another situation where decelerating sales growth is offset by improving net income margins and EBITDAs at per annum basis, and so that's why the stock is higher. Now, I'll say this also, when you look at the EPS for this quarter, 7% compared to last year is quite low, but I did notice also the company's been issuing shares. And here's the thing, not that they really need it, they've been raising additional cash. The company's actually paid down all of its long-term debt. This goes back 3 years ago. So they're able to take advantage of not only share issuances as prices moving higher, they're still rewarding shareholders with a higher price. So for what it's worth, this name has been really solid. The financials have been solid, and again, I think that speaks to the performance of the underlying stock.
George, normally, your points are exactly the same thing I was thinking about this. Normally when you see, slower revenue growth, and this time they're aiming for about 13 to 14%, that's usually very bad for a company like this. But their margins are expanding. For 24, they expanded, they guided for margin expansion in 25. They're looking at like 27.5 to 28% for full year 25 for margins. Is that more important than the revenue growth? Because for this stock to keep going up with slowing or deteriorating revenue growth, that's usually a death blow for some of these growth stocks.
Yeah, so ideally the whole premise, larger picture is when you're a growth stock, you have to show accelerating revenue growth.
Yes.
Palo Alto is essentially a maturing growth stock. So therefore, as they actually get more customers on board, ideally speaking, you like to see average recurring revenue improve relative to total revenue. And it gives you an idea that you're getting more spend per customer. That's what's really important. And then while your revenue growth is actually decelerating, and that's because there's competition, if you're doing something good, which Palo Alto has done, you're going to essentially create competition. So you're naturally going to see deceleration in sales growth. And this will eventually, by the way, happen to NVIDIA. I just can't say when. But nonetheless, you have to make up for it with margins. And so if you see margin expansion while revenue is decelerating, you don't see those parabolic trends, but you see steady
something
trends.
strange in its mouth. The crew quickly realized it needed help. They tried to remove the object, but the orca resisted. It continuously moaned, as if trying to say something. This unusual behavior caught the crew's attention. When they tried again to help, the orca dived and showed its white belly. This is a sign of trust towards humans. The crew believed the orca needed help for assistance. When the rescue team arrived, the young orca was still there. It seemed to know help had come. The orca then led them to another part of the sea. After passing a cave, they found many killer whales near a buoy. The orca's mother had her tail fin tangled in a rope. She seemed trapped for a long time. The baby orca swam beneath her, trying to support her and ease her pain. The baby emitted deep cries, likely a plea for help. During the rescue, the mother seemed to understand the crew's intentions. She lifted her tail as high as possible. After a few minutes, the crew removed the ropes. The freed mother quickly reunited with her baby. Before the humans left, the mother approached with a ray in her mouth. It seemed like a gesture of gratitude. The mother and baby orca accompanied the rescue team to the shore. They expressed their thanks in their unique way. After a beautiful performance, the mother and baby finally departed. This story reminds us that every creature has a spirit. Inspired by this amazing rescue, share it with your friends and follow us to stay connected with more heartwarming stories.
Oh my God. Hey, beautiful. How you doing?
I'm good. How are you? Hold on. Let me call you back.
I'm good. How you doing?
Boom. Boom. Boom.
Join me all Oliver Rennick alongside Schwab Network.
Uh-oh, 1, 2, 3, 4. Jimmy called
We
it.
explore the second derivative. Gamma On is a brand new limited series to take your trading skills to the next level. Subscribe to Schwab Network's YouTube channel now.
Yeah. May I help you? Yeah, this is Tom Selleck. I understand that you're calling out this 1, 2, 3, 4 or 1, 2 free off the 200 SMA. Is that correct on the 1 minute, sir? Yeah, we're looking at it. We ain't in it yet. I'm trying to figure out if Diddy was let out on bail. Here we go. Get ready. Randy. November the 20th. Woo-hoo-hoo-hoo! November 20th. Jimmy called it. 1, 2, 3. November 20th, 5,900 strike. $290. You have 15 minutes? Be careful. $340. There's you are, Randy. Here's your $50. Your fast scalp. $70. I mean, it's an exit idea for a scalp. Do re mi fa sol ti do. 390, baby. In 2 minutes, I made $500. Randy? Jim, thanks for that alert. I just learned how to count to 3 last night. I had 3 oranges, and so I lined them up in a row, and all night long I sat there and looked at them, and I said, 1, 2, tree. 1, 2, tree. 1, 2, tree. And I kept saying it. And when I woke up this morning, I was saying 3, 2, 1. A plus. All right, Joseph. On YouTube.
Huge percentage move. So exciting stuff, over 15% to the upside. We mentioned some of the macro things. If there are any updates, there hasn't been since really before the open, but if there are for whatever reason, we'll make sure to bring those to you. Let's do up bow, down bow, though not endorsements, not recommendations, sort of hinting at this first name on our list, which is MicroStrategy. I don't even know what MicroStrategy does anymore other than borrow money and buy as many Bitcoins as they possibly can. Now, I would tell you that I think this is a dangerous trade in the case of MicroStrategy's strategy, but it is paying off, and it's paying off hand over fist at the moment.
I know, this company is amazing. This is one of those, again, charts I looked at that I haven't been frequenting, and I was like, oh my God, is this right? We were up 102% this month. We're up now 681% roughly on the year, and another 870.5% over the last 12 months. I mean, up over 1,000% off of the low. So making a nice move today, I mean, only aiding what has been an extremely strong uptrend for this company. They did announce another planned note offering after the close earlier this week. The company did price its upsize offering Wednesday morning, saying it will offer about $2.6 billion, up from around $1.75 billion worth of its 0% convertible senior notes due out in 2029.
This is a nutty stock.
They did also grant the initial purchasers a 3-day option period to purchase an additional $400 million of the notes, and it's expected to close then on Thursday. So they do anticipate approximately $2.58 billion from proceeds of the sale, and they said they plan to use those proceeds to buy, you guessed it, more Bitcoin. So exactly what you were saying. I mean, this is a company that is very odd in the sense that it's not even entirely clear like their business strategy. Just like they're basically like a proxy to Bitcoin at this point. But
they're essentially a Bitcoin holding corporation at this point.
Right, so they're like a Mara then, which I guess it is also
different in the sense that I think the Marathon Digitals and those are actually mining them. Literally, MicroStrategy is just taking the money that they can get their hands on and buying Bitcoin.
Well, it helps that Bitcoin was at new highs earlier today. We're up about 1.6% of the futures. So yeah, I mean, I guess if you believe in Bitcoin, hey, I can understand being a proponent of this name, just given its outperformance.
Yeah, for context, in terms of your revenue, I mean, it's still generating revenue, over $100 million in revenue, every single, quarter. But we're talking about a company now that has a monstrous, over $100 billion market cap at this point. This is due to the Bitcoin holdings more so than anything. Now, as long as Bitcoin continues to perform as it has, there's really no reason that this couldn't continue. The issue would be, of course, that it doesn't. And now not only are they just holding a lot of Bitcoins and they would be exposed in terms of that price going down, but they're actually borrowing money to buy more. So this is now a leveraged position. If there is some sort of a washout in Bitcoin, things could really dramatically, work against this company to the downside. So my issue is with this one is more of, how do you get out of this trade if you're MicroStrategy? They're not going to be one of the biggest Bitcoin holders, if not the biggest, in terms of how many they have. like if people get wind of a company like MicroStrategy with this big of a position starting to liquidate, like who knows what that would do for the market. So they have a hope and a prayer that Bitcoin just never goes down.
I mean, yes. So I was reading this note today that was basically like an analyst that said I got this so wrong because of the fact that if you're a bear of Bitcoin, you're probably a bear of this name. But I mean, because of the momentous swing to the upside we've seen in Bitcoin, I think it makes sense why we've seen this move to the upside.
Totally makes sense. There's nothing to push back on what's happened. It's the sustainability of this and how does the story end? Because again, it's not just that, hey, maybe they have an average Bitcoin price at, let's say, I think at one point it was like 25,000. I'm sure it's average up from there. Let's even round up dramatically, which I believe it's probably well below this. Let's say it's 50,000. It's not just that if it goes back to 50,000, they're going to be break even. Oh, that was fun. It's that if it goes meaningfully below their purchase price, they borrowed money to buy more, and so they're exposed to more than what the assets of the firm are if Bitcoin makes a move lower. So to me, it's just the constantly getting bigger as the position's going up. I mean, this is doing, what trend followers would say to do, which is kind of press into the trend, lean into the trend is your friend. But at some point, if you just keep getting bigger and bigger and bigger, there's going to be a down move in Bitcoin at some point, one would think.
Well, right. That's the thing, is that then you expose yourself to like unprecedented risk. I mean, not saying that Bitcoin will tank, but I have to imagine we could see a pullback. And if you're so much riding on this momentum to the upside, I mean, that's just the risky nature of this company. But I guess the price credit, it's proven a lot of those doubters wrong. So it's having a phenomenal year.
It absolutely can continue to do that if Bitcoin keeps working its way towards this 100K mark and perhaps even beyond. So it's not to say that, hey, this is some opportunity to express a bearish sentiment against MicroStrategy. It's just at some point I do wonder what this story ends, but that could be after I'm gone. Who knows when? That could be after Michael Saylor's gone. Who knows what that ultimately is? So it's not to put a time on it. It's just to me, we would call this irresponsible. I think if it was an everyday investor, we would say this for a hedge fund. So why is it any different if it's MicroStrategy?
I think that's a good point, and it goes to show, the exuberance of this entire space, I think, reflected very well in MicroStrategy. But our next name today, bit of a different story. We're looking at Snowflake, which has tumbled about 35% this year. We have earnings due out today after the close, where we are expecting about a 40% contraction year over year for its earnings sales. That would actually mark a 22.5% improvement. Increased GPU-related costs have also been somewhat of a margin-pressured story for Snowflake. Stiff competition also has increased this pricing pressure. What has been a good, maybe sort of sentiment for this stock is that software stocks actually have gotten a boost in recent months as companies continue to invest pretty heavily in AI. Earlier this month, we saw nice reports out of Palantir, Cisco. I know different companies, but still operating in the software world. So we have seen nice growth exiting the second quarter of fiscal 2025. Snowflake had more than 400 accounts that were using its product Iceberg and more than 2,500 accounts leveraging their Snowflake AI weekly. So those are positives. I will say there's 30 buys, 14 holds, and 1 underperform in this name. So the street sees something, I guess maybe that the price hasn't, because we pulled back pretty substantially on the year. I will say it does trade at 189 times its forward earnings, so it's pretty stretched, to put it lightly.
Yeah, it's one of those hyper growth companies, and as long as things keep working the way they have for this company, there's a chance for it to continue to grow. The issue is, and right now its niche is sort of that it's one of these companies that within its kind of database architecture, warehouse, cloud software, it really works nicely with this large language model work that so many of these companies are doing. Now, the issue is, the companies like Microsoft, the companies like Amazon, and these other hyperscalers have taken note of that, and they're also making this AI friendly within their own cloud offerings. So they have some of the biggest companies on the planet as competitors, and we know that has made it very difficult for others at times to go against some of these names. So we'll see if they can kind of buck those trends and continue to be outperformer in terms of where it's kind of niche is within this space. But a lot riding on this earnings, big time volatility around this report, perhaps expected, and maybe not to be surprised, because it's a highly volatile name and it has certainly moved in the past on earnings. Next one's Qualcomm. Investor Day disappointment. I don't know exactly what or why was super disappointing. They provided some numbers, apparently not enough, but stock's almost at quarterly lows in terms of where it's at now. It's down over
This thing could come back and hit the 200 this. On Wednesday after market. I'm going to be watching that one real close. Snow, earnings coming out on it. Earnings on Snow will be on Wednesday after market. You got triple bottom on Snow. Then we got earnings after hours. Snow hit the resistance at the 200, so it did kind of bounce up and hit that resistance level on a good volume spike. I like this trade right now. As long as you stay above the 9, we're still bullish. So let's bring this to the hour time frame. That was on the daily. And strong buy right around 120. This is going to be a very good one to watch. So we got megaphone here. This thing could come back and hit the 200 this week. I'm going to set an alert just right above the 200 EMA. That's right here on this double bottom. Right there. Now what? No, we didn't hit that. Yeah, keep a good eye on Snow. Snow's had a real good breakout here during the Trump administration, and I think it can still have more of a breakout, just kind of consolidated here in the past 3 days. So that's my 3-day rule. We hit the 200. I would have took this trade Friday. If I saw that. I would have. Definitely would have took this trade Friday. See if we come back and do a double bottom and then bounce up and break out. Snow, that's definitely going to be on watch this week. We do not touch a double bottom. Good. Next, TJ Maxx. Now this is a Stephanie Link trade. So we didn't touch a double bottom. We just kept going on up. Shit out of this stock. She loves TJ Maxx. Let's go to the weekly. Personally, I've never been in one. So they don't mean nothing to me. Resistance to become bullish is right around 120.46. Support to stay bullish is going to be right around 114.68 to stay bullish. And then we could have us a double bottom down here right around 112 something. Okay, I said 112.17. I said 114.68. Today we hit 115.33. TJ Maxx. To stay bullish. It's 60, 70 cents. A Darvis box on the side. So it could pull back, bounce up off the 9 and come back up. We do have a higher high, which we created last week. So, yeah, this is one I want to keep on watch. We got a megaphone pattern right here. A couple of them here. Let me take this off. This is the weekly. So we got a little megaphone pattern here. We broke out Friday, earnings coming out this week. If we break this resistance, we'll start to move higher and break out. This looks pretty good, but if we pull back, we could stay in the Darvis box and hold support right around 112.17 for a strong buy to go long. I can't believe that girl gave me time of day. Hello, I noticed your comment on my post on here. This is a new platform I created to talk to my true fans. Thank you for your love and support. You're welcome. I wish you the best, Jim Howard says. Stormy Daniels. Are you a fan of mine? A friend, maybe. Okay, that cool. I like to make friends with my fan. Can I see what do you look like? Reply, yes. Well, you look good. What are you up to, baby? Woo! I feel like a movie star. Stormy Daniels, I ruined my day, thought she'd message me. You know what I'd put on her post? I said, Trump won. I think it made my day. It made my year. Made me very happy. Does anybody know how to count to 4? We could be at a spot to make a little bit more. One bis, 2 bis, 3 bis, 4. And we got another head and shoulders right here with the right shoulder, so it could bounce there. You ready? I'm going to do the SPY this time. Okay. Let me see the SPX. 175. Okay, here we go. I'm going to look at the SPX. Three black crows. SPX. There we go, baby. Did it again. $59. Woohoo! I mean, this is just like boom, boom. Oh, strike is 5,900. $175 to 230. In less than a minute. Tweezer bottom, 3 black crows, tweezer bottom, nailed it. Got right in right there. Within probably 30, 40 seconds, I was out of the trade. $250, $255. And get all of them $260. All out. God darn, 280. God darn, I left a little bit of money on the table there. Again, $200. More than that. Now it's at $295. God, 300. Oh, this is getting boring. Making money. Go, Tesla, go. That's $120 $125.25 contract, but I'm out. $1.35. I can't believe she's writing to me. Yes, Stormy Daniels. How would you like to come over tonight? I want to personally thank you for helping get Trump elected. One thing that I was always told by prostitutes is that what stays in my bed stays in my bed, you know. I'm a little let down that you brought it to everybody's attention that you slept with my buddy Trump. I'm afraid that I can't offer you any money because I'm afraid you might turn on me, and when I want to run for president, I'm going to get a letter in the mail saying that my settlement wasn't enough after already giving you $3,000 for a good fuck. So I'm going to have to turn you down, honey. You're attractive, beautiful, ambitious, you're a capitalist. I appreciate that in any woman. But I just can't trust you. Prostitutes don't snitch. I got to say something nice to her. What would be a nice thing to say to Stormy Daniels? Did you go out with John Watt Holmes? Calm down, Jim. You're getting excited. I can tell that just makes me so happy. I don't know why. I bashed her over and over again for years. It just tells me kindness can open up your heart. Just be kind. Oh, I'm sorry, Caroline. Did you hear?
These big moves that we've been seeing. We'll kind of have to wait and see how this plays out. I will say, you mentioned the analyst breakdown. There's only one buy rating on the street. That's from JMP. But the price target from JMP is $40 a share, and it's currently $7 lower than where it's currently trading. So that's notable. We'll have to see if there's any other adjustments to that. But if you take a look, there's only 10 analysts that cover the stock, according to LSEG. 6 of them are in the hold camp, including these 2 analysts that I was just talking about in terms of the upgrade. There are 3 sell ratings, and the median price target on the street is $21 a share. So less than, or more than half, would have to be wiped out to get to that price target at this point. So, it's certainly had, as you said, just this week, this month alone, it's had this really impressive run higher. So it's a fun one to watch, but we'll have to see if these gains can hold and if the analysts kind of follow suit or if it starts to trade closer to some of these price targets that we're seeing on Wall Street.
Yeah, 18% move to the upside today, and I mean, just a ridiculous chart on a month-to-date basis. I will say the AI offerings, I heard that as well. I haven't noticed that, but it's not like in terms of AI, like life-changing AI. It's just like integrated in their app, as far as I believe. I don't know. It's sort of like one of those things that just leaves my bank account every month, and I'm like just hoping I'm covered as far as renter's insurance goes.
Yeah, I think that's how a lot of AI is right now. That, you know, we talk about like, oh, AI, but like we're all using it to, you know, if you use predictive text, if you get suggestions when you shop, that's all AI driven. So I think from my understanding for Lemonade, they use it to generate quotes, they use it to alert their customers and such. So they're probably using it, and maybe you're not even realizing it.
That's also a very good point. Yes, I don't think that it would necessarily need to be so consumer-facing.
Lemonade.
And appreciate the breakdown on Lemonade on a nice update. Caroline Woods, Senior Markets Correspondent for the network. And now we trade this name, Alex, and I will say this is one of those 5-year weekly charts that looks a lot different than the year-to-date chart, I will say. I mean, highs were around $188 a share, so far cry from where we're trading, but I mean, for like example purposes, you celebrate the win here. We've been in a phenomenal uptrend for the last month.
Yeah, no doubt. Super momentum-driven rally. The AI element, while it's, you know,
PDD's earnings is Friday.
Of the kind of perception of this company, I'd be hard-pressed to think that all of the insurance companies aren't using some sort of machine learning and modeling to figure this out. It's such a math-based industry that I would bet they're all doing this to some extent, but Lemonade doing a good job in the public markets to be out there kind of talking about it. I looked at a call vertical. At the time, this was kind of at the money. It's now slightly in the money, which is fine. The 45.50 call vertical expiring next week. If you could do this for a $2 debit, it creates a situation where you have a little bit of positive asymmetry. Risk would be $2, max reward would be $3 or $200 and $300. Of course, we know how.
Today's Wednesday.
But probably one that up to $2.50 for the debit would be comfortable, as that would get that equal risk to reward for this. Break even though, when the $2 debit would be 47, so actually slightly lower than the current share price. So with that, you're buying premium and have a little bit of a positive time decay theoretically, which is interesting. All else with this one though, you need a rally. You need this momentum-driven move to continue, because this is the kind of stock, and it's nothing to do with Lemonade or the business that it's in, but when you make a move this quickly, we've talked about this with SMCI and other names, when the move runs out of steam and momentum, it can make a quick turnaround. We saw that, and we talked about that with Palantir. You're starting to see that unfold in that stock. And so really just hoping and looking for this particular momentum-driven rally to last through next week, get to above 50, and hang out there.
Yeah, and maybe just like normalize, which I never think is it's a terrible thing to see more steady and more like less volatile price.
One thing about swinging PDD.
Actually, it's a great segue into our next.
Tomorrow's Thursday. I don't know if I want to get next week. Oh God, they're expensive. The 115s are at 580. Let me see this week. I'd have to scalp it and get out of it tomorrow morning, first thing. I wouldn't have time to recover. I get a 120 strike. What to do? Oh, we were a little bit too late. I wish I'd have thought about this morning. There's this perfect breakout. I like it right there. So this would be a swing for tomorrow morning's earnings. Today's Wednesday, tomorrow's Thursday morning. I gotta see if I can find anything about earnings here. We got 123 calls for Friday. Let's see here. I grew up one here at 315. Just take a small risk. Okay, PDD earnings tomorrow morning. I've got one call, the 120 strike for this week, Friday. They'll be getting in and out of this trade in the morning. I don't know if it's going to pop or not. It's very risky, I think, because it's China. But it had a good run, and it's had a $45 pullback from the high. The only thing right now, I think, the catalyst, I didn't even analyst. Oh, here we got something here. 39% show bearish tendencies out of the trade spotted. 27 puts, 60 were calls. Who made 35 million? The chair sold 35 million of stock. Tesla chair sold 35 million of stock amid post-election surge. Ah, you dummy. Why'd you do that? She made a killing.
in that region of the Eastern Mediterranean, above the Red Sea in Egypt, as well as the Ukraine-Russia conflict, which is actually creating some constraints for Black Sea wheat. So I think Zim Integrated is actually capitalizing on conflict, to be honest with you, if you consider what's happening between Israel and Palestine, and of course Ukraine and Russia. This company's actual rates or freight rates have increased substantially. There's a lot of demand for wheat out of the Red Sea, which is then utilized and shipped towards the rest of the Mediterranean, Europe, but also in Caribbean imports in North America. Now, if you look at the print of EPS, this was a pretty significant increase compared to last year. The company earned about $9.34. The estimates were $7.45. Now, last year for the same quarter, the company actually lost $2.26. So it's a tremendous turnaround in earnings, and sales actually beat the estimates at $2.77 billion for the quarter. The estimates were $2.21, but looking at last year, this is a 58% increase towards or relative to the $1.27 billion for the same quarter last year. And you can see, how prices for freights and logistics, and of course the demand for their vessels has increased, because the company reported 118% increase in the average freight rate, only on an additional 12% increase in demand for volume. So volume in the shipping business is slow and steady. You can't increase total volume of your fleet unless you, of course, procure new vessels or reconfigure existing vessels to handle more volume. But you can see that the total price that they charge their customers was about 5 times total sales growth.
So basically, this company has just utilized on the overall tension overseas, to my understanding, and it's amazing. There's not a single analyst with a buy in this name. And you look at the stock. The price performance over the last year or so, we're up 181%. So have analysts just ignored the fact that unfortunately this company is going to benefit from the overall tensions overseas?
Yeah. Well, that's a good point to bring up. Yeah, ideally speaking, this is a smaller company from the standpoint of maybe analyst coverage. It is a foreign company that does trade on the New York Stock Exchange. But nonetheless, I think what's happening here is that the expectations for earnings this year, as well as next year, by the way, the full year next year, and just to compare the quarter they reported in context, they reported $9.34. For all of next year, they're expected to earn about $12.50. So there's going to be deceleration in this rate expansion for Zim, because freight rates are very volatile and they can expand quickly but also contract quickly. So I think that's perhaps one reason why the analysts are more balanced on this versus being very aggressive, irrespective of the price move you mentioned, Jenny, in terms of how it's increased over 180% over the last year. The other thing is the company also might have some constraints on earnings, because they're expected to deliver or expect delivery of 12 LNG vessels. And so once these LNG vessels are delivered, that's an expense that the company has to incur. While at the same time, the company is trying to reward shareholders quite nicely. They did increase, or did denote, $100 million in dividends. It's a special dividend of about 84 cents per share for shareholders. But the company has been raising cash as well. The cash on the balance sheet right now is over $1.5 billion. So the company seems to be a little bit more conservative in their balance sheet financial mechanism versus expanding their growth, which they are. Their container ships obviously are in high demand, but at the same time they're procuring a lot of LNG vessels, which again may take some time to generate profitability on those.
Yeah, and I think good point there. And a name we don't look at often, but I do think it's been quite interesting as far as its performance on the year has gone, and a decent move today. So appreciate it, as always. George Tellis, Senior Markets Correspondent for the network. And that'll do it for Alex and myself for Next Gen Investing for this Wednesday. Of course, we will be tuning in to NVIDIA's earnings due out later today. But coming up next, we have the watch list.
Join me, Oliver Rennick, alongside Schwab Network's options experts as we explore the second derivative. Gamma On is a brand new limited series to take your trading skills to the next level. Subscribe to Schwab Network's YouTube channel now.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Accelerate your market knowledge.
And shift your perspective into full view. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
Welcome to the watch list. I'm Nicole Petalides. It's 2 p.m. Eastern Time, and we're coming to you live from the New York Stock Exchange on NVIDIA Day. Oh, today's the day, and everybody on Wall Street is certainly waiting. We've also had back and forth action for stocks today due to some headlines, geopolitical headlines, and more. So we have a big show for you today. Alternative investments are on our radar. We'll discuss why advisors are embracing them for everyday clients. We'll focus on private markets and why our guest believes the best opportunity in the current market environment is in commercial real estate debt. We'll explain. And our panel standing by to preview the earnings from Snowflake that are due out after the bell, a name that has been...
I heard they created some coins with Tyson's butt cheeks. A cheap NASDAQ stock to invest in now. PD aggressive expansion. Should you buy this cheap stock? Among 12 gross large caps, Alibaba revenue misses amid weaker Chinese economy. Revenue rise on consumer sentiment improves on JD.com. Here at PDD Holdings to report third quarter 6 days ago. I'm in this one right now. Dublin, Shanghai announced that. Damn.
We had some good reports, but we really never got to a point where we said, you know, this is a done deal. And now we're seeing inflation is a little bit stickier, right? And we, of course, now have potentially fiscal reasons, you know, the extension of tax cuts, you know, to think that maybe inflation is still going to be an issue, tariffs, right? So if you're...
Oh, you're full of crap.
And again, your mandate is inflation and employment, and the employment...
These liberals, man, I'm telling you. Things aren't as rosy as they think they are right now. Inflation has not gone down. I'm still paying a lot of money for my frickin' food. Get over this. I wouldn't have her working for me. None of them ever mentioned about geopolitical. That's what gets me. I saw a 40% correction on the market when we got 911 hit. Imagine if New York gets nuked.
Investing in certain sectors, I saw you have certain sectors you think could move with the Trump administration's ideas and policies. Are there some that you think you're definitely investing in?
We had a great market under Trump. One of the best markets I've ever traded in my entire life. This market here is very irrational. I mean, I've never seen anything like it. I don't know if it's a good thing or a bad thing. I don't think it's a good thing if you printed $13 trillion to bring the market up. $13 trillion in 4 years. And it all went to the rich. Most of it went to the rich.
Not just making a bet on who's going to be in charge, but you're also making a bet on how well the market has priced in, already knowing who that is, which is, of course, a much harder place to be. So I'd be careful about taking sector bets at this stage of the game based on that. I do think if you think about areas like small caps, you know, if we do have tariffs, you know, maybe they're less import sensitive. But on the other hand, if we have higher for longer on interest rates,
and we're paying for it because of inflation.
So, you know, all in
13 trillion
obviously diversified
printed
portfolio, maybe tilting a little bit into the small cap, particularly small
printed
cap value space, as I always think that's a
not real money. Printed.
under Trump. You just can't always translate that well.
No, you're full of crap.
To what the market is priced in. Yeah, under.
Now you're talking real when you should have been talking real about a year ago. But they're in charge. You got to follow their stream. I mean, they're telling you, we want to see a 20-30% pullback in the market. That's what they want. They're just kind of giving it to you in little sentences.
The recent news, big news, Target, Wells Fargo, Trade Desk. We'll be right back.
He might not even do the tariff deal. Wouldn't that really throw these guys off? He wants to make peace. He doesn't want to create wars. And after what Biden has done, I mean, I think he's going to be very nice. They're just mad because we're going to be taking away their Dick Cheney and Liz Cheney's coffers on the war mongers. That's why they like them, so they can get rich. Cheney's always been invested heavily in war stuff. That's what the Dems used to say. Now they're in love with him. I never was. Too much of a rhino.
Welcome back to the Watch List. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. It's time for Options Corner, where we analyze unusual options trades that we're seeing throughout the day. Tom White is here, host of Fast Market here on Schwab Network, taking a look first at Target, which obviously had a huge sell-off, its biggest sell-off in more than 2 years. It's been down over 20%. I'm seeing a lot of the analysts cutting their price targets after, you know, obviously a tough quarter and an outlook too, a triple whammy, not in a good way. Let's talk about Target and what you're watching and the bearish trade you found, Tom.
Yeah, there's actually a lot of option trading in there. I think some people are buying some calls, trying to pick the bottom here. Some people are piling into puts. Also, put volume about 10 times normal daily average volume that we've seen over the last 5 trading sessions. So a lot of activity in this name. And if you take a look at the results, compare them to Walmart's from the day prior, where they hit on every metric and exceeded. Target did the exact opposite, Nicole, where they missed on EPS, they missed on revenue, they got it lower for Q4.
I didn't go out to December 20th.
So yeah, this was a bad report. Comparable sales.
I didn't think about that.
0.3%. So those came in a little bit lighter. CEO.
That's what I would do.
You know, the CEO Brian Cornell basically came out and said, "Hey, discretionary items still aren't selling. We don't expect them to start picking up anytime soon." So consumers are making those choices over groceries and maybe staples as opposed to a lot of the discretionary items that Target has. They also took a hit from costs based on, getting deliveries.
Like 7,000 contracts for the 130 strike.
During the port strikes, the storms, things of that nature. So not one thing went right for Target during this, and that's why you're seeing it down over 20%. Citigroup came out, downgraded the stock to neutral from buy, 130 from 188. Deutsche Bank downgraded the stock to 108 from 184 to hold from buy also. So already a couple downgrades. I'm sure we're going to see more of those from the analyst community tomorrow. And we saw some unusual option activity. I mentioned put volumes about 10 times normal daily average volume. One that stuck out to me was out the January cycle, the 115 strike puts. Trader bought over 8,000 of these puts, paid an average debit of just under $2.60. So the break even for this trader where they start to profit is down at 112.43 over the next 58 days. So you've got 2 months in this position, this trader does. That break even's about 8% below the current share price in Target. Now, like I said, I saw some put sellers out here too. Maybe somebody trying to take advantage of the move down, implied volatility levels getting hit a little bit, but still elevated due to the magnitude of the more than 2 standard deviation move to the downside. But this one kind of stuck out to me that, hey, Brian Nichol and his team aren't going to turn it around anytime soon, even though, Nicole, we're right in the midst of holiday shopping season. It's supposed to show pretty solid growth as far as estimates and probabilities for most of the retail space that think that retail sales are going to grow during this fourth quarter, but Target may not be participating.
Yeah, and you know what? The concern is that, you know, the margins headwinds could continue. Yeah, I know you talked about some one-off situations with the port and whatever, but all these other retailers did so well, which makes it even worse. You know, if they were all bad, it might have felt a little, we could have stomached it a little bit, but you did know people are trying to pick a bottom, see if they can see an upside to Target. And what's interesting, on the last earnings call, it had this big gap up, and now on this one, it has a big gap down. And Bernstein talked about worrying about margins going forward. Let's move on to Wells Fargo. You found a bullish trade there. We'd like to hear about that.
Yeah, the stock actually hit all-time highs on Monday, right? The whole financial sector has been rallying since that Trump win, but they were already on a big pace to have a good year in 2024 already ahead of Trump winning. Well, what's that mean? Well, it means less regulation, right? Tax cuts, maybe more incentives for loans and business activity at this point. And what does that equate to? Well, that increases margins in business for banks like Wells Fargo. Stock's up about 48% this year, as I mentioned. Hit those all-time highs on Monday. A little bit weaker in today's session. JP Morgan did get downgraded today. Citigroup did come out earlier this week. They raised the price target on to 82 from 67. Charlie Scharf, the new CEO, is trying to make changes. Remember, they still have an asset cap of about $1.95 trillion that's been in place since the 2016 problems with their fake account scandals. So he's working to get that remedy. That would open up a lot more opportunity for Wells Fargo. But if you take a look at where we are right now, with the interest rate, the yield curve starting to expand a little bit, margins are improving for a lot of the banks. And then you throw on top of that the Trump win and the Republicans owning the Senate and the House. This might make it easier to get a little bit more deregulation within this space, and especially if we see growth spurring as far as the economy goes next year, which a lot of people are predicting. That's why you're seeing the optimism in the equity market. But did see some bullish call activity in Wells Fargo also today, and this was out in the January cycle also. So 2 months till expiration, the trader bought 5,000 of the 75 strike calls. Paid an average debit of about $2.86, so that break even of $77.86 over the next 58 days. That's about 7% above the current share price. Now, the all-time high in here, $74.70 that we hit on Monday. So this trader's betting that over the next 2 months that we're going to see more gains break through those all-time highs, and they profit anything above $77.86.
It's 122, 222.
Yeah, understood. I mean, the financials have been so incredible. You were talking about the group overall and the new highs for Wells Fargo, and JP Morgan has been obviously one that so many of our guests pick, and meantime got a downgrade today over at Oppenheimer, right? So, you know, I wonder how much people love the group going forward, but that has obviously run up too. How about Trade Desk, another name here with a bullish trade that you found?
Yeah, big news on this one today. That's why you're seeing it pop almost 4% in today's session. They unveiled Ventura, a new streaming TV operating system. Now, one of the stocks that's taking a hit on this news is Roku, right? They've got that operating system on those smart TVs where they can place ads, right? And they're producing a little bit of content. Well, the Trade Desk doesn't produce any content. CEO basically came out with this new operating system that's going to be available. They'll be able to pinpoint and target better advertisers, right? Because their platform, the Trade Desk, is an advertising platform where somebody comes on, kind of says, hey, these are my demographics, this is who I want to focus on as far as advertising goes, trying to compete against Google, Alphabet, Meta platforms in this space. They own a majority of the digital ad platforms, but the Trade Desk has had a great year, up over 70% so far this year already, just below those all-time highs that we hit last month. So this is a new venture for them. Are they going to be able to take market share away from Roku? Because we've seen some solid growth out of that operating system that's on those smart TVs. So digital ad spend really picked up a lot this year, especially with the election. Will that carry over? And will names like Sonos, Paramount, Disney Plus, they've already expressed interest in using the Trade Desk's digital ad platform, but now they're going to have an operating system also that can interconnect maybe all these streaming platforms and provide you a better base for digital ad spend, right? So I think that's the whole concept here. We did see some unusual option activity in here, not surprising, with the stock popping to the upside here today. Out in the November 22nd weekly cycle, so really short-term positioning by this trader. They bought over 3,000 of the 125 strike calls, paid an average debit of about $1 on those, so that break even of 126. Over the next 2 days, really short term, it's only about a 1.5% above the current share price in there, with call volume about double normal daily average volume that we've seen over the last week of trading. So yeah, good news for the Trade Desk, bad news for Roku, but saw a lot of call buyers in TTD today.
Yeah, an exciting new path for them. And to your point about Roku, down 8% now on the news. Yep. So a big story today. Tom White, thank you always for Options Corner every single day here on the watch list. A good look there at Target, Wells Fargo, and Trade Desk. Coming up, we'll focus on alternative investments and why advisors have found this and have embraced these kinds of investments, and they think it really serves some of their everyday clients. Let's hear more about that. We'll be right back.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access, even when equities markets are closed. All on our award-winning Thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage and insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this girl. It's Schwab.
Schwab.
Have a choice in how you invest with Schwab.
Join
me, Oliver Rennick, alongside Schwab Network's options experts as we explore the second derivative. Gamma On is a brand new limited series to take your trading skills to the next level. Subscribe to Schwab Network's YouTube channel now.
Three Black Crows.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back
Damn.
to the Watch List. I'm Nicole Petalini.
Nvidia's not too happy.
Stock exchange right now, the Dow's down 100 points. We have a few movers in the market for you right now. Have you seen shares of Lemonade soaring after Morgan Stanley upgrading this stock to an equal from underweight,
Shit.
raising the price target there to $42 from $23. Morgan Stanley citing Lemonade's plan to expand in-force premiums to $10 billion from $1 billion and reach net profit by the end of 2027. The firm believes Lemonade's focus on younger demographics
just leave it alone.
and cross-selling opportunities in
We're at
auto
375. I got them at 4.
plan. Here's a look at e.l.f. Beauty. Shares are falling after Muddy Waters revealed it is short on the beauty name. So the firm believes the company has
I'll get up for a second.
revenue over the past 3 quarters by about $130 to $190 million. Muddy Waters believes e.l.f. Beauty began reporting inflated revenue and profits in its second quarter of this year after realizing its growth narrative was in trouble as its inventory built. We have the e.l.f. the CFO on regularly. Certainly we'll hear more from e.l.f. Alternative investments in focus here, as we've seen more and more advisors using these alternative investments and it's serving many of their clients, all kinds of clients. Our next guest, Steve Houston, Managing Director, Co-Head, iCapital Solutions, is with us. Thank you for being with us there at the Schwab Impact Conference. You said it's getting very busy. I'm sure a lot of folks are talking about alt investing.
They definitely are, and it's very busy here. We're delighted to be here. It's exciting. So many of our clients and a lot of buzz, a lot of narrative around alternative investments. So we're happy to be participating.
So what kind of alternative investments are we talking about that seem to be popular and well received by clients?
They sort of span many different asset classes, and so iCapital is a technology operating system that sits on an advisor's desktop and gives them access to all the different asset classes. And that includes hedge funds. It includes the other private asset classes, private equity, private real estate, private credit, private infrastructure. And within those categories, there are certain ones that right now are a little bit more popular than some of the others. Private credit in particular has been super active space, and increasingly more private equity, especially with the advent and proliferation of evergreen private equity funds. Those have been very actively embraced.
Why do you think private credit stands out at this point?
It's true portfolio diversifier, and it adds a lot of true portfolio benefits. And so traditionally, within the fixed income sleeve of an asset allocated portfolio, one would include municipals, corporates, treasuries, high yield certainly. Private lending is a whole new avenue, a whole new asset class, and it provides significant yield enhancements, significant diversification enhancements, and it's a category that wasn't traditionally easy accessed. Most of those offerings were not offered in the form of mutual funds or ETFs, for instance. One needed to invest in a private fund. And so through our technology and through our capabilities, we're actually now able to make that a little bit more easily accessible to financial advisors and their clients.
Right, understood. So at this point now, when we talk about inflows and people putting money to work, are you finding a lot of demand? Are people saying, listen, I want to put money to work? What is the demand and interest in alternative investing? Is it more than last year, let's say? Is it more, you see it growing for the new year?
Absolutely, it's growing year on year. Think about it this way, we are in the early stages of a super trend, and that super trend really is the shift from clients' portfolios from public holdings to including private assets. It's a super trend that many of us in this industry haven't seen the likes of in decades. And it's the early stages right now of that super trend as clients and advisors are shifting their portfolios from the public market, stocks, bonds, mutual funds, and ETFs and the like, to include private assets, private credit, private equity, private real estate. And so there's trillions of dollars that are gradually shifting as these offerings become available.
Yeah, you mentioned real estate. I mean, that was a smaller percentage than some of the other interests you mentioned.
listed companies in the United States. It's a large pool of assets. There's large opportunities there, but the private markets are much, much larger. They're multiples the size of the public markets. They've just been harder to access. So one typically will access those via a private equity fund, for instance. I almost think of that as like the Olympic pool. You want to be in that pool of opportunity sets, not just being limited to the public markets. And I think that's kind of back to my narrative around this super trend, the shift from public to private. Certainly public markets will continue to dominate what are in client portfolios, but more and more and more through technology, through education, through access to top managers, one can get access more seamlessly to private market funds, whether that's private equity or private credit or private real estate that you mentioned.
Yeah, and final thought, I mean, how would you describe how you're feeling and your interest in the markets? You know, the new Trump administration coming in. How are you feeling about the new year overall?
Very exciting. I was just talking to some of our industry colleagues in the hallways, and everyone's pretty excited about the potential opportunity set and really even how a new administration can only accelerate it. As I said, the trend is definitely accelerating already, regardless of what's happening in Washington. But there's going to be some new avenues that I think will open up, and perhaps in a more accelerated manner. That might be private assets and ETFs that we're hearing about. It might be private assets in defined contribution plans that we're hearing more about. So I think it's a really exciting period for the private markets in general, and for folks like ourselves that sort of act as the nexus between private wealth managers and private asset managers.
All right, Steve Houston, iCapital Solutions. Thanks for joining us on the show, and enjoy the Impact Conference. That sounds like it's incredible and generally packed, and lots to talk about there. Thank you so much. Good to see you.
It's our pleasure. Glad to be with you. Thanks so much.
Thanks. Coming up, our next guest shares why the best opportunity in the current market environment is actually commercial real estate debt. So let's get into that. We'll dive into that right after the break. We'll be right back.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platform on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
I'm Nicole Pedalides, host of Trading 360 and The Watch List, live on the floor of the New York Stock Exchange, where we bring you breaking news, experts, CEOs, influencers, and analysts. It's all available on Schwab Network.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Well, she bounced back up. I didn't add one. I could have added one 375 on my NVIDIA call. Can't wait till after hours. It'll probably sink.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please. But there's a Carl's Way.
Take a left here, please.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we? No can do.
I'll get out there.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
Welcome back to the Watch List. I'm Nicole Pedalides. We are looking at the Dow down just 58 now. Had been positive early in the morning. Is it giving it go between now and the closing bell? We'll see. In the meantime, we want to dive into private credit markets a little bit more here. We welcome in Rich Byrne, President, Benefit Street Partners, Franklin Templeton Company. Welcome, Rich. Great to see you. I'm glad you're on. I'm sure you're talking a lot about private credit markets, which really have grown in interest over the last year or two, right?
They sure have, Nicole. It's great to see you. Private credit is the topic everybody wants to talk about. And just to set the table a little bit, our firm, Benefit Street Partners, we do everything credit. All we do is credit. Private credit, liquid credit, real estate credit, distressed credit, you name it. But the product area that gets the most attention these days is private credit, for a lot of reasons. I mean, there's a lot of really good aspects about private credit. The only problem is, when everybody all wants to go into something at the same time, it creates, less attractive conditions. Spreads tighten and the opportunity diminishes.
Yeah, understood. It becomes a crowded trade and less obviously interesting for folks to do that, or beneficial. You talk about the different types of debt at this point. What seems to be most popular, and how are they getting into commercial real estate debt in particular?
So, great question. So we're always thinking about best relative value. From time to time, different markets obviously present different opportunities. And right now, the best relative value across the entire spectrum of credit that we look at is real estate debt, is real estate lending. And it's exactly the opposite of what you would intuit, because things aren't great in commercial real estate. In fact, they've gone through a hell of an upheaval, both with higher rates, all the looming maturities, and the problems that many properties are going to have in refinancing. And the bigger problem is office. I don't need to tell you or any of your viewers, office is clearly a problem in our country, worse in some places than others. But that office problem is causing a lot of the traditional lenders to completely pull back. they're trying to maintain enough liquidity to back
Woo,
themselves
there
out
she
of
goes.
these
What's an
problems.
office
And while
problem?
they're not lending, that's where the opportunity comes from. And contrast that with private credit, where all this capital is being raised. You know, I think that's the biggest difference between the two markets right
Well,
now.
what's the problem?
Yeah, and is there a premium? Because what we saw, remember last March, where we saw a lot of those smaller regional banks that had exposure to real estate, and we had that high rate environment, and you know, real estate firms are trying to redo leases as they're coming up, and they have this high rate environment. I mean, it became a real pickle overall. That being said, now you see folks moving to private credit. It works. Is there a premium? Has it been lucrative? I mean, how happy have you been in 2024?
So private credit was clearly a strong performing asset class. Probably its best attribute is for the same level of risk as in the liquid credit market. In other words, broadly syndicated loans, you're getting a yield premium. You're getting better covenants and you're getting a yield premium. And even though credit spreads are tightening for all the reasons we said, that yield premium still continues to exist. So private credit is a great place to be, considering default rates may be up or likely to go higher, but they're still at such a low level relative to where they have been historically. As you know, the economy is still relatively strong. I mean, it's a really good backdrop for private credit, and again, which is why a lot of people want to go into private credit.
Yeah.
But you know, a lot of the same favorable aspects are true for real estate, yet that trade isn't crowded. And you know, again, that's the theme here.
I think also people who want to get into private credit markets don't necessarily know how to. I'd love to hear your input on that. I mean, how do you suggest that they do that? Because to your point, there's a lot of money on the sidelines even now.
Yes, there is. So private credit used to be something almost exclusively limited.
You got a 1, 2, 3 on CrowdStrike.
You know, big state pension funds, sovereign wealth funds would invest. There were big investment minimums, and private credit was really a product for that crowd. That has changed dramatically over the years. And the two biggest places where the average, you know, high net worth or regular plain old retail investor can invest is through BDCs, interval funds as well. But really, the easiest way to think about it is BDCs. There are
Said an alert.
50 publicly traded BDCs investors can buy, or there are many private versions of those BDCs being raised. And that's where a lot of the capital formation is coming for this asset class, and it's from retail. You know, retail, why wouldn't they want access to, you know, better risk-adjusted returns? And that has contributed meaningfully to the growth in the asset class.
Yeah, I think you also wanted to mention one of the REITs that you work with closely. Is that right?
Yeah, sure. So the equivalent of a BDC for commercial real estate is a mortgage REIT. So we have a publicly traded mortgage REIT. It's listed on the New York Stock Exchange, Franklin BSP Realty Trust, FBRT. I think we're the 4th largest commercial mortgage REIT. Think of it as literally the same as a BDC. BDCs lend money to corporations. Mortgage REITs lend money to buildings. And as I said, the opportunity in commercial real estate lending seems better at the moment. So, you know, we think that's a really attractive asset class.
Yeah, and you think that you better get off the sidelines with that money, that cash on the sidelines, right? Final quick thought, Rich.
Yeah, so we favor going in when there's dislocation. Sometimes that's the best time to invest. The commercial real estate market, you bring up the top of commercial real estate, people's reaction will almost immediately be negative because they probably lost money on an office property or, you know, whatever the case is. But fresh capital going into a dislocated market is 9 times out of 10 the best opportunity you're going to find, and that's where we've been focused.
All right, Rich Byrne. Well, enjoy the Schwab Impact Conference there in San Francisco. Great to chat with you about this. Nice
SPX popping.
Benefit Street Partners. A Franklin.
Thanks, same here.
Company. Thank you, Rich. Good to see you. All right, coming up, the earnings from Snowflake are due after the bell. It's not just NVIDIA. What about Snowflake? We'll be right back.
I just love this market. 175 to 415.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh. Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl?
Schwab. Schwab, a modern approach to wealth management.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education, crafted just for traders. Also, you can trade brilliantly.
Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network. Welcome back to the watch list. Time to focus on Snowflake. Snowflake, the company is due out with its earnings after the bell today. What can we expect? Is Snowflake likely to move higher at some point? Chris McMahon, President and CEO at Aquinas Wealth Advisors, Ed Butowski, Managing Partner at Chatwood Investments. I'm glad you're both here because it has left shareholders wanting, right? I mean, it hit a new high back last February and a new low of 107 in the fall of this year. And really, this was supposed to be a name. I remember doing a whole research report about a year ago. This was the takeoff name.
Yep.
I mean, put all your eggs in this basket. Chris, that was not the case. And now people are waiting today for something more. Tell me what you're waiting on.
Well, it's interesting, right? Down 43% for the year. NVIDIA, because they have more opposite trajectories, right? NVIDIA and Snowflake. Snowflake, it's an interesting case study, right? They were big in the cloud warehousing. They were the newest at it, they're the best. All of a sudden, they already have to pivot. They've been public for such a short time. They have to pivot, right? They're trying to get into generative AI, into predictive AI. That stuff costs a fortune. We're concerned about where this goes for them. Certainly off 44% of the year. Makes us think there's some room. All they need is a couple positive announcements. They have signed a few deals. I think they have to migrate more to subscription service if they're really going to stabilize themselves and take off. Databricks is about to go talking about going public as well. So they have real competitors in this space, Nicole, and I think they have to really hunker down. Their new chairman has talked about the shift, to generative AI. They're going to have to invest the money, and I don't think it's going to be an easy lift for them. I think it's going to be 36 months, 24 to 36 months before you see any really significant takeoff for Snowflake.
And Ed, this is one you're watching. It may have potential. What are you watching for?
Well, it all goes back to earnings. It always goes back to earnings. And right now, analysts are expecting a 40% year-over-year decline in earnings. So when they came out and they went public, they were like a spaceship just, skyrocketing. And then earnings came in and they were negative. And then the earnings forecasts have come in and they're relatively negative. So that's what I'm looking for is, as Chris had said, looking for earnings to turn around. There's a, it was at $230 previously within the last year. Then it hit a low of about 107, I think. Now there's a target price of 164. It's up 7.5% this month. So, I do believe we're going to see some negative earnings. The question is, how bad are those earnings going?
Negative earnings.
Yeah, I mean, Rosenblatt has a 180 target that they put out on the 19th, which, that was yesterday. So, I mean, they see some possibility here, but, a miss could impact this stock greatly to the downside or not necessarily, Chris?
I think the miss won't hurt them that badly, Nicole. I think they've already told the world, look, we're getting punched in the face here. Things are terrible. And I think people will, I think Ed's right on. It's all about earnings, and a miss wouldn't be great.
Yeah.
However, I think they've already laid out their new trajectory.
Yeah, how about the competition, Chris? That was something you were focusing on.
Yeah, Databricks is a huge one. You have Google, Databricks, Amazon, Azure. There's more competitors in this space. Nicole, some of them are a little more fleet of foot. And if Databricks goes public, gets all that cash rolling in, I think all these guys are chewing into their space. And it's not a, Ed's right, it was a rocket ship, but now I'm not sure it's maybe it's more a Cessna or something. I think it's going to, I do agree with the price outlook. We think it's around $160 stock just because it's been beaten up so badly, but it's by no means, smooth sailing looking forward for Snowflake. I think we're telling people to have it, hold it, but we're not telling them to go out and, add a significant holdings here.
Yeah, I mean, I guess Rosenblatt with the 180 is above some of these 160 price targets. When we think about Snowflake, which you said it may be a little expensive here, Ed Patowski, is AI, it's not a Snowflake story here, is it an AI story? Is AI revolution slowing down, or is it more, this could be a Snowflake problem? Ed?
Well, I think it's more of a Snowflake problem. I mean, everybody is AI now. You can't go anywhere these days without AI being, intertwined, I should say, into a business. So everything is AI, but this is about getting customers and earnings. And the revenue is going to be interesting. The net decline in earnings per share is going to be because of expenses due to increased expenses because of AI.
Have you been buying other AI names, Ed?
I like GigaCloud, GCT. I like GigaCloud a lot. I think that it has a very few number of shares that are owned by institutions. It has a very high short position. It has a forward earnings per share of 6.9, and its earnings per share growth rate is 44%. I think it meets a lot of the CanSlim measures that William O'Neill put out for the greatest stock market winners of all time. I really like GigaCloud, GCT.
Great to see you both, Chris and Ed. Thank you both
GCT.
Chris McMahon, Aquinas Wealth, Ed Patowski at Chapwood. Nice to see you. Thanks. That's going to do it for us here on the watch list. I'm Nicole Petalides. Thanks for being with me. Download our free Schwab Network app. It's available in the Apple App Store. 24/7 SchwabNetwork.com. Keep it right here. Market on Close, live from the Schwab Impact Conference. Who's next?
Join me, Oliver Rennick, alongside Schwab Network's options experts as we explore the second derivative. Gamma On is a brand new limited series to take your trading skills to the next level. Subscribe to Schwab Network's YouTube channel now.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com on all your streaming devices. Schwab Network is available anytime, anywhere, on any device for free. No place better than the Schwab Network.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. All so you can trade brilliantly.
Power Hour, 1 minute.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we?
No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access, even when equities markets are closed. All on our award-winning Thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
Good afternoon and welcome to Market on Close. I'm Oliver Rennick, live from the Schwab Impact Conference in San Francisco. We have kind of a quiet market day right now, but it's about to heat up this afternoon. NVIDIA earnings and everybody's watching. Not a lot else going on. Economic data pretty quiet. Maybe tomorrow we get some action on that front with jobless data, but right now it's been pretty calm in the bond market. Things we were thinking about last week have generally taken a back seat. We're also monitoring any new appointment information, news flow, speculation, or rumors about the Trump 2.0 administration. So that's our balancing act. But for the most part, stocks are hanging in there just fine. Down about 0.75% in the NASDAQ right now, with NVIDIA lower by about $2.60 and change. I am watching some of the currency movements that are interesting. Dollars up 0.5%. Bonds have been down, but obviously the 10-year keeps getting stuck around 4.4, 4.45, so we just can't quite seem to get the punch through higher for yields. But stocks having a little bit of trouble anyway. Equities been kind of zigzagging with a slightly more negative a bias than what we've been used to pretty much throughout 2024. A lot of questions on folks' minds here about what to do with a highly concentrated passive portfolio. I've been meandering, meeting folks here, trying to figure out some interesting funds to bring you guys. We've got a lot of good guests that'll be joining us here. Economists, fund managers, and big picture idea people too, of course, from our Schwab team here at Impact, as well as some of the big heavy hitters of Wall Street. So stick around, we got a great show coming up. Bottom line, I think one way to summarize the situation market-wise right now is just the VIX. Let's go through some movers here real fast. Volatility is up.
just shy of 18. VIX at 17.7 right now. Does give us a little bit of a change of tone compared to the straight up market that we were looking at in the wake of the election. We see some air come out of that in the past week, and that's kind of my baseline right now, is monitoring VIX, whether or not it's above or below the average, which is about like 16.5 to 17. So slightly above average. The tick up in VIX after the gap down in VIX from the presidential election tells us a good bit about some of that air coming out from the speculative fervor that ran stocks way up and vol way down. Look at the chart of Bitcoin, and you don't really get the message about volatility. For that, it's essentially straight up and to the right. Now, the chart also interesting because the RSI has been sitting basically at 80. For those that know what I'm watching in BTC, I'm watching the momentum, I'm watching the relative strength to see if it gets back above where it was in the run-up around the ETFs. That's going to be a pretty big hurdle. You got to get to RSI 85, 90 basically. That's what I think would then unleash the path forward for those looking for 100K plus in Bitcoin. But it's still solid even as stocks have been a little bit choppy. So crypto is way out in a world of its own right now. Today we got some earnings that are shaking up the market a little bit. One thing to point out is the retail group and the consumer discretionary down. You got Target getting shellacked again, but it kind of seems like it's Target problems. Walmart is smooth and steady and reliable as it goes. The consumer ready to spend on just about anything, but Target falling apart here. I got XLY in the green, showing you the regular consumer group for the S&P. You're getting extra if you go with Walmart though, which is pretty amazing. Definitely telling us a story about market share take and the management and execution of capitalizing on a consumer that still is in an interesting spot given inflation lingering. So Target's a disaster today, but that story is basically past. What we're going to be thinking about a lot this afternoon is NVIDIA. The numbers are coming out. We got an extra 30 minutes on the back at MOC today, so this is a 2-hour show coming up. We're going to get details. We're going to give you the numbers as they arrive. A huge report. The chart of NVIDIA has been kind of stuck, basically going sideways around the 140, 145 area. If you really wanted to get under the hood and get real particular on the chart, you might find some kind of short-term negative bias given resistance at 150. But resistance for NVIDIA has basically been made to be broken over the last 2 years. So if things don't surprise to the downside, and boy would it have to take a real shocker here. But keep in mind there are some anxieties around some of the chip trades. SMCI has been a disaster, obviously. They are a customer of NVIDIA. You've also got the heating situation with the server racks. Is any of that going to derail what has been described as the endless, insane demand for AI tools and chips? Probably not, but either way, this is a huge report. Let's go to Chicago first and talk about some of the other news flow here. Kevin Hanks joining me. It does seem, Kev, that even though NVIDIA is our focus, we got to keep an ear attuned to what's happening as Trump 2.0 builds their cabinet. There were some rumors swirling about maybe who's going to be Treasury Secretary. I feel like that does maybe have more of an impact on potential market activity than, say, Health and Human Services.
Sure. Well, we know who it's not going to be, and that's Howard Lutnick. He was up for it, he wanted it, but he got Commerce Secretary. Now that leaves a shorter list, but still several people coming from all different angles. The leader seems to be Scott Bessent, the CEO of Key Square Capital Management. He seems to be the leader right now. He's the one who favors deregulation, increasing domestic energy, tax cuts. He supports tariffs. So he seems most in line with Trump. Then there's John Paulson, also a hedge fund manager. He's known for making money in the financial crisis, the housing market, subprime. He's up for it as well. He also thinks tariffs are a good way to boost U.S. manufacturing. Then Robert Lighthizer, we know him because he used to be the U.S. trade rep in the first Trump administration. Now, he's an international
tariffs. Did you hear what he said?
Really good with tariffs, things like that. Then there's Kevin Warsh. Then there's Mark.
Tariffs will boost manufacturing. I don't think half of these people on Wall Street know what they're doing. I really don't.
Favorite, but President Trump doesn't always go with the favorite, as you know.
Right, true. It seems like, though, we are kind of getting to some of the funner, high-profile stuff possibly that could get some of those big pieces to fall into place more clearly about what 2.0 is going to look like. I mean, we're getting there, right? January's still a long ways away, but it seems like they're going to be dropping piecemeal assembly along that timeline until then.
Yeah, this is not the crazy rush like it was in the first administration. This is more, he had a lot of these names already loaded up and ready to go. So this seems to be going a lot faster, a lot smoother, though Treasury seems to be taking a little longer than most. A lot of them went smooth. There was one or two candidates and the choice got made pretty fast. This one seems to be lingering a bit.
Okay. Thanks, Kev. Yeah. Appreciate it. Staying on the pulse of policy. Let's make sure we keep our coverage honest with earnings, too. It's hard to get distracted, not to get distracted by NVIDIA, but Jimmy Horn looking at Target and coming back to the story that is driving the biggest losing sector on the day, discretionary, Jenny. We talked about it this morning. I think we kind of get the gist. Target's problems are largely Target problems, given we see strength in the consumer elsewhere. I think it's amazing the way Walmart's doing well. It's just incredible.
It is, and I saw the headline that said that Target is now this bellwether for holiday shopping and like basically flagging a warning signal, and I couldn't agree with you more. I think that this is a Target-specific problem, which we've heard not only from economic data. I mean, retail sales still crushing it as far as like expectations are concerned. Walmart's still crushing it. Costco's crushing it. And actually, I know it's the worst performing sector on the day, but consumer discretionary is one of the leaders for the month. It's up about 8.5% and 19.5% on the year. So this does not speak to a weakened consumer at all, frankly. And I think that a huge reason is because of their merchandise mix, higher prices relative to Walmart. Right now, more than, half of their merchandise is discretionary. So I think that makes them more susceptible to these various pricing preferences. And more so, I think we're seeing these affluent consumers flock to Walmart, which is something they mentioned on their earnings call, that they saw this upper income household continuing to make up about 75% of the company's gains on the year. So stealing market share does not mean that it's a doom and gloom situation for retail as we go into the holiday period. It means that Target right now needs to figure it out and figure out how to drive that consumer interest again.
Sounds like they've got some rebranding, they've got some retooling, maybe some closing. I mean, should they be knocking down stores at this point?
I mean, I feel like they did close stores and they opened that more small store footprint, like those city stores they have now that are a different type of format, and that hasn't really worked. I think it's because it's expensive, frankly. You don't have quality grocery offerings, and you have a relatively higher price point that right now in Amazon, a Costco, a Walmart is coming in and keeping prices low, and that's what the consumer seems to be really, really continuing to show loyalty to.
Yeah, wow, all right. Walmart's a beast. Thanks, Jenny. Appreciate it very much. Host of Next Gen come to us from Chicago with the earnings wrap. Discretionary, the worst performing sector of the day. Let's talk about the economy. Even though it's kind of a slow week as far as data go, there's always something to talk about. Mr. Jeff Cleveland joining me here in San Francisco, Principal and Chief Economist at Payne & Regal.
Oliver.
Great to see you, sir.
Good to see you.
Great to see you in person.
Yeah, my pleasure.
Love having you on the show the last year and a half. I think you really have an underappreciated economic voice, and I want to hear more about it today, because one of the main things that you talked to us about is every turn where folks have gotten real bearish on the economy, you said it doesn't need to be like that, and you should also assume that rates then have a kind of cap the downside as well. So walk me through where you're at now.
Yeah, I think over the summer we went through a growth scare. So, late July, early August, slower non-farm payroll growth. We had some downward revisions to payrolls, and a lot of conversations were about, do we have an imminent recession? People were messaging me, Oliver, saying that the Fed needed to get on board with an emergency intermediate rate cut. That was the mindset in the summer.
It kind of led us to that 50, I guess.
Yeah, and that kind of drove 10-year yields down to 360, 365 early September. And now we've moved back up. I think a big part of that is the data has come out better. We got a better payroll report. The unemployment rate ticked down a little bit. Q3, spending and consumer spending and growth overall looks great. Q4 looks good. We might grow 3% in Q4.
Walmart's a monster. So everybody's spending basically whatever they can afford to spend right now, it seems like. And that may not extend to super, super high-end stuff, but it seems everything else is getting scooped up, gobbled up.
Consumer, we look at aggregate consumer income as being the key driver of spending. Okay. When the U.S. consumer has income, they will spend. Saving not a huge priority. So we're seeing nominal consumer income grow at 5% annual clip. So that's enough to sustain the economy. So we think we'll continue to see growth over the next 6 to 12 months.
How much confidence do you have that the creep we are getting in
Oliver.
The job situation at the moment.
You know how much I love and the data and the hard stuff, but then we've got this other element right now. We're talking about like who's gonna be Treasury Secretary and are we actually gonna cut all these jobs? I mean, it seems like there are a few things that are a little bit outside the realm of traditional economics. Like if you really take an axe to like 1 to 2 million jobs, like Ramaswamy told us that he wants to do, how do you model it? How do you figure out what happens?
Well, I think first of all, we don't know the details on what could be implemented. We don't know the timing of that. So I think that's something. So there's kind of a knee-jerk reaction, I think, in the market, maybe premature. I always tell people, hey, at the federal level, you have federal employees, but most government employment is state and local. I don't think there's a mandate to eliminate those jobs. We're talking about school teachers and bus drivers.
They're going to go federal for that's still in their mind the low-hanging fruit.
Yeah. So I mean, if they are going to cut some bloat, I'm fine with that. If that's what the goal is, I don't think that's going to be overall negative to the U.S. economy. I just think we have very little detail to go on, so we can't be too confident in these projections. We're going to do too on taxes. Sure. When are taxes going to be cut? When is that going to be done? When is it going to take effect? Is this a story for 2026 or 2027? That could have a different impact on markets.
Do you see it creeping in ahead of the timeline it should be on? If we're talking things that are like 2026, 2027, which is very real. It takes time to pass policy. Do you see any of that informing the action of the last month? How much of it is like Trump 2.0? How much of it is just what we talked about going into it? Better than expected economic outcomes, soft landing from the Fed, a little sticky inflation maybe.
I think a big part of the move in tens since mid-September is better data. Went away from that growth scare. People realize, oh, things are not rolling over. Yeah, that's a big chunk of it. I think more recently, though, the pricing in the Fed funds futures market, for example, I think for the past 3 years, Oliver, I've been hawkish. Sure. I've been saying that if the Fed was going to hike more, they would stay on hold for longer and they would cut later and fewer times. Now I find myself looking at what's priced in, and I think actually the Fed could go more than is priced in. So I think maybe the bond market tends to swing in the wrong direction from 2 or 3 times a year, and it's now maybe gone too hawkish.
Which has been basically dropping that December to like 60-ish%.
Yep.
Is your view then that should be locked in 100?
I think it's still live. I think it's still possible. I mean, we heard last week Jerome Powell speaking in Dallas, and he said, we think we're still restrictive where we are. We're still above neutral. Why? Because the labor market has softened, to your earlier point. So they don't want to derail the labor market. I think they're on track. We can get inflation. We think by the middle of next year, Oliver, we'll be back to around 2% core PCE year on year. Middle of next year.
Okay.
The Fed's on track there. They don't want to cause damage to the labor market. They're still restrictive. So I think the bias is going to keep reducing rates. December's a good opportunity for that. And then we have 4 next year.
How stop and go should they be given the policy discussion too of uncertainty? Should Powell be aware that there could be kind of not like black swan, but exogenous events that are not kind of on the economic calendar?
I think they have to look at the data as it comes in and versus their projections.
Try and stay pure.
Yep. And I think 1 cut per quarter next year is reasonable. I think that's a gradual pace. They have 8 meetings. That's every other meeting. So I think that will give them enough time. But I think it's still the tax law changes. When are we going to know what they are? Is it going to be sometime late next year? And then when are they going to take effect? So that's I think a lot of people think that it's happening immediately, but this is stuff that could play out over a much longer period, 6, 8 quarters.
If they keep cutting, if you're looking for a cut a quarter, if you're looking for December, and then the 50 basis points was the low for the 10-year to the day, does that relationship hold in going forward where the more they cut, higher yields go? Or at some point it's got to kick back around, right?
I think, so when I think about 10-year yields, for example, 3 big factors for 10 years. The Fed path, so if they're cutting, that should bias towards lower rates. Inflation premium, if I'm right, and we get back to core PCE at 2% middle of next year, then that should put downward pressure on 10-year yields. And then the X factor really is that the third thing, term premium.
Right.
And a lot of people say that's just, you know, the catch-all, but I think what's included in there is concerns about the fiscal situation.
Auction's been going pretty smooth, though.
Yeah, well...
No disruptions, right?
Yeah, I mean, we have a big deficit to finance. There's no doubt about that. I just traveled to Europe, so I would say this is the #1 question that most of the European-based clients asked about. Is the U.S. going to be able to continue to pay interest, pay its bills?
So then if they do this big cut program and it actually has meaning behind it,
exactly,
would that then reduce term premium in theory?
Yeah, if you get if you cut bloat at the federal level, you cut back on spending, you get the fiscal house in order, we'll get a little more optimistic that the deficit, instead of being a wide 6-7% of GDP, will start to shrink. That will help your term premium, and then that could get you to
Dang, man, come on, NVIDIA.
I guess when to come back then to
Why don't nobody want to buy it?
connection, the Fed connection to the long bond, that 50 being the low in the yield, because our assumption is kind of, hey, they cut, yields come down. So far, it hasn't worked like that. What will normalize that relationship?
I think it's just they cut 50 in September.
Maybe it was a lot.
At the same time, data improved for sure, and so that was a countervailing force.
Okay.
And then just talking with clients all over, a lot of people on this fiscal concern, inflation concern front, perhaps due to Trump, and so that pushed up yields. So you just have a confluence of
For sure. Some of it might be a little more overlap, you know, rather than correlation necessarily. When you talk with RIAs here, from your perspective as an economist, what are you hearing? What are their main discussions as it pertains?
Well, everyone wants to know what to buy, and I've just been saying we've looked at 5 or 6 periods since around 1970 where you had a Fed cutting and you had the economy not in a recession, Oliver, still continued growth. And in those handful of periods where that's happened, it's been risk on. I mean, it's been good for equities. So Payne & Regal is a bond firm predominantly, $160 billion under management, mostly in fixed income. But I got to tell you, the history tells you, stay bullish on stocks, large cap, small cap, whatever. Also good for corporate bonds. In those 5 or 6 periods that we looked at, it was a good environment for high yield. It was a good environment for investment grade. Now, people say to me, oh, but the valuations are so stretched. Credit spreads are really narrow already.
Right.
But we know from the 90s and the mid-2000s, you can have extended periods where credit spreads are pretty tight. It all comes back to whether you see a recession in the next 12 months. And we do not.
Amen. Great to see you again.
My pleasure.
Appreciate it very much. Great conversation. Love the economic perspective, especially on a week where it's kind of quiet for the economic day. We made some good ground with it. Appreciate it. Jeff Cleveland, Principal and Chief Economist at Payne & Regal. Coming up, we're going to get ready for NVIDIA. Talk some more about how to fit big tech into the portfolio. Be right back.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Knock, knock. #1 broker here for the #1 hitmaker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
Yeah. Okay, we've got 2 swings. We'll see how they go.
Into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to Market on Close. We are live in San Francisco. I'm Oliver Rennick. I'm here with Brian Bendig as we prepare for NVIDIA earnings. He's the president and CIO at MJP Wealth Advisors. We're going to talk about a very, very important stock, Brian, but in the context of how folks here are kind of dealing with deep concentration that's happened over the last year. Great to have you.
Great to see you.
Tell me how you start that conversation when people go, look, I bought a passive fund, but now I'm in 4 or 5 huge positions.
Well, I think it just comes back to keeping it simple, right? If price of some of these leaders continue to go up and the client and the investor feels bullish about that trend regarding AI innovation moving forward, then it's really trying to be educational in the advice to make sure that we're trying to find ways where we're not adding to that with a lot of the passive market cap, investment strategies out there. But if we take it back to what's important tonight in the video reports, I think
I missed that. I didn't even see that trade there. I took that.
It's about the demand. It's actually about
200 SMA with a double bottom.
Because those analyst estimates for year-over-year
Right to
sales,
resistance.
talking about compares of
And sit.
growth in sales and some really big numbers for next year, right? So when you come back to that point about investors, this is why we're diversified. Look for the point about trying to say, let's not overpay for growth. If there might be these short-term demand supply imbalances, because as we've seen before, the winners are the ones that sell off first, but then can drag the market down, going back to your point about that passive concentration.
Do you find people have incidental overlap in like the ways they're exposed? If they've got different equity funds that, now I've got this as my top 5 holding in like 5 or 6 different funds, and I thought we're doing different things.
100%. Yeah, there's some research and some charts that are out there that just shows that inherently, majority of investors are overweighted to U.S. large cap growth, overweighted to large cap, forgetting about opportunities that exist in the mid and the small space, but also at the same point in time, when you think about the backdrop of this, of these policy pieces that still need to come together, this mosaic.
I don't even want to look at them calls.
The economy, good and bad, next year.
People
are talking about cyclicals sometimes. They're not looking at the trends of reinvestment that can happen in infrastructure, in industrial.
Kind of getting hyped up on that conversation with Jeff about how at every turn the economy has surprised. So then why wouldn't you put some more in that kind of economically sensitive part of your portfolio of the market?
Well, I think it's that push-pull between people investing in the things that they know and
I got a
they're
deal.
comfortable with, and they're looking at these momentum-based trends and saying, look, I don't see them breaking anytime soon, so let's continue on. But at the end of the day, the fact that there are so many different choices that are out there and working.
Is that a cursor to NVIDIA?
To help you kind of navigate through that. That's where you want to provide that structure, and it's not necessarily just coming back to always the things that work, because at the end of the day, when the uncertainty of some of these new policy decisions play out,
I feel like it's a 50-50 chance. With NVIDIA tonight.
and I think that's something that people need to hear, because the information flows just seems to be staying very concentrated to one theme, but there's a lot of other innovative trends that are happening in other areas of the economy outside of AI.
There's a lot of people I see here that are pitching small to mid cap funds as I think one solution to that. And then there's, I mean, look, it's a big RA conference, and so you get all kinds of different approaches, but the one I hear a lot about is part of this conversation, if you're super levered into it, NVIDIA by incident or growth by just the passive exposure you've had, is load up smaller cap companies.
With the fear of these,
well, I think in a
I'm wondering if the fear that they're trying to put in the market now is going to be a catalyst for this to go down. Because these guys said earlier, they said we were going to have a rally into the new year. Well, they're not talking it now. They were really talking it up before Trump got elected. but I ain't heard hardly any of them talk about it now. Last couple of 3 days.
Schwab Network, baby. I love bonds.
We have an opportunity.
Where do you think they fit in right now? Back to four, I mean, mid-fours for the 10s? Is that starting to get good for income?
I think we're going to have a slightly rising yield curve, a more traditional yield curve where you see a little bit of uptick in 5 and 7s. You don't want to go super long, I don't think, in this environment. But when you think about the economy, and I'm not just talking about next year, let's think about it 2 or 3 years from now, we're going to be in this slowing growth environment. There's even data that has come out recently from the International Monetary Fund that say, look, if policy goes to extreme on tariffs, that's going to cut global GDP by 0.5%.
Okay.
Growth slows, inflation comes down, rates come down. The Fed has given investors a 20-year gift where you do not have to go out very far in duration to see a 4 or a 5 handle still on fixed income. And also the other piece is people want to talk about treasuries, no offense, but let's talk about municipal bonds, right?
Now you're taking me back to my OG days as the bond buyer. Real quick, before we just collect that point, is there then sort of a cap on how high rates are going to go because of that? I mean, as you put it, kind of freebie income. Everybody was talking about the kind of T-bill chill trade when they were real juicy. But it seems like there's also you're arguing a strong utility to just capture income, belly of the curve, basically where we're at already. So that should kind of limit how hard bonds can sell off, I would think.
100%. And I think what I'm also trying to say is we've seen a knee-jerk reaction of the market trading on the potential changes in policy.
Okay.
That hasn't manifested.
Right.
The backdrop
that
fundamentally.
Full growth sort of.
Right. But there's enough positives that are out there that can be offset by some negatives where maybe we're not going to grow as much as everyone thinks. And maybe at the same point in time, it comes back to the fundamentals to say, okay, what's the consumer doing? What's earnings doing? What's the path of inflation? If that trajectory really hasn't changed, then take advantage of these yields, lock in a little bit, because I think over the next 2 to 3 years, the risk and reward is actually a lot higher for the bond investor than it has been over the last 3 years.
Hit me with the muni thought. Got about 45 seconds.
Real quick, munis, totally different supply-demand curve than treasuries. Yields that have been pretty stable, great financial resilience at state level, government levels. And if you can think about that your savings account that's fully taxable is going to be going down, while you go out about 2 or 3 years and getting 4 to 5, federally tax exempt, and if you buy a state issuance, you also get state income tax benefits depending on where you live. That could be a tax equivalent yield depending on your bracket of 6% or more.
God.
Are you willing to go?
Sit here and watch it.
Look, you always have to be selective. I would say national portfolio.
Now I wish I still had it.
More intermediate than short now, and I think in the next couple of years, the real returns will be rewarding.
Good stuff. Like it. Good variety of subject matter there. Appreciate it, Brian.
Thank you, Avi. Good to see you.
Brian Vendig, President, CIO, NJP. All right, we went from NVIDIA to munis. Love it. Absolutely love it. The market web.
4 times 10.
We got options. We're going to take a look.
400 times 10 is what? 1,000? 4,000?
Flipped green here. Russell making a little fight for it too. Nasdaq still down 0.5%.
Fudge.
Mr. Kevin Green joins us next. Be right back.
I had these at $1.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access, even when equities...
It's been more than that.
All on our award-winning Thinkorswim platforms. So no matter
5,000.
when you want to trade, Schwab has cutting-edge tools.
There's 6,000.
Education and insights.
There's 5,000 right there.
Specialists ready to help. However,
There's 6,000.
with a wider range of opportunities, you can trade brilliantly with Schwab.
Mannequin, take some profit.
Binge watch the market with the Schwab Network.
Profit.
Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all of your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Binge watch the market with the Schwab Network.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is,
darn.
or customized to align with
900,
all your
10 a grand,
Schwab investing themes.
$10,000 bucks.
Customizable themes, up to 25 stocks in just a few clicks.
Oh, shit.
Welcome back to Market on Close. Let's look at some options flows. Let's monitor the technicals. Kevin Green joins us for a look, dealer positioning and more. KG, all right, so we're down a little bit here, but obviously we've got a big one tonight. So how are you reading the intraday charts?
Yeah, you know, right now it does appear that we're trying to break a little bit higher here, Oliver, and I would suspect that we might see a little bit of a
Good job, mannequin.
the NVIDIA earnings as we start getting a little bit more bullish optimism when it comes to obviously that company in the semiconductor space.
Congrats.
as a whole. So you are seeing a little bit of a short covering event taking place. If I'm kind of looking at an area of resistance, not surprising, 59 is going to be the first thing that's on the radar going into the close here today. And we still have some other levels to the upside that we could potentially test. I mean, we only have around 27 minutes left to go, but it's not outside of the realm of possibility for us to actually break through 5,900 if we get enough enthusiasm and really try to touch 59.25. So I'm keeping that on the radar. What we do not want to see is actually a breakdown. So us hitting 5,900 and then reversing lower, starting to go back down to the 58.80 level. The options flow has been bearish to start these numbers off over the last couple of sessions, but you're starting to get short covering rallies kind of taking place. And if you're looking at this chart, I have it highlighted in purple lines on the bottom. You are making relative higher lows if you're looking at these sessions over the last couple of trading sessions here, and technically higher highs we have not broken down here. So consolidation is taking place. We're just looking for a breakout, and trying to break up through that gap to the upside I think would be favorable for market participants right now.
Yeah, I mean, it looks like we've kind of gotten just a little range bound, basically over the last 5 days. We had one rough session. We kind of pulled back off the top. That was kind of a gradual move. Then we had the big gap. It was basically when 59.50 broke, but since then we're kind of hugging 59 pretty clearly.
We're trying to. I mean, it's between 58.85 or 58.50. I'm sorry, and 5,900. It seems like we're ranging out within those bounds here. One thing that I am keeping on the radar though is the anchor VWAP. So when you're kind of looking at these down
Anchor VWAP. He's never mentioned that one.
Selling activity or volume hitting the downside, and then you're having these upside rallies, but they're not really on large volume, right? So you actually do have more of a negative skew when you're looking at the overall volume mix for the day, comparing that with prices. And if we kind of look at a longer term here, and we look at two different anchored VWAPs that I think is very, very important. It's really kind of focusing, it's going to be on the next chart, it's going to really kind of focus on what we saw from the lows of October and where we are actually seeing a bounce right now.
No, I didn't get that, Rich.
Also kind of looking at these relative lows that we saw.
I sold them way too soon. I got back in them, but I mean,
this year as well. So if you kind of
if I'd kept them at a buck,
average weighted price, you take the
I'd been 10 grand.
You have a whole bunch of trades, you have volumes that are associated with those price levels, and
for $1,000.
Kind of like a simple moving average, but you have a volume component to it. And
it'd have been 10 grand for 1,000 easily. But no, 700 for me. I just don't know why I'd keep doing that. I mean, damn. I'm thinking earning with a run like that, it's kind of telling me NVIDIA is going to have good earnings. At least I hope. Or I lose 400, but a couple hundred. They're at 1190 now, 1220. Yes, sir.
Yeah, it's basically adding the volume in those trades at those particular levels or those price points. So what that really does is just shows you where is the major positioning. If you're having, if you bought at those lows and you continue to kind of average all the way up, you have all of these individuals that are kind of trading, and then that average is basically being put into a price level. And that's so it's kind of important, especially if you're a dealer and you have a position that you have to unwind. You try to do it piecemeal instead of buying in major blocks, one particular price level or another. You kind of blend into your price. This is basically doing that, but for all of the trades that have taken place for the S&P 500, if you're looking at the SPY. So that's why it's kind of important. It just is able to highlight those individuals that are at those lows. Once it kind of hits that price point, that's their average price, that could be a trigger for them to sell if they actually break through it. And vice versa to the upside. It could also be an area of support where people kind of buy into the market. So that's why you keep it on the radar. Just another indicator, just like we would use CCI or even those gamma levels that we talk about on a day-by-day basis.
Cool, love it. Hey, give me a quick thought into the close, real short term here for the next half hour.
It's looking good. I mean, that's a nice little candle that we just had here, breaking above the 5,900 level. We're trading at around 5,912, Oliver. So remember, I kept it on the radar. My levels are, but my label is off. That label it should be at 5,900. That label should also be at 5,925. So my apologies there. So 5,920 to 5,925 is actually that target, and that's that green level to the upside. Let's see if we're going to hit that. That is a typo that's on the chart. So my apologies. But it looks like a ramp up once again. NVIDIA earnings, IV crush, risk-on sentiment kind of creeping back into the market in the close. Short covering opportunity. I mean, it's playing out.
Yeah, all right, let's see if we can close that gap. 59.50 down to 59.12-ish or so. So, all right, well, we're creeping our way there, kind of at the bottom end of that gap from last Thursday right now. Thanks, KG. Good perspective. Like the technicals, like the flows analysis. Coming back. Let's talk some crypto. Let's talk some Bitcoin. Prices are still climbing right now at 95, 1,010. And as stocks also firm up too, a little risk on, coming back in. Be right back. We're going to give you also a developing story in the retail side too, continuing to monitor earnings, ELF getting bombed. Be right back.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we?
No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how
Schwab.
you invest with Schwab.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
All right, let's talk some commodities. Let's look across the market. We talked the S&P, a little bit of a bounce there. Dan Deming joins me, managing partner at KKM Financial. Dan, dollar's up today. The Bitcoin's still on a rampage.
Sure is, Oliver. Yeah, pushing back up towards that 95,000 level, as you pointed out, 94.5 right now, or 94.6. You know, following the market up here this afternoon, which is interesting given the fact that, you know, we have seen Bitcoin decouple to some degree. But when you look at the price action today, pretty similar to the market action, particularly in the afternoon here, as we're seeing basically the equity markets getting back to unchanged, anticipating the NVIDIA earnings announcement. But volatility is still holding pretty firm here, Oliver. We're still seeing the VIX in that 17 handle. Again, that indicates that there's demand for at-the-money options, with the expectation that after the announcement from NVIDIA and coupled with the other geopolitical tensions, you know, we're still seeing demand for options, expecting that we're going to see some realized volatility going into tomorrow.
Yeah, it's fun that we now have ways to trade even more. With the IBIT options, you know, and anytime there's like a new way to access, you know, crypto and coins, it generally gets people jazzed up. So, I mean, the thing is, like, you've already got MicroStrategy now, which you can trade as like an extremely levered, like the highest beta version ever, you know, so.
Pretty much. Yeah, exactly, Oliver. Yeah, I mean, it just keeps feeding back into the system, right? Self-fulfilling in that respect. And, you know, you're seeing that unfold here, particularly in the Bitcoin area and some of the names associated with it. But it is really interesting that, you know, the markets have been able to find the stability here. Again, geopolitical tensions have certainly caused
Coke's
a
had a
little
good
bit of
sell-off.
hesitation. But all eyes will be on the announcement tonight. It's probably going to set the direction for the rest of the week as far as the entire market. Bit of a rotation today. As you pointed out, we're seeing a little bit more strength in the Dow, but that has underperformed the last couple of days. So again, it does feel like we are seeing a little bit of a rotation, but overall, the tech sector continues to lead here as we move into these earnings this afternoon.
We've got
big earnings.
Bonds pretty quiet. We talked earlier in the show a little bit about treasuries. They are off, but the 10-year is still below the recent highs. The dollar, though, really rocking, Dan. Tell me about the dollar here. We're pushing into 107 again, 106.6. It looked like maybe the dollar was ready to cool off, turn back around, especially because yields got stuck. Yields couldn't move any further. A lot of times that kind of says the dollar is going to be done too, but it's just it won't stop.
It's catching a bit again, and I think the anticipation is that the U.S. economy is going to continue to show some pretty decent strength here in the numbers that are coming out the next couple of days, Oliver, as well as, you know, the shifting dynamic from a global perspective. Inflation still remaining pretty hot in UK and Germany based on their data overnight. I think that's another factor as to why we're seeing yields holding up, and therefore that's helping to support the dollar as well. You look at the British pound relative to the rest of the FX quadrant, that's the one that's really hanging in there relative to the dollar because of the fact that we did see higher inflation prints there. But overall, yeah, we're seeing, again, the shifting dynamic of slowing activity in certain other parts of the globe where the U.S. continues to maintain activity, and that's supporting the dollar, supporting yields. And also, I want to point out, I want to end with natural gas. Moving higher here, breaking above $3 now, $3.21, up almost 7% today. Again, expectations for increased exports to Europe, as well as cooler temperatures here in the U.S.
All right, nice. Like that. Night gas at 7%. Is it snowing there in Chicago, Dan?
Not yet, Oliver. Not yet, but it's a little windy. It's cooling off.
Yeah. Well, I won't be there. Good luck, sir.
I know. You're going to miss the fun.
All right, appreciate it, Dan Dimon. Thank you. Managing partner, KKM Financial. Not bad timing to come out to the coast, out west of California when it's snowing in Chi-Town. Let's go to Jenny Horn. Not quite yet. We got another retailer getting hit. This one not on earnings, though, Jenny. Carson Block, Muddy Waters, short on ELF. Give me the takeaway here.
You know, the takeaway is not great because the more digging you do, it doesn't get any better, frankly. So we're going to get this short report from Muddy Waters' Carson Block, who's notorious for, looking at a lot of these companies with Chinese exposure and uncovering various fraud. They basically argue that ELF seems to sell product it does not have, using import data and referring to conversations that Block and his team had with ELF's global shipping partners. The report did allege that the company had materially overstated its revenue over the past 3 quarters, possibly by 135 to 190 million. It appears in their opinion that ELF began reporting these inflated revenues and profits. It reported inventory that also appears to be materially inflated as a result. Basically,
Golly,
to
SPX, $13.
So, I mean, again, this is really a short seller that goes
Oh,
after
NVIDIA.
companies with Chinese exposure. And they highlight that much of this company's inventory comes from China, which grew pretty substantially until they reported earnings in May when they believed this correlation broke. And the inventory build was seemingly due to these insufficient sales, not a change in buying practices. This also strongly, in their opinion, does indicate that ALF was deceiving its auditor at that point, if not earlier, which is a major red flag. So they have built up at least 4 new short positions over the last 12 months. I will say to the point, 80% of the company's supply chain is based in China. That's per ALF itself on the last earnings call. And we know that back in 2019, ALF did reach an agreement with the U.S. Department of the Treasury to pay nearly $1 million in fines related to apparent violations of their supply chain. So if you dig more, it doesn't exactly paint a promising picture, but as we know with these short reports, more details, commentary from ALF itself, I think is still hugely important here.
Yeah, noted. All right. Sounds like they think there's a lot of deep-seated issues. So the thing too already is that we've already seen how competitive and tough it is to make it
This gets
in
me.
the marketplace. So it's like every
Trump is not president yet, so we don't know if there's going to be higher tariffs or not. Correction to apparel stocks fall with higher tariffs set to come back. Article November 6th. They're not even here. I don't see the reasoning at all. I don't. I'm more concerned about a freaking war, getting nuked. I just have a big disagreement with the way they're doing this. They'll be wrong, just like they were wrong about the 6 rate cuts back in last December. They'll be wrong because it's not strategic. It's what they call it, the inflation. It was real inflation. They thought it wasn't going to be real. And this tariff's a big deal. I mean, they're making a big deal out of a molehill. $2,100 on them 5,900 calls. Jeez, I got them at $1. That's 20 grand. NVIDIA, really, I think we're going to have good earnings. At least that's what this is telling me. It's hard to say, but it's had such a good run. We're going to find out. I can't sell them after hours, so. Wow, it's $2,000 from $1. 2,500. Double top. Oh, I didn't look at a bigger picture here. Well, 8 more minutes. Man, I've been sleeping a lot better at night. I haven't slept well for years. I'm getting 5 or 6 hours straight sleep. And I think it has to do with the carnivore diet and less carbs. I mean, I'm really packing in some sleep. I just unbelievable. I wake up, what? I dream too at night. I have dreams. I dream every night. I can fabricate a dream before I go to bed, I could say, or something that happened big that day, like Stormy Daniels. And I wake up in the middle of the night and my underwear's wet. No. I can't believe she messaged me, friended me. I'm probably one of a million, though. A movie star. Trying to think of that other guy that the billionaire I spoke to. Oh, my watch stopped. Shit. There's another 700 right there on the 5,900. Just on that little bounce. Well, let me see what if it was little or not. No, it wasn't. Wow, that's a nice little pop right there. This has been a good trade all day today.
had in market, and then the last 2 months, you cut rates, yields go up. I feel like a good bit of people here have now looked at the bond side of the portfolio and they go, that's actually pretty juicy yield again. How much does that limit how far rates can sell off in price, go up in yield? If people are still hungry, go ahead and lock in 4.5 or so.
Yeah, I think it puts some sort of a cap up there. Yields can continue to drift higher. We don't have a firm forecast, but it could touch 5% if we're talking about the 10-year Treasury yield. But you make a really important point about demand, and we can compare and contrast the U.S. versus the global markets. It's a nice yield advantage that the U.S. offers. There's a lot of demand out there for anything with those high yields. Even though we're a little concerned about yields, they can go a little bit higher, and we've tweaked our guidance a little bit about maybe not extending duration too much. But at the end of the day, those yields are attractive. So when we talk with our clients here, with the advisors, what they're talking about with their clients, if you're looking for a 4.5%, 5%, if you want to take a little bit of risk, that's pretty attractive. And if that's going to help you reach your goals, then I wouldn't be afraid about considering some intermediate or long-term bonds.
The last point, I guess, on the kind of bond and the trade-off between us and the rest of the world is the worry about like the Japanese yen and the Bank of Japan like upstaging on the global currency route. I guess that blew over, right?
It did blow over. I feel like Jeff probably has more to offer there, but all calm for now. It definitely calmed down a little bit.
Yeah. There could be more to come. I mean, there's certainly still more tied to the yen carry trade. Interestingly, even in the futures market, we've seen a swing almost halfway as much as we were completely on the the bearish side on that yen trade. Markets have moved that much again, so they are vulnerable again to a swing back if we get a surprise from the BOJ in December.
Okay, I like that. Gotta keep us honest. I forget about the other central banks. Real quick, call another one. We had Jeff Cleveland at the top of the show. He brought up an interesting point, which is that they lay off a bunch of people from the government, which is what they say they're going to do, and then that reduces some of the debt, the deficit type overhang, the funding of the government. Do we lose term premium because of that? Do you buy that case at all?
Not really. When we look at the term premium, we think the risk is to the upside. Okay. And we think that could be a driver of potentially higher yields and a steeper yield curve. So we're worried that the term premium can go a little bit higher.
If they manage to cut like extreme costs, is it in theory, could it reduce term premium? But that also requires people to believe that actually deficit is the problem with yields going up to begin with.
Yeah, so a lot to unpack there. One, I think the idea of how much they can cut is a very open-ended question right now. So it's really tough to tell what they'll actually succeed in doing. Right. The whole debt and deficits, we look at this a lot. And what we tell our clients and any investors that we have...
Okay. Oh yeah, let's break it. Wanted to break it out. New video, break the triple top. Oh hi, let's bring the 1, 2, 3. Let's go Time to break it to the high. Break the 1, 2, 3. Let's not cry. We're gonna break to brand new high. 150. Let's break. Let's get it high. 1, 2, 3. Break. Yeah. I got a flag. Let it break. Oh Lord, 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 Lord. On a break. The video.
A risk on scenario here with NVIDIA. I think there was also a cause for some of the short selling, and this is exactly the close that you wanted to have right there pretty much at the open that we had for today. Now let's see if we're going to be able to break out tomorrow. I thought we were either going to break through that gap this morning and or break down. It seems like we still kind of want to play around with these current levels.
All right, so we're playing around with it, but at least right now it looks like Bulls have got some degree of maybe control, at least split, as we've now gone, what, like 3 days essentially back and forth. Caroline, we got a packed slate this afternoon, and I do think that this is the type of series of companies, Palo Alto, Snow, NVIDIA, this is the type of stuff that could really energize spirits.
Yep.
Yeah, I think that's the big question. Obviously, NVIDIA is the main event, but we've been seeing NVIDIA kind of perform quite differently than the overall sector. So the question is, can it kind of reinvigorate semiconductors and the overall AI trade? And, that's kind of TBD, but haven't seen anything cross the wires yet. I do see Palo Alto up a little bit, so I'm just seeing if anything's coming out there. But I think that both Snowflake and Palo Alto up pretty big this month, heading into the print. Palo Alto's up 8.5%, Snowflake up 12% this month. But Snowflake, of course, has the more disappointing chart. It's still down year to date.
Oh, it ain't up too much.
35% year to date. So I guess the bar might be a little bit lower there heading into.
It's down $20. This don't look good for NVIDIA.
For NVIDIA to kind of push everything higher.
Oh God.
Yeah. Obviously, it's the main event. Kind of it's like that Netflix special last week. We got other fighters on the card here. That could kind of steal some of the air, because Palo Alto has been in a really interesting spot. KG, CrowdStrike has been dominant in the industry, and folks are buying up CrowdStrike like a hand over fist since its breakdown. Palo Alto's been doing fine, but from what I understand, in fact, I was just last night talking with some software and tech specialists here, that it is like a real all-out competitive battle to get that incremental security dollar right now.
It is, and actually we are seeing the shares actually move to the downside here, Oliver, so we might be getting the numbers coming in. But I think right now when you're kind of looking at these stocks, it's a buying for basically competitive advantage.
I was looking at Coke today. Coca-Cola's had a heck of a sell-off.
Eyeballs are going to be for this report, their guidance moving forward, as well as their backlog, which is going to include new orders and then what they still have to deliver. That's going to be the number that I'm going to be focusing on for this print. But it does look like we do have the report out.
Yeah, $1.56 adjusted EPS. Street was looking for $1.48. Revenues seem to come in line, maybe a hair shy. The outlook does look to be okay. $225 billion, 2.25 on the upside for next quarter. Street was looking for 2.23 for the fiscal year. They're extending it a little bit, but not a lot, Caroline. It's basically a continuation of what they told us last time, with a little bit extra on top.
Yeah, it does look like a little bit of a revenue miss, though. I mean, it depends how far out in the terms of the decimal points you're looking, I suppose.
Yeah, to
But
get to the
just
100.
taking a look, I am seeing shares lower. I mean, I do think it's important to note, as I said, shares are up 8.5% this month, up about 32% year to date. So could be a bit disappointment if you look too past the decimal point. I'm just looking at some of the commentary because I believe you gave the guidance there. We're seeing a growing market realization that platformization is the game changer that will solve security and enable better AI outcomes. I expect this to be a multi-year trend for which we are best positioned to deliver to our customers. So sort of similar to what we heard from the company when it last reported. Also approved a 2-for-1 stock split I'm seeing across the wires. So in terms of the results, I would say earnings beat in line, and then in terms of the guidance that you offered, seems like it's not enough to at least impress investors right now based on what we're seeing in terms of the stock reaction.
This could be interesting. Looks like we might be getting a little financial engineering. 2-for-1 stock split. Palo Alto approves.
Uh-oh.
What do you think, Kevin Green? I mean, $400. I guess that makes sense. A little cheaper for us to trade.
Yeah, and sometimes we've actually seen a nice little boost for the stock after this is announced, even though it doesn't fundamentally change the company's financials. But it might be something that some shareholders might be looking for as far as their portfolio. The one thing that I'm looking at is the remaining performance obligations. That came in at 20% on a year-over-year basis. I believe that came in a little bit late. I think the street was looking for around 22%, if I'm not mistaken. So I think that's also kind of leading credence to that guidance moving forward. Maybe not as strong as what the market would have hoped. And then also that backlog or that ARPU number coming up a tad bit light, maybe another reason why we're seeing some selling when it comes to shares.
Okay. Yeah, it'll be interesting to see if they kind of get that split bid, though. That's kind of been like mean, kind of low bar, but I mean, it's happening with big companies too, I guess, so we'll see. Shares closed right below the high, so we're giving some back a little bit here, and it seems like it's an okay report. I think Snowflake maybe has a potential for a little bit more volatility as the company is going to give us numbers. 147 we're trading at right now. Snowflake's still operating at a big loss. We're in like a totally different category here when it comes to software. Still acting like it's a nascent business. I'm not sure how long Snowflake gets away with it, but I guess they really haven't gotten away with it. Stock's been
We'll see what happens tomorrow.
2.5 years. They lost $324 million, 98 cents per share. They're going to acquire a Datavolo, a data integration platform. Thing with Snow is that it seems like it's always been a story of potential, Carolina, and I'm not sure what the market loves about this. Anything stand out to you? Because they're still operating at a pretty big loss.
Operating at a loss, yes, but revenue came in quite a bit higher than expected. I think that the expectation was for around 898.8. And Snowflake actually posted revenue of $942.1 million. That represents 28% year-over-year growth. Product revenue for the quarter was $900.3 million. That represents about 29% year-over-year growth. Net retention rate was 127% as of the end of October. So the company says it now has 542 customers. So I think that the top line beat. Also, as you said, this is a name that hasn't been, in favor. If you take a look at the year-to-date chart, it's still deep in the red. So we are seeing a nice pop based on these results, despite the loss. I haven't seen the adjusted figure yet, but I think a top-line beat and some positive commentary could be what's sending shares higher right now.
Market also might like this acquisition, Datavolo. First time we're hearing about a private company, multimodal data pipelines for AI. Earlier this year, they had a $21 million injection of fundraising. Generally, it seems like it fits the bill for what the market wants to see. I think too private market, KG, sometimes the deals will cause the shares to come off, but if it's not a big financial